Welcome to the first trade on Yahoo Finance. I'm Alexis Christoforous.
And I'm Brian Sozzi. Stock futures have been all over the map this morning after Monday's epic rout.
Bottom line here, Americans are getting used to a new normal, and the market doesn't like it one bit. We'll look at how this is affecting everyone from Wall Street to Main Street.
But first, let's get a check of the futures here. Our Emily McCormick is live in the newsroom. Emily, it looks like another volatile morning on tap for investors, but we did get some retail sales data out this morning. How is the consumer holding up?
Well, Brian, retail sales were worse than expected for February. We actually posted an unexpected drop in that headline number. So we had retail sales month over month for February dropping 0.5%. That was versus a rise of 0.2% expected, and really almost completely reversing that gain of 0.6% posted in January. That decline was driven by gas station sales. Those were down 2.8% amid a broader drop in energy prices, and electronics and appliance store sales. Those are also down sharply, down 1.4%. When we strip away some of those more volatile categories, that's autos and gas, we still saw retail sales dropping 0.2% in February versus January. And in January, those had risen at 0.7% month over month. So even in the early days of the coronavirus outbreak in the U.S., we're starting to see a market impact on the consumer, which of course had been the growth driver for the U.S. economy. And I want to point out some spot instant reaction that we got from Nouriel Roubini, a prominent economist and NYU professor. He wrote in a tweet this morning, quote, "Given the lousy retail sales figures for February, it is now highly likely that U.S. growth in Q1 will be negative rather than positive. So the U.S. recession of 2020 will start in Q1 rather than in Q2. Exports, CapEx, and now consumption will be down in Q1. Recession is now a certainty." So some really bleak data that we have coming out of the U.S. economy this morning.
All right, Emily McCormick, thanks for the roundup. Let's take a look now at what is moving the European markets. Now, over there, we do see all three major indexes under pressure, just adding to yesterday's losses. Each of those major indexes off more than 1% right now. Yahoo Finance's Edmund Heafy is joining us from Ireland today. First off, happy St. Patrick's Day, Edmund. I know it's got to be bizarre over there with everything shut down, including the pubs. It looks like the UK government, meantime, will unveil more stimulus measures later today. What can you tell us?
Yes, Alexis, a very strange St. Patrick's Day here in Ireland. But yeah, over in the UK, there has been a kind of clarion call from business groups in the UK asking for further government support in the past 24 hours. Already today, we've seen home furnishings brand Laura Ashley collapse into administration. It blamed the disruption from coronavirus. UK Chancellor Rishi Sunak unveiled a huge £30 billion stimulus package last week, but it looks like he will unveil further support for UK businesses later today. Britain's Independent Business Office has said there is a very good argument in favour of the UK government acting as an insurer against coronavirus-related losses. But, Alexis, markets do not seem to be too optimistic. The FTSE 100 is down around 1.4% as we speak, and we're seeing starker declines of nearly 4% on the FTSE 250, which tracks mid-cap companies. The Pan-European Stock 600 index then, which lost around 5% yesterday, is down by around 1% across the continent, and stocks in France and Germany are down similarly. French President Emmanuel Macron repeatedly said last night in a televised address that his country was at war with coronavirus and asked citizens to severely restrict their movements for the next 50 days. We're waiting on news from a conference call of EU leaders later today. We could potentially see further stimulus measures from the EU too, which announced a 30-day travel ban to the Schengen area, which is the border grouping of EU countries. That is expected to be approved by those leaders today as well.
Yes, Esmond, that is some pretty tough talk from Macron. It will also be interesting, too, to see if the sell-off overseas sweeps back onto our shores today. Edmund Heafy, enjoy the day. Thanks so much.
Thanks, Brian.
Let's head down to the New York Stock Exchange and check in with Inez Ferre. Inez, that was a terrible close on Monday as President Trump spoke to reporters. What are you hearing this morning?
That's right. A terrible close-up, Brian. But we are taking a look at airlines because President Trump, when he spoke yesterday, he did say that that the government would be helping the airline industry, which has been battered because of the coronavirus. And you saw the airline stocks rally a bit there yesterday, a bit in the afternoon. Now, we know that the airlines are seeking about $50 billion in aid from the government. This would be in the form of grants, loans, and also tax relief. And this would be the biggest relief package for the airlines ever, and the first one since post 9/11. And the airlines are sounding the alarm of the damage, the financial damage here, with United sending a letter to Congress saying that the financial impact will be much worse than the aftermath of 9/11 for the airlines. I also want to mention Boeing, which yesterday was down 23%, around $130 per share. That's levels from 2016. Boeing is also seeking aid from the government for itself, for the suppliers, and also for the airlines. Recently, Boeing had announced that it's freezing hiring. They're trying to preserve cash and also drawing down that full $13.8 billion bank loan. In the meantime, Standard & Poor's downgraded Boeing's debt rating to BBB due to weaker cash flows. This is because, of course, of the grounding of the 737 MAX jet, but also because of the pressure in the airlines. This is expected to have order deferrals impact here, aircraft's orders that are being deferred. So this would put further pressure on Boeing's cash flows. Brian, Alexis.
All right, and as an unprecedented time for us all, and particularly the airline industry, want to check in now with Anjali Kemlani for the latest on the outbreak. And Anjali, we now have 7 California counties ordering residents to shelter in place. How soon before that becomes national?
Thanks, Alexis. Yeah, it seems like that's really the focus right now. We know that for the longest time, we've been looking at the federal level for guidance and for sort of instruction on how to do this. But at the state level, that's where the real power really is. And so we've seen not just in California, but also other states across the country really getting on board with this idea that we need to really enforce quarantining and really enforce, isolation rather, and make sure that people aren't congregating in public places. We know yesterday broad measures in terms of restricting access to bars and nightclubs and restaurants, as well as gyms. So really taking that one step further, it depends on really the local and state officials and what their thoughts are and how bad the outbreak is in the area. We know that, on the West Coast, California, Washington were really the clusters, and here on the East Coast, it's New York. So even at the press conference yesterday, Vice President Mike Pence did say that the guidance, really is that they want the state level. They're deferring to the state level, in fact. So that's where we will see any rollout, if any more.
And Anjali, there's also an evolution of some sorts in terms of recommendations. A couple days ago, you had folks saying limit group sizes to 50 people. Now we're seeing some limit that group size to 10 or even less.
Correct. That is coming from, a lot of researchers are looking at the curve right now, right? We've talked about that repeatedly, flattening the curve, which is supposed to really extend the period of time that this outbreak continues in the country, but it would help alleviate the burden on health facilities. So with that flatten the curve idea, the less interaction, the slower the spread. So that's where that number keeps coming down. And we know that, at the federal level, they did recommend the 10 or less. And meanwhile, at the state level, there are different numbers, whether it's in the hundreds or I think 50 was the last one.
And I understand that Regeneron has moved up its timeline to test a potential coronavirus treatment. We've actually seen that stock hold up quite nicely amidst all the sell-off. What's the latest?
That's correct. They did say this morning that they're looking to start clinical trials, so it's human trials by the summer. Not too far off, really, from what we've heard. That has been the general timeline since the beginning to match that one and a half year timeline for a vaccine. We know that Moderna is already ahead of the game, really, with theirs already in clinical trials right now over in Washington. So we're going to keep hearing news about this as the companies who have dedicated their time to looking for a vaccine come clear. They're going to be talking about summer trials, and then we still have another year after that to really look for the vaccine to hit the market.
Anjali Kemlani, thank you. Let's bring in a doctor on the front line of the fight against coronavirus. Dr. Samson Davis is an emergency room physician and the author of Living and Dying in Brick City. Dr. Davis, good to see you here. Very curious what you're seeing on the front lines right now.
Yeah, well, I think right now the country as a whole, we're very timid. Everyone is pretty nervous, and I want to do our part to calm the masses and realize that this is something that, as a society, we're trying to get ahead of. We're seeing patients present just for coronavirus testing. We're not at that point yet. I can't. Hopefully, we will, and I'm sure we will eventually get to that point. But the common symptoms was fever, cough, body aches, muscle aches, fatigue. So we're doing testing in the emergency department. I'm seeing about 20 to 25 patients a day being tested. So far at my hospital, we've had 2 confirmed positive cases.
Doctor, what happens when you get a positive case and there was a healthcare worker or nurse or someone else within the hospital dealing with that particular patient? Is that person then needing to be quarantined, actually meaning that you have even less hands to help on the front lines there in the hospital?
So to answer your question, yes, if we have a positive case, we do contact all the healthcare workers that were involved, the nurses, the doctors, the techs, registration, any healthcare worker that was involved. We document if they have symptoms. But what we're also moving towards now is taking precautions ourselves. So we're making sure that we have the mask, that we've gowned, and that we've gloved. We're also circumventing patients that present with symptoms so that they're placed in negative pressure rooms where the spread of the virus won't necessarily occur because of the negative pressure. We're doing our best to make sure that we isolate and have a room that's only for itself, that's away from the department, so that that person, that patient that does present can be seen, treated, and discharged right away. Our goal is to have a 5-minute interaction from the time we see to the time we take or collect the test to the time that we discharge, so within 5 minutes. So that span of time minimize the exposure of that patient with the staff as well as with other patients within the department. We also have stopped performing aerolized treatments, nebulized treatments for asthma or emphysema patients, because we've also discovered that that helps to sort of spread and project the virus as well.
Doctor, are you getting the testing equipment you need right now?
That's a good question. We're not quite there yet. No, we do have a good supply, but it's day by day as far as the supply we have. We do not have an endless supply. And again, we're not at the place where we're just randomly testing individuals. Eventually, I believe we will get there. That will happen. But now we're still at the point where the symptoms, if they're matched, then you are tested. You are given information, discharge information about quarantining yourself, your family members for 14 days. Depending on the time of symptoms, if you're at day 4 or 5 of presentation, then you have to quarantine yourself for 10 more days, unless we receive the testing results, which right now we're getting down to having the test results back within 48 hours. We're still at 72 hours for the most part, but from the time of testing to when it's sent to the lab is at 72 hours. We're getting to the place where we're going to have it at 24 to 48 hours. Now, if we receive a negative result within that period of time, then we notify the patient that he or she does no longer need to be quarantined, as well as her family.
And Doctor, are you able to address other issues? I mean, not everyone is coming in with coronavirus, thankfully, or thinking that they have it. People are coming in there with other issues, maybe broken limbs. How are you having the resources to deal with issues outside of the virus right now?
Yeah, we're maintaining. Obviously, we're a bit understaffed, and then there's been some healthcare workers who have been impacted and unfortunately have lost their lives from the coronavirus. We are on the front lines, and we're doing our best to maintain. With us putting together these algorithms and our sort of mode of approach for treating and diagnosing coronavirus, we have been able to really structure the department in a way that other patients who are presenting with, as you mentioned, a leg injury or a broken bone or a heart attack, stroke, we're still seeing these patients and we're still taking care of them in an efficient and effective way. I also do want to note that every patient that presents with fever, cough, and body aches, I had one this morning, and it turned out that the patient also had a sore throat, and the test for strep came back positive. So it's just because it's same symptoms, that's what makes it somewhat difficult. It still could be pharyngitis or strep. It still can be an ear infection. It could be pneumonia. It could be just the flu or just a simple regular viral illness.
Yeah, very hard because it's so similar to other things that we're experiencing. And doctor, before we let you go, what city are you in right now?
I work at a few different hospitals. I work in New Jersey, but I'm in Paramus right now. I also work at East Orange as well.
All right. Well, do stay safe, and thanks for making time for us, Dr. Sampson Davis.
Of course. Thank you.
Coming up, we're going to talk about the economy in this low interest rate environment. What does it mean for us all? Coming up next on The First Trade. Here's an eerie sight for you. That is Times Square here in New York City, usually bustling at rush hour at this time of the morning. On this rainy Tuesday, we have got it looking like a ghost town, right, Brian?
That Gap store is never busy, but irrespective of that, it's very quiet there right now.
Yeah, it is definitely odd to see. And there were lots of taxis out there today that were free, but not much else. All right. Treasury yields remain near record lows, with the 10-year holding steady near 0.7%. Zack Griffiths is a rate strategist at Wells Fargo. He is joining us now. Thank you so much for being with us today. Should we expect rates to go even further? I mean, we've got the 10-year yield at 0.7%. How much lower are we going to go, do you think?
So we think the 10-year yield will actually rise a bit from here. We target around 0.8% over the next month or so, and we really look for the curve to steepen just a bit, with the front end remaining anchored by Fed policy that is extremely easy right now, and we expect it to remain that way for quite a long time at this point.
Zach, I'm getting worried about the stresses I'm starting to see and hear about in the commercial paper market. What are you seeing? What are you hearing?
Yeah, we're definitely seeing stress there, and that is a bit concerning in the way that it impacts other funding markets in the front end, and you're definitely seeing a widespread of funding stress. So we think that's something that the Fed may be looking at to address. Back in 2008, they did a commercial paper purchase facility. We didn't hear anything about that with the measures announced Sunday night, so maybe it's not at the top of the Fed's mind, but as they see some of the measures they've taken not really addressing all of the issues in the market, maybe that leads them to think down that road at this point.
So then what more could and should the Fed be doing right now to relieve pressure there?
I do think the commercial paper facility is something they should take a look at and could be effective. Outside of that, they've really done as much as they can do with some of these measures with repo, with asset purchases. And I think the key thing with these asset purchases they're doing is they've left themselves a lot of room to be nimble. They're announcing purchases for the next day at 4:30 the prior day. So if they're seeing the amount they're doing not being effective enough, then they can adjust the amount and do more the next day. And I think that's really the point, and the key takeaway is that they know these are very volatile times, and they're going to do what they need to do to address it and change their thinking on a daily basis as necessary.
Zach, are you in that camp where the thinking is the Fed is out of bullets and they can't do anything more, and that's part of what has caused the steep market sell-off, especially yesterday?
I don't think they're completely out of bullets. I think it's probably a little bit disappointing to see how the market responded to this initial very sizable move, but there's always more they can do with asset purchases. Again, going back to that commercial paper facility, that's something they can look at. So I don't think they're completely out, but to see the market respond that way to such a large move is probably a bit disheartening. But we think these measures are going to take some time to really have the desired impact, and we're starting to see a little bit of that this morning.
Zach, Jerome Powell has downplayed any interest in having negative rates. Do you think that should be the next action?
We do not think negative rates make sense, and we don't expect them to do that. They've been very adamant about the fact they've looked at negative rates during the financial crisis, and they've, I suppose, considered them or potentially have come back up in conversations with what's going on with the coronavirus, but they've been very clear that that is not a policy measure they expect to take, and we don't expect them or think they should do that either.
And Zack, with rates back near zero, what are the implications for the currency markets and for the U.S. dollar in particular?
So given all these different measures, we think that there could be some short-term weakness in the U.S. dollar, but we do expect it to remain pretty constructive over the longer term or even the medium term, as the risk-off sentiment should drive demand for dollars.
All right, we'll leave it there. Zack Griffiths, I know it's been a busy week for you. We frequently exchange emails. Always appreciate the insights.
Thank you.
We will continue to hit these markets hard with analysis coming up on The First Trade.
Welcome back. And here is a look at futures this morning. As you can see, a real bouncy ride. We were higher, then we fell at around 5:30 this morning. We're back up again, modestly higher. Of course, all of this coming one day after the market experienced its worst percentage drop since the 1987 stock market crash. Right now, we've got Dow futures up about 1/3%. Same for the S&P, and NASDAQ futures gaining about 1%. We'll be right back with much more, including the opening bell coming up. Welcome back to the first trade. We're about 5 minutes away from the opening bell. Stock futures have been all over the map this morning. They are higher right now by about 1%. Let's go around the bell with Emily Rowland, co-chief investment strategist at John Hancock Investment Management, Mike Bailey, director of research at FBB Capital, plus Yahoo Finance's editor-in-chief Andy Serwer, and Jared Blickery at the Wi-Fi Interactive Board. Good morning to you all, and thanks for making time to join us. Emily, I'm going to start with you. What do you make of this morning's action one day after the Dow's biggest percentage drop in decades since 1987? What's causing this slight momentum to the upside?
Yeah, I think investors are still in a little bit of state of a shock after yesterday's historic decline, and markets are taking a little bit of a breather here as we wait for signs of fiscal stimulus to kick in. Clearly, monetary policy is doing its job with central bankers, including the Fed, kind of firing bazookas all over the place here in terms of providing liquidity and preventing a solvency issue here. Really now it's up to policymakers to put together this fiscal stimulus package, and I think markets are hopeful that that's going to happen in the days to come.
Mike, what actions are you taking this morning after that absolute drubbing in the markets yesterday?
Yeah, so today we are holding tight. We did take some action yesterday as we've been evaluating kind of our holdings. On the way down here, we've been looking for a couple things. We've been looking for stocks, whether we thought they might be overvalued, either in or out of this crisis. We've been exiting some of those names. And frankly, we've been looking at U.S. versus international. So yesterday, we did actually exit all of our international equities. We felt that we weren't being paid for the risk. We frankly saw investors pricing in the same risk for U.S. versus international equities. So we did decide to take those off the table. At this point, we are holding tight. We're going to see where the dust is settling. It does seem like markets are having a little bit of a breather today, but we're evaluating our next moves at this point.
And Andy, what, if anything, is a magic bullet for this market right now? Because Emily just talked about, the Senate taking up this bill, this stimulus relief fiscal bill that we're hoping for. But we know that the markets wanted the Fed to be very aggressive. They have been, and they have not responded in kind. So what's it going to take? Is there a magic bullet to make the market turn around at this point?
Well, I don't think there's any kind of magic bullet, Alexis, but I think this stimulus package, fiscal policy is what we've been talking about for days and weeks now. We're finally starting to see that happen. And I think that's good news. And I don't know if the market's responding this morning because of that, but it's certainly not hurting matters. The question is it big enough? I mean, $850 billion sounds like a lot of money. It's essentially the same as TARP was in 2008 if you adjust for inflation. So, it remains to be seen. Now, I think that if we see sort of a steady drumbeat coming out of Washington and Congress in terms of fiscal policy, I think that'll go a long way. But, of course, then we still have the healthcare crisis, which is the main event. And if that continues to deteriorate and affect the economy, that's not good news.
Emily, Mike has rotated into U.S. equities. Do you agree with that? Is that the place to go? I have to tell you, last night we had a major warning from a Nordstrom. Totally pulled its guidance outlook for the year. You look at Microsoft. Microsoft had just met with Deutsche Bank yesterday or talked with them. They can't estimate the impact of the coronavirus. Where do you go?
Yeah, it's definitely been a sell everything type of environment, and nothing's doing well. We have been overweight U.S. versus non-U.S. equities for much of this cycle. The U.S. tends to be a lower beta, higher quality market. We've embraced areas like technology and communication services for that reason. We are staying pat with those views. We are not changing it. I think notching up on quality still makes a lot of sense in this market. And at some point, we're going to look back and find that there have been opportunities that have opened up because of this indiscriminate selling. You look at the forward PE on the S&P 500. As of this morning, it was at 13.6 times forward earnings. It's extremely cheap compared to the 5 and 10-year averages. So we will look back and see that lower prices ultimately will translate into higher returns. It's just a little bit tough to stomach right now. And certainly I would be staying away from the most highly cyclical parts of the market, which would include international and emerging market equities.
Jared, over to you at the Wi-Fi Interactive Board.
Yeah, kind of a mixed picture here. Not too much movement, except in a few places. In Australia, all ordinary is up about 5.5%. Mixed picture in Asia, the Kospi is down 2.5%. Tokyo is basically unchanged. And in Europe, the DAX and the CAC 40, the FTSE, all underwater right now, but just about under 1%.
And here we have the opening bell at the New York Stock Exchange and the NASDAQ. I'll be curious to see how this market plays out today. We know that futures have been up and down and sort of everywhere seesawing throughout the morning. And we just have employees of both of those exchanges ringing the opening bells now because of our new normal of social distancing. The Dow Jones Industrial Average going to start the day up 373 points. Emily, as counterintuitive as it may feel right now and as it may seem, you say dollar cost averaging really makes sense in this environment?
Yeah, I mean, I think the key question that keeps coming up is, when do you buy the dip? And I think going all in terms of trying to pinpoint that exact bottom, I think is a futile effort. So we've been suggesting that investors dollar cost average into this market. One way to kind of think about this is just to look at how much further downside we could potentially have. And if you look at bear markets historically, the average decline is about 35% going back the last 70 years or so. We're at about 29% right now in terms of the peak to trough decline, so that February 19th high until today. So we could have another, 5 to 10% downside here, but typically, we know that markets eventually recover, and that normal peak to trough, back to peak kind of journey usually takes about 4 years. But because this decline was so fast, we expect that the recovery could also be fast, especially if you compare this to 1987, when the entire journey took only 2 years. In our view, that was another quote unquote exogenous shock, just like coronavirus is today.
Mike, I have gotten 2 notes in my email inbox over the past 48 hours with the word D, depression. Do you think we are entering some form of mini depression? You take a step back, the U.S. economy has pretty much shut down.
Yeah, I don't think I would be calling this a depression or even a mini depression. I think it's certainly scary. There's a lot of uncertainty right now. But I think this is probably going to be a run-of-the-mill average recession. It doesn't, again, feel like it at the moment, but I think you've got a slowdown on supply chains. You've got demand kind of crimped right now. I think the key question is there going to be a change in buyer behavior? Are you going to come out of this thing in 6 months? Are people still going to be going to the store, still buying the same amount and frequency of products? If you think the answer is yes, and I think basically all the pieces of the economy are really going to come back, and you are going to see this normalize, you're going to go back to 2019 levels. Going back to Emily's comment, this could take some time, but I do think we're unlikely to see major changes in the way people act in terms of buying and selling. So we do think it comes back.
Mike, to play devil's advocate, a lot of people are going to be losing their jobs. We just don't understand the breadth of this quite yet. But, when we come out the other side of this, are people going to actually have the money to go out and spend and snap this economy back in a big way?
Great question. So things may be a little bit tight on the front end, and that's how all this is going to unwind. You are going to see some folks out of work. You're going to see jobless claims move up, that sort of thing. But eventually, if people want to purchase products, you're going to see suppliers make those products. You're going to see those buyers come back. So it may take a little bit of time, but I do think human behavior that we're seeing at those patterns, I really don't see a major break in that. But it may take some time for all the hiring to ramp back up, all the production. But we do see that normalizing.
Emily, you mentioned the market is trading on a 13p. That is a remarkable compression relative to the highs. Do you get the sense when we get that big fiscal package, we know it's coming, do you back up the truck?
I don't think that'll be enough. I think a lot remains to be seen in terms of how much of an economic impact these containment efforts have. And I think your question was right about, the jobs market. We think that that's the absolute most critical piece of this. And coming into this, we have to remember that the U.S. jobs market was the rock of an otherwise fairly shaky economy here in the U.S. So, you look at initial jobless claims last week, they actually surprised, they fell. Certainly that data is going to get worse. And if we see a meaningful impact to employment here in the U.S., that could cause the recession to be potentially deeper than a lot of analysts are expecting right now.
Yeah, and I'm actually seeing some estimates saying that the next jobs report could show a loss of 1 million jobs in just 1 month, as insane as that sounds. So, Andy, let's talk for a moment about confidence, consumer confidence, which has been the bedrock of our economy as of late. We've got this new poll out, a Wall Street Journal NBC poll that shows most Americans are actually confident in their state government at this point. 75% are. Only half are actually confident in what President Trump is doing. 62% are confident in the federal government, 72% in local. So again, most folks are throwing their confidence behind their state government right now. What does that tell you about the fragile state of confidence in this country?
Well, in a way, it's sort of typical, though, isn't it, Alexis? I mean, you always hear people saying, like, I hate Congress, but my congressman, he's actually a pretty good guy. I mean, so that's sort of an old saw when it comes to the United States and how we feel about politicians in the political process. I think we're going to get through this, and I think that, you know, there's going to be actually a lot of things that we'll take away from this and say, well, we really did all pull together. And I know that sounds Pollyannish, but you know, it will happen. I mean, there'll be some bad moments where there's going to be a fight in front of a Costco or something like that, for sure. But, you know, overall, I think people are going to rally around each other. And then one thing to remember that's very important is that this is going to be very different in different parts of the country. I believe that West Virginia still does not have a case. Obviously, rural areas will be much less impacted, cities much more impacted. And so that's going to maybe, you know, have a big impact on the way that we respond as well. A couple other just quick points with regard to the PE. I'd be a little wary of that right now because the E might have not been adjusted yet. I mean, we have to make sure the earnings are going to come through, and we know that's going to change a lot. And then I think that everyone's sort of accepted the fact that we're going to be hitting a recession. I mean, there's a very strong likelihood, Morgan Stanley saying this morning, that is a baseline assumption for them going forward.
Mike, Andy brought up a great point on a PE of 13 that may not be so cheap. I've seen earnings estimates for the S&P 500 essentially be cut in half. Do you think that's enough?
Let's see. So I don't know if I would be cutting estimates in half. I mean, if you're looking at earnings declining 50%, that seems pretty draconian. You go back to 08, 09, I think earnings estimates came down 30, 40%. That certainly is possible. So that's something we're looking at to kind of look at things a little bit differently. So at the moment, we frankly don't trust any earnings estimates. We don't really trust economic data, frankly. It's late and it's backward looking. So primarily, we are really just looking at price action. We're looking at that as an indicator. What is the buy side? What are investors telling us about their fears of the economy? So again, going back to your other guess with the market down, you know, close to 30%, that's telling us investors expect a recession. So let's go ahead and bake that in and then start to back into other options of what's going on in terms of markets. So again, we are keeping an eye there. We're also looking at the VIX. We think that's certainly something relevant. We would like to see a little bit of a deceleration there in the VIX before we get more excited about putting money back to work in the market.
And Jared, you have a look at the NASDAQ, which is up now about 1 1/3%. What's moving it?
Yeah, we have, so the big tech names were heavily in the green here, but we got a little red here. Alphabet and Facebook slipping into the red. Apple's up nearly 1%. Amazon's up 2.6%. Amazon has been outperforming the last week or so. And if we sort by performance, we can see the names at the top. Regeneron, that's been one of the leaders over the last month. Electronic Arts, and then we got some, kind of a mix of names. There's really not a rhyme or reason, I would say, to what's going on here. Ulta Beauty and Wynn are the biggest losers, as well as Tesla, all off more than 3%. If we look at the sectors that are leading today, utilities, staples, and healthcare and real estate all outperforming. We do have the 10-year T-note yield down again. To the downside, only energy is in the red, followed by materials and financials. Financials had been outperforming in the early going here, but we don't want to ascribe too much meaning to these movements. I mean, with the Dow up basically 1.2 points or 250 points, the average over the last 12 days has been about 6%. So we got to take all of this with a grain of salt. And I just want to hit one more thing, is the U.S. dollar, because that was screaming higher all night, up 1.5%. That's a big move for the U.S. dollar, and that's one of the principal movers right now as the entire world is scrambling to get a hold of dollars.
Emily, curious on just your or the human perspective. When you see a session like you did yesterday, have you lived through that? Have you managed money during that experience? Just curious on what you do in that type of trading environment.
Yeah, I'm actually maybe older than I look. Only kidding. I was around in 2008, and you know, there's a lot of comparisons being made to that today. But the difference now is just how precipitous the decline has been. If you look at what happened in 08, it took a long time to kind of, you know, have this drawdown play out, to understand what the impact of this was to the banks and the financial system. This has really been a shock, both on the demand and the supply side. So I've certainly never witnessed anything that's happened this quickly. And I think investor nerves are jittery. People are trying to understand what to do. And we need to continue to remind them that although this feels painful, this too shall pass.
I know, we all keep telling ourselves that, Emily. Mike, what do you do with the airlines? I just took a quick check, and all the major airlines still much lower on Wall Street. They're asking for the government to give them $50 billion, in essence, another bailout. And now the government is actually saying, if we give you this money, you better be nice to consumers. You better give us something on the back end and be lenient with fees and all that good stuff. But what do you do as an investor with airline stocks right now? I'm going to give you two scenarios. You're an investor who's already in airlines. What do you do with them? Or you're an investor with no airline holdings, and you're thinking, is now the time to get in here? Is there some value for me?
Absolutely. So, a couple different scenarios there, and it's a great question. And I think, looking at this particular group, this is frankly the tip of the spear. I mean, this is really the group that's just taking it on the chin here. So if you currently own airlines, I think the question is, what was your investment thesis going into this correction? Did you have a view? Do you think this is a business you want to own long term? If you do want to own it, if you've owned it for some while, you understand the business lines, you probably hold on to it. If we're looking at a bailout, most likely some of the businesses are going to come back. Maybe stick with some of the higher quality airlines that are out there. So that's something I would probably do. The main thing is I wouldn't make any major change. Doing a massive sale all at one point, it's probably the worst thing to do. Now let's twist it around a little bit. Let's say that you've never owned an airline. Maybe you don't even understand the business that well, but you're seeing the industry blown up. You're seeing the government possibly bailing it out. What do? I would be fairly cautious. I would reflect back. What's your investment policy statement? What's your goal? Are you just a regular 60-40 investor? Are you already invested do you have a diversified portfolio? If so, and if you're missing airlines, and if you want to own a little bit of high risk return, maybe you tiptoe into it. But I would be pretty cautious here. And again, I would really look across the rest of the market, make sure you're diversified, some defensive, some low risk, maybe some healthcare, utilities, et cetera, before you start adding to airlines at this point.
All right, let's leave it there. Emily Rowland, Mike Bailey, Andy Surer, and Jared Blickery, thank you so much for the insights.
Thank you.
Thank you.
Let's head down to the New York Stock Exchange now and check in with Inez Ferre. Inez?
And Brian, we're looking at the sectors which are the most defensive sectors, which are outperforming this morning. We're losing some steam here, though, in that rebound that we saw when we first opened. Right now, you're looking at the Dow that's up just 88 points. The S&P's up 24 points. And take a look at Uber. Uber at new lows, trading below $19 a share. Uber says that it's suspending Uber Pool in the U.S. and also in Canada to stop the spread, of course, of the coronavirus. It will take similar steps in other countries on a case-by-case basis if necessary. Also, their regular rides and Uber Eats are still, though, available. And then just taking a look at Starbucks. Starbucks had recently announced that it was going into a to-go model temporarily, just not having people sitting in their cafes. And Dunkin' Brands came out with a statement saying that they're reducing their hours. They're having limited drive-through hours, and also all their seating in their restaurants removed. We have several states that have announced that restaurants can only do to-go, only delivery. So these companies taking proactive steps in the U.S. to make sure that people aren't seating in their restaurants, that they can only take to-go, only drive-through. By the way, yesterday, Dunkin' Brands got totally hammered, down 17% yesterday. Today, slightly under pressure. Brian, Alexis?
Yeah, again, we keep talking about that new normal with all these retail names that we know and use every day. They're changing their business model, at least temporarily. Inez, thank you very much. The coronavirus is having an impact on advertising dollars. You might not have thought about it, but it's true. And caution over the disease caused officials in Ohio to postpone its primary. We're going to dig into what that means for voters right after this.
As the coronavirus continues to impact movies, TV, and sports, what impact is that having on the advertising industry? Ad Age reporter Janine Poggi joined us now on the phone with those details. Janine, good to talk with you here. So take us inside a little bit here. How big are these cutbacks for the ad industry looking like?
Yeah, you know, it's so interesting at this time to even be talking about advertising in the face of this pandemic, but it's a really important business, and a business that's going to be heavily impacted in all of this. If you take a look at some of the categories that naturally would be impacted, retail, which is closing so many stores right now, movie theaters that are pushing films back, and other places like that where the ad dollars are just not going to be there because they're struggling, these companies. So it's a really critical time, and it comes at a time where the biggest TV networks and digital publishers are going into the upfront season where they look to sell their commercial time for the new season. And it seems like, at least right now, how business will take place is the biggest question.
Janine, I'm wondering about sports, right? Because advertising plays a huge part in sports. Sports as we know it at a standstill right now. A lot of that money has already been committed on the part of these companies that bought advertising to appear on these different various sports. What happens to that money? Because the companies, of course, want to be able to book the revenue, but if your ad isn't getting out there, what do they do with the money?
Of course, I think a perfect example is the NCAA. That money, a lot of it, unfortunately, won't find a home someplace else. A lot of advertisers go to these events very specifically to reach a very specific audience, and it's not as easy as just taking that money and shifting it elsewhere. You're going to see some of that money simply come out of the marketplace because there isn't another place to put it right now, especially when you talk about live sports. And, of course, the thing that we're all watching very closely is the Olympics. And if, the Olympics will actually go on as planned, and if they don't, that is a whole lot of ad dollars that will need to either find another home or be lost from the marketplace.
Janine, how bad could this get for some interactive players? I look at a Facebook, a Snapchat, Instagram, all those companies. Those ad dollars could be pulled back not only sharply, but very quickly in real time.
So I actually think that the digital players perhaps might be have a little bit more cushion. I do think that, there are still brands that are going to be needing to advertise somewhere, right? There are still things, especially if you look at the streaming TV category, the things like the Disney Pluses of the world, the Netflixes, the Hulus. Those are places that actually during this time, if you're looking for a winner, that would be the category that will continue to advertise both in TV and in digital. So I think that's one area that might help boost some advertising. And then also takeout restaurants and delivery might be another place where you'll see some money flowing back in. I do think the Facebooks of the world are going to try to be taking as many dollars that are coming out of things like the NCAA and live sporting events and asking advertisers, hey, come to us and at least test to show you that we can deliver that audience. Whether or not they can is a different story, but I think that they will be trying to get some of those dollars.
Who knows? We might start seeing ads on Netflix. They might just have to start partaking in all this. Janine Poggi of Ad Age, thanks so much for being with us. All right, let's check in once again with Jared Blickery, who is manning the Wi-Fi Interactive Board for a closer look at stock action this morning. Jared?
Yeah, we're looking at the Dow here, which just turned negative again, down 17 points, barely unchanged. S&P 500 is still up about 78 basis points. Let's take a look at the intraday price action. You can see we gapped up just a little bit, came down to just about the unchanged line where the Dow turned negative, and now we're just kind of treading water around there. Got to take a look at the VIX because this set a new post-Great Financial Crisis high. It's trading at 80 right now. We can see over the last 2 days it's been extremely elevated. And then looking at the 10-year T-note yield, this is up 7 basis points, and that's after that steep decline yesterday. And then we're going to take a look at the U.S. dollar, and here's what's happened with the U.S. dollar over the last 10 days. It's been on a tear. The entire world is trying to get a hold of U.S. dollars right now, and that's accounting for a lot of the disruption in the financial markets. And now let's take a look at one of our heat maps. This is going to be the NASDAQ 100, kind of a mixed picture overall. A lot of companies here. But I want to tell you, the Federal Reserve just came out. They're bringing back a facility for commercial paper to lend to businesses that they haven't had since about 2010, instituted after Lehman. We're going to be talking about that a lot today.
The Fed crisis-era playbook is now officially in full effect.
Yep.
Jared Blickery, thank you. Ohio Governor Mike DeWine said the state's primary polls will be ordered closed due to the coronavirus outbreak. Senior columnist Rick Newman joins us now at the latest. Rick, DeWine is getting some praise here for just telling people don't go outside.
It makes sense. I mean, obviously it's a lot of people gathered in one place, and you have to worry not just about voters who might duck in for 5 or 10 minutes, but obviously the workers who would be there, for several hours or maybe all day. And many people who volunteer to help at elections, of course, are older Americans, sometimes retired people. So it seems like the right thing to do. There's an interesting backdrop here, which is that states that have implemented early mail-in voting seem to be in much better shape. So Washington State, for instance, that primary happened, I think that was last week, and that was entirely a mail-in primary. And in Florida, for example, which also has an election scheduled today, they also have a mail-in voting. Now, people have the option of showing up at the polls or sending in a ballot by mail. So some people will show up, but what the authorities there are saying, look, we think so many people will have mailed in their ballots that we're not going to have huge crowds. It's going to be more limited than what we might have seen in past elections.
Okay, so having said that, Rick, what about future primaries? I mean, are they sort of up on the whole mail-in your vote idea, or, are we going to have to see a lot of these primaries get pushed back?
It's a real tough call, because if you push back the primary, this has to be finished by summer. And if you push back the primary by a couple of months, say, you're betting that this situation is going to be better in a couple of months than it is right now. And I'm not sure that's really the case. So I guess there's some states could say, can we implement mail balloting in time to have it in place in a couple of months? I think that would be really hard to do if you don't already have that underway. So this is going to be a scramble.
I have to think that coronavirus is actually going to change the way we vote going forward, right? I mean, this pandemic is actually having these states look at how they handle voting in a very different way.
Yeah, and it also comes after that debacle in Iowa that one might hope would kill caucuses for good. So maybe the Iowa debacle combined with what we're seeing now will lead to some voting reforms. Remember, this happens at the state level, not the federal level. And states can move fairly quickly and make some changes.
Yeah, they are more nimble than the federal level, that's for sure. Okay, Rick Newman, thank you. And coming up, we're going to get a check-in of the New York Stock Exchange action right after this. Stay with us. Let's get right to Inez Ferre down at the floor of the New York Stock Exchange on a way that Facebook is actually going to help small businesses through all this. Inez?
Yeah, Alexis, that's right. Facebook helping small businesses with a $100 million program to help these businesses that have been impacted by the coronavirus. This will be in the form of some cash grants and also some ad credits. This is for up to 30,000 small businesses worldwide, really, in more than 30 countries. We're also taking a look today at Canopy Growth. This is after the company said that it's planning to close all of its 23 corporate-owned retail stores, but it will continue to provide medical cannabis through its online platform. And then just taking a look at Dow component, McDonald's under pressure. This is after McDonald's said that it may offer some rent deferrals to some franchises. The financial impact, though, of the coronavirus says it's too early to tell. In the U.S., substantially all of its restaurants right now are either drive-through, takeout, and delivery only. In some countries, like in Italy and in Spain, they're flat out closed. And just taking a look at the Dow right now, it's down 114 points. It's being led lower by Boeing, and this is after Standard & Poor's lowered Boeing's debt rating to BBB. So Boeing today getting hit yet again. Alexis, Brian.
Inez Ferre, thank you so much. It should also be quickly noted, too, we're also seeing news this morning on Costco making a $1 billion acquisition of a logistics company, Innovel. I'm sure a lot of companies are going to be shopping at these discounted valuations very, very soon. But we've got much more ahead on the first trade. Be sure to stick around. Lots more on these markets.
Welcome to the first trade on Yahoo Finance. I'm Alexis Christoforous.
And I'm Brian Sozzi. Lots going on in these markets, to say the very least, after especially the big rout on Monday.
And here are the headlines making the first trade front page. 7 million residents in the San Francisco area are being ordered to stay home as new coronavirus restrictions take effect there. The White House is urging gatherings be restricted to less than 10 people. Treasury Secretary Steven Mnuchin is expected to present an $850 billion stimulus package to the Senate today. Some $50 billion will be for the airline industry. And Nordstrom is the latest major retailer to shut down its stores for at least 2 weeks. It's also withdrawn its 2020 guidance completely. It will, though, still pay its employees.
Well, that's very good. But first, we're going to send it over to Jared Blickery, who is manning the Wi-Fi Interactive board. Jared, what's happening?
Yeah, we're seeing losses now. The Dow has accelerated to the downside, down about 300 points, or good for about 1.2 points. The S&P 500 down a little bit less, 54 basis points, and the NASDAQ down about 93. Let's take a look at the intraday price action right now. We can see the S&P 500, after gapping up, has now fallen into the red. Really, this isn't a big price movement. The average over the last 10 to 12 days has been about 6%. So this is just peanuts. I think we're going to get a lot more headlines throughout the day that could move the market. And we're still seeing the VIX elevated. This is at an 82 handle. That's simply incredible. I haven't seen that since the great financial crisis. And we'll also check out T-bond yields here. That is up about 7 basis points. So here's our heat map, and we can see now this is it's getting red here. We can see Apple's down over 1%, Alphabet's down 2%, Facebook down 3%, Amazon and Microsoft just barely in the green here. And if we check out the Dow, we can see it's a similar picture here. Walmart is a standout. Staples doing very well today. And then financials, they were in the green early on, but JP Morgan is now down 12 basis points. And I just want to talk about that commercial paper funding facility that the Fed is likely now to institute. This was a crisis era tool that they instituted after Lehman Brothers, and it lasted about 2 years. And it allowed companies like Harley-Davidson or even banks to access the commercial paper market and sell that paper to the Fed, which actually gave them the funding, and it quieted the markets, and it helped, as you said, Brian, it was one of their crisis era tools. There's another one which I would expect to be implemented as well, or resurrected, and that's the ABCP, or Asset-Backed Commercial Paper Money Market Mutual Fund Liquidity Facility. That actually funds—
You get 100%.
Pretty good. Thank you. That actually funds the money markets who fund the commercial paper. So if it does follow the playbook from 2007, 2008, and 9, I think we're going to see a lot of these emergency lending facilities used again and fighting this volatility.
Yeah, break out those acronyms. Jared, what's your read on the trading activity in the first 30 minutes of trading here? I'm looking at Apple under pressure, Microsoft not doing too well, Visa not doing so well. These are benchmark names that got hammered yesterday.
Yeah, it's more of the same. And I think if we take a look at the sectors, it's going to give us a picture here. Now, we have the 10-year T-note yield up, but we're still seeing a very defensive outlook. Utilities, staples, healthcare, real estate, those are all in the green and outperforming. That tells you everything you need to know. People are looking for safety and shelter, and really what's happening with the bond market isn't determining what's going on. I think it really has to do with the US dollar. Overnight, when the markets crashed in Europe, that had to do with them trying to get dollars, exchanging euros for dollars, which has become very expensive. And those funding costs have really hurt institutional liquidity. And markets were already fragile and illiquid to begin with. This is just making them more so. But again, we got the Fed coming to the rescue, hopefully with some more programs.
Hopefully, yeah. It looks like they're throwing everything at this, plus the kitchen sink, as we see that scramble, as you explained, to the US dollar. Jared, thank you. Yesterday, the Dow saw the worst day since the 1987 market crash. But with all this short-term volatility, we hope it's short-term, investors are left wondering, how will this all play out in the long term? Harvard University professor Carmen Reinhart joins us now on the phone. Yahoo Finance's Adam Shapiro also joining us from our newsroom. Good morning to you both. And Professor, we just heard that Jared was talking about what the Fed's doing, reinstating commercial paper funding facilities, something it hasn't done since the 2008 crisis. How similar is what you're seeing now to what happened in 2008?
So in terms of looking for a historical antecedent of the full-fledged 2020 coronavirus crisis, there is none that I am aware of. Because if you look at previous pandemics, the policy response was nothing like what we're seeing with, the social distancing, the closures, and so what you really have to begin to look at this is, to what extent is this morphing into a financial crisis? It has certainly a lot of the elements, because while the banks started out, healthy, the households were not problematic. So those are important differences from 2008. You did have increased leverage on the corporate side. You did have the bubbliness of the equity market, but this is a real shock. But the real shock, the supply shock and demand shock, is making the financial market increasingly illiquid.
Professor Reinhardt?
For a fact, yeah?
So let's take a step back, because your book with Professor Rogoff, This Time is Different, showed all of us how throughout history, financial crisis, economic collapse, and then recovery really was the same throughout history. This morning on National Public Radio, you were talking about this being the kind of event we have not yet seen because of the speed with which the pandemic has spread. But if it does become a financial crisis, could we expect the way that other financial crises have been resolved over the centuries, could we expect that going forward to play out?
Big elements, yes. Meaning, if it develops into a full-fledged financial crisis, you get a lot of insolvencies. You begin to have, the kind of balance sheet damage that's a hallmark of financial crises, and then you're really talking about a longer recovery process. Okay, and so the big question, which is an open one, and I don't know the answer, is how quickly will the virus stall? Will it be before we begin to see, a wave of bankruptcies, fiscal stimulus, and assistance from the Fed notwithstanding? So the longer this goes on, the bigger the odds that it's a financial crisis, the bigger the odds that it's a U-shape and a more protracted recovery. But we're not there yet.
Carmen, in your opinion, just looking at overall the crisis you have in the past, when fiscal policy comes in, and let's say this time around we do get a big $850 billion plan from the Trump administration, how long before the economy starts to recover from a shock like this? Is it 1 month? Is it 2 months? Is it a year?
Tell me when this ends. I mean, tell me how long how many financial crises can I name where basically you have had all, air traffic curtailed across borders, where trade is disrupted, where all manner of gatherings are canceled? That's not a long list. This is something, quite severe. My expectation is, if this is, a matter of a few weeks, then, the potential for a quicker recovery is there. If this drags on beyond a few weeks, then I don't see how you're going to get out of bankruptcies, and we're talking about a much more drawn-out process.
Professor, when you say okay, finish that thought, because I have a question for you about the timeline.
Okay, but I also want to say, if I think the initial drop is probably going to be bigger than the global financial crisis. We got an inkling of that from the Chinese data, in the last few days. So go ahead.
Right.
What was? I'm sorry.
So if this morphs into a financial crisis and just a calamity of economic proportions, I hope I never have to take a test in your class on the book, because it was so many years ago when I read it. But my recollection is it takes about 10 years for these kinds of recoveries to get us back to a place of where we were prior to the collapse. Is that accurate? If not, what is the timeline to where we get back to what we would know as normal in the historical past?
Okay, well, it's taken Europe 10 years, but that's not the norm, okay? 10 years is on the long end. The overall historical experience is closer to 7 years on average for the biggest systemic crises. The 10 years that we emphasize is the average for the European wave of crises. And that, of course, includes Greece and Italy, which even at the moment have not recovered their 2007 per capita GDP.
All right, let's leave it there. Let's hope we recover before 10 years. Carmen Reinhart, Adam Shapiro, thank you both so much. Residents across the country hunker down to avoid exposure to the coronavirus. We'll get an update of the latest next on The First Trade.
To rolling out these measures, largely because that's where the resources are for the health department and public resources.
You know, I'm looking at shares of Regeneron. They are rallying today. The company just moved up its timeline for testing a new potential treatment here. What does that mean for the fight against COVID-19?
Sure. Regeneron is now really a part of the race. We know that Moderna already is in clinical testing, and Regeneron looking to start early summer. That it does follow a little bit of the other competitors' timelines. We know that that still really doesn't change the results of next year being the time when we see a vaccine at all. However, drug treatments do hold some potential for really coming in, a little bit closer. Possibly this year we might see some. We know that Gilead is in the race, Regeneron as well. With Sanofi, they have a treatment drug that they're looking at. So it really is a matter of when and how we see these roll out, but the timeline doesn't really change as much, unfortunately.
All right, Anjali Kemlani, we're going to leave it there. Thank you so much. All right, we are a few minutes into the trading day now. Let's see what's moving the markets at the open. Yahoo Finance's Inez Ferre is at the New York Stock Exchange for more than a few minutes. We're about 45 minutes into the trading day. But what have you got for us? Because it is a seesaw this morning.
Yeah, that's right, Alexis. I'm here with Jonathan Corpina. John, talk to us about what we're seeing this morning, because we saw a bit of a rebound. Now we're off of that.
We continue to see a lot of volatility, right? S&P futures overnight, such a wide swing. Coming in today, seeing that same thing. I got to still trade while we're talking here. A lot of swinging that's going on there. So coming into the market this morning, I think everyone just waited and paused till the market open to see where we're going to get. We still haven't gotten there yet. We continue to have major swings back and forth. It's going to take some time and participation to see if we get some stability here.
What we saw yesterday was just incredible. So after that Fed action and more Fed tools that could be used as well, a stimulus package for these industries that have gotten battered,
Is this going to kind of hold off a recession? Will this calm the markets?
We don't know yet, right? I mean, we're still in the middle of, or whatever phase we are with the virus. So we don't know how much longer this is going to take for us to get this fear off our overall economy and our markets. So whatever the Fed can do, they should probably wait and see how long this is going to take. Don't use all their bullets now, because we're going to have probably another 2-3 weeks of what we're feeling now. And then once the dust settles, the Fed can make the decisions what the best moves are.
And when you compare this to other crises, what sticks out to you?
It's completely different, right? Other crises that we've had, we kind of knew what was going on at the time, and we knew that there was an end in sight, right? So if you talk about, Sandy when we had the shutdown, and 9/11, this is different.
Financial crisis.
Financial crisis. I mean, we don't know if we're in the 2nd inning or the 8th inning right now of what's going on. So I think that's what the scary part is.
All right, thanks, John.
Thank you.
And right now we're looking at the markets, the Dow that's flat right now, the S&P up 27 points. Alexis, Brian?
Inez Ferre, thank you so much.
Thank you.
The volatility in U.S. markets continues. Year to date, the Dow, NASDAQ, and S&P 500 are all down significantly and continue to be in bear markets. To end, I'd like to bring in Shahak Manyahilan. He's Wedbush Securities Head of Equity Trading. Good to see you here. Very curious on the morning after the big hit to the markets yesterday. What actions are you taking?
So a lot of volatility, obviously, this morning, and the latest lowering of rates by the Fed Sunday did not seem to do much for the markets initially yesterday. But we think, the effects of a further accommodative stance will play out over the near term, and also think the Fed needs to be very specific in what actions they're taking and reasons for particular actions that they are taking. And this morning, what we see is the defensive and staples certainly outperforming, which isn't too surprising, and a lot of the risk-on type of assets continuing with the slide.
Zack, you mentioned the Fed. What should they be doing? Should they be doing anything differently right now? Is that what you're suggesting?
I think what they're doing is it will ultimately be very helpful and a boost to markets as investors. At some point when this does slow down, investors will have to take a look at risk assets again, and you're not going to make any money being in fixed income. So risk assets should at some point start to perform again. I think their steps are important and still needed, but I think it really comes to more fiscal stimulus is what we're probably going to need at this point. Is we're starting to see more and more companies start to go to the government and ask for aid and assistance. So I think with respect to the Fed specifically, they need to be very specific as to what they're doing, why they're doing it, and also come with exit strategies for the different programs that they have in place or are looking to put in place.
So, Hawk, frame this for us. We're starting to get drip news on the fiscal policy front. The last thing that I saw, last note that I saw, a plan could be upwards of $800 billion in terms of a fiscal response. Does the market rally hard after that news hits the tape?
No is the quick answer for you, but I think we need to see more of this. And once we start seeing this and start to get some better clarity around this coronavirus and the effects and the gravity, and that once we start to see more testing done and get a better handle on that, I think you start to see some of this near-term selling come to some kind of a pause. But the fiscal stimulus, I think, is the most important tool that the government has at hand.
What are some of the signs you're looking at right now for feeling like a bottom is near, at least? What are you going to be looking for in terms of how this market behaves to be able to call a bottom?
Yeah, so market breadth is one of the most important things that we're looking at. So market breadth is very important to us, and there's different tools that we use. I can give you some examples. Looking at stocks trading above the 200-day moving averages has been at multi-year lows, down at 5%. We're also looking at different oscillators that give readings to breadth and upside, downside volumes. These are just a few of the different ones that we look at here.
Based on those indicators, does it suggest to you that yesterday was that ultimate washout day?
No, not necessarily. I wouldn't say that yesterday was the ultimate washout day, but I would say that it certainly looks to be getting close. And I think the price action this morning, where it was very volatile on overnight futures, we come in and then we open up and started drifting lower the first 30, 40 minutes of the session, and now we're starting to find some type of a bottom here. I think this sets up very well for a big rally into the end of the day here. I wouldn't be surprised, and I think we're trying to form some kind of a bottom at these levels. But again, we just broke 20,000 earlier. So I don't know if yesterday was the washout or if it's this morning where we made another new low this morning, but I think we're getting very close. And I actually like the price action we just saw this morning very much for a late day rally.
Well, we like the way you're thinking. But, you know, I'm curious what advice you would give to people who are in the market right now and living through such a painful time for the very first time, those who maybe were not in this market back in '08 and don't know what a real market downturn, a prolonged market downturn feels like. What would your advice be to them?
So it ultimately depends on the age of the person that I'm speaking with. But I think to have a market with, on February 19, we made an all-time high in the markets. 3.5 weeks later, we're down some 25 to 30%, depending on what sector or what ETF or what index you're looking at. These types of exaggerated moves usually don't persist. And I'm not saying we're going right back up to 3,400 on the S&P, but I think that there will be some kind of a very sharp rally in the near term off of these levels. And so if I'm talking to an investor in their 20s, 30s, and 40s, I think you bear this out and you really start to put together a list of stocks that you like or companies that you feel like you may have missed 1, 2, 3 months ago or over the past 18 months for that matter. And I think you start putting together a shopping list and get very serious about looking to buy some of these. I mean, I've been doing this for a very long time. These types of opportunities don't come often, and as hard and scary as it is to buy stocks when the market's acting like this, it usually behooves one to take advantage and to at least take a look or another look at some stocks that they want to be long.
So, Hawk, investors or clients in their 20s, do you get the sense for them when you're talking to them on the phone that they're getting ready to, let's say, empty out their savings account and buy stocks that they have never been able to get at these valuations?
So I don't talk to clients, individual clients in their 20s. I speak with institutional clients, so we're talking to large portfolio managers, hedge fund managers, asset managers. These clients are usually 30 plus, but they're certainly managing money for individuals in their 20s and so forth. But from the institutions that we're talking to, there's been a lot of wait and see and watch mode, but we're certainly starting to see some guys come in and try to pick at some quote-unquote underappreciated stocks, of value-type stocks, or stocks that have just been beaten up just because everything is going down right now, and there really doesn't need to be a reason for anything to go to. Everything is for sale. Stocks are being sold, and there's a lot of systematic selling that's in play right now that is certainly exacerbating these downside moves.
A calming voice amidst the market storm. Sahak Manuelian from Wedbush, thanks so much. Amazon making a big announcement about hiring, and later a few tech companies band together to fight misinformation on social media regarding coronavirus. We have the details coming up. Amazon is seeing a surge in demand as many people turn to online ordering to get supplies during this outbreak. So the company plans to hire an additional 100,000 employees to help pack orders and deliver them. Tech editor Dan Howley is joining us now. And Dan, finally, we get to report a little good news, a company that's actually hiring. What else do we know about this effort from Amazon?
Yeah, so they're hiring an extra 100,000 workers. That's to work in their warehouses, delivery workers, anything you can think of to try to get as many people available to send out the items that people are purchasing now en masse. We're talking about everything from, household cleaners to groceries, anything that people need, they're ordering a lot. And Amazon is seeing a surge in that. So they're trying to hire as many people as possible. In addition to the extra 100,000 workers, they're also offering a $2 raise temporarily to workers that are available at this time. And, it's something that the company has never had to deal with, obviously something that many companies have never had to deal with before. And people who may not be able to find what they can find normally in the grocery store, they're turning to Amazon as an alternative. I can tell you myself, I've been looking for cleaning products. They're sold out, temporarily unavailable. It says you can get alerts on when they come in, but a lot of items that you might want won't be there. Amazon says, though, it's trying to get them up and ready and out the door.
Well, Dan, pick me up some bleach if you're placing any orders. I'd really appreciate it. But you know what is interesting to me? We had Amazon hiring 100,000 people, Google working closer with the government, Facebook coming out today, stepping up its efforts to help people amidst the coronavirus. It is interesting that these companies were attacked by the government as potentially just having monopolistic businesses last year. This is everything we talked about in 2019. Now they're stepping up.
Yeah, I mean, it really does kind of run a little counter to the argument that they're monopolistic, because they're kind of taking advantage of that. And if the government's going to fight that, then obviously that's their prerogative. But if they're going to also try to take advantage of it, then good for them taking advantage of it before any kind of action is taken. But I think this is something that the companies feel that they have to do. They always want to try to put their best foot forward. That's obviously any kind of PR move that a company wants to do. And so that's exactly what they're doing at this point, trying to fight misinformation online, trying to ensure that they can get goods to people on time, having that Google Verily site up. That, by the way, went down very quickly because so many people trying to access it. So obviously big tech trying to step up and do what's right at this point. But whether or not they're able to keep their sites up and whether or not they're able to get goods to people, that remains to be seen. I think they're going to continue to see large surges of people online as more and more people start to work from home and more cities begin to shut down.
What about other big tech companies hiring? I mean, are you hearing anything else there from Silicon Valley? I mean, you're saying try to do the right thing by your employees. Those who maybe are telling workers to go home, they don't need them right now. You would hope that they're continuing to pay those workers. I mean, outside of tech, we heard Nordstrom is doing that. It's going to close its stores for 2 weeks, but said it will be able to continue to pay its employees. I'm wondering what you're hearing within the tech community.
Yeah, Google, for instance, is basically telling workers, look, we know you're not going to be able to be as productive as you might be in the office. Just try to be as productive as possible. They're going to continue to pay everyone, obviously. A company as large as Google, you would think it would. And a lot of the people there can have remote access, so that's not going to be an issue. And you're going to see that across the board at Silicon Valley. A lot of companies allowing people to work from home, a lot of them still paying employees, at least the employees that are able to continue to work. And, you got to wonder about the secondary employees, the folks who, staff the cafeterias, who do cleaning. You got to imagine that they're probably in a situation where they may be wondering where their next paycheck's coming from. Silicon Valley, some of the companies have probably said that they're going to pay them, but we're not exactly sure who is going to be paid and when. But obviously a big issue if those companies are closing up shop, sending all their employees home, especially in the Silicon Valley area where they have those lockdowns right now.
Big issue indeed. Dan Howley, thanks so much. The coronavirus pandemic has triggered memories of the 2008 financial crisis and the Great Recession. But are these rising concerns even warranted? Joining us now to take a deep look into the housing and mortgage market is Francesca Ortegren, clever real estate data scientist. Good to see you here this morning. Obviously, the stock markets are under pressure. People are being quarantined. Do you think we're just on the precipice of seeing another housing market meltdown here, potentially starting this spring?
We could. There has been kind of a downturn in people putting their houses on the market or searching for homes with the fear of the coronavirus. We've seen some innovative ideas from agents who are doing virtual tours in hopes to keep housing kind of moving. But my guess is that we'll see a little bit of a downturn that hopefully doesn't spur the same type of reaction from banks that we saw pre-2008.
Yeah, I want to talk about that because, Francesca, the mortgage market is very different today than it was in 2008, right? And what is the subprime market, which we know is the big problem, and what instigated the fall that we saw in 2008? How is that market doing today?
It looks a lot better than it did pre-2008. So we are not giving out as many subprime loans and much fewer deep subprime loans. Which is good. That means we're lending out more to lenders who are more likely to be able to pay back their mortgages. But since about 2010, after the initial drop in kind of all mortgage originations, we have seen a little bit of an uptick in those subprime lending originations. So it's a little concerning. We are not at pre-2008 levels quite yet. But with the economy kind of in a place that we are unsure of where it's going to go, and the housing market questions that we have, we might see some questionable lending practices kind of increase in the next few months.
How concerned are you about the state of the rental market?
I
imagine a lot of people they might have concerns if they're not working for a couple months. How are they going to pay their rent?
Exactly. I know there are a lot of places like St. Louis, Missouri, where we are located or are having a moratorium on eviction. So hopefully that keeps people in a place where they're safe, but that also puts people in a position where when this is all over, they might be evicted or might not be able to afford rent. So we might see a change in the rental market depending on what we see in employment. My guess is that we're going to see a little bit of a decrease in employment and increase in unemployment over the next few weeks. Depending on how long this lasts, it could get pretty bad, but hopefully landlords are understanding and allow people to pay late without interest and things like that so that people don't lose their homes.
Yeah, happy to hear that. I hope that more people adopt that. Francesca, what about low mortgage rates? I mean, mortgage rates are near record lows right now. Is that even going to matter to the real estate market if we fall into a recession?
It could. I think what we're going to see is a lot more refinancing than purchasing, especially if we stay in this self-quarantine, social distancing state where people aren't going to want to go see homes.
Yeah, right. We'll have to leave you there. Having some difficulties with Francesca Corrigan, but she made a very good point about some potential stresses in the rental market. Interesting in St. Louis that they're having a moratorium on no evictions. Right thing to do.
I think we're going to see more of that too. At least I hope we do. All right, we'll get a full check of what crude oil is doing today in our commodities report, and we'll go inside the C-suite coming up.
Welcome back to the first trade. You returned to some green on your screen after yesterday's big rout, but I also want to highlight some interesting action on the Yahoo Finance trending ticker page. You're seeing Blue Apron shares spike another 62%, Waiter Holdings up another 60%. These are at-home delivery companies that also had big runs yesterday as well.
All right, let's take a look at how commodities are doing today. Yahoo Finance's Jared Blickery at the Wi-Fi Interactive Board. I see crude at $28 a barrel. We had an analyst in here the other day saying, look out, we're going to have oil in the teens, Jared.
It's possible and totally unfeasible 2 months ago, but a lot of things were back then. We're seeing crude oil up about half a percent, just barely holding on to gains. We can see it was up quite a bit earlier, peaking above 30. A lot of the volatility is simply tied to what's happening with the dollar and interest rates, and we'll get into that in a minute. Let's take a longer term look. Let's do year to date here, and we can really see how this market just fell off a cliff. It's been cut in half. We can see it's off 52% for the year. What's going to make it go higher? Doesn't look like OPEC Plus is a thing anymore, and so the Saudis are in an all-out price war. Shale oil producers are eventually going to shut down. They're probably in the process of it now, but there's additional supply that's from the current operations that has to work its way through the system. So oil in the teens, I'm not going to count it out. But let's go down to gold here. Gold is up today, and it's had a pretty bad week, actually almost 2 weeks now, and we can see it was peaking above 1680 here on an intraday basis. It got to 1700. Again, this goes back a year to date, and we can see here it's testing a level, and I think we'll see this on a one-year chart that we haven't seen since basically last August. And so current support right here around 1500 is holding, but we do not want to see it go much lower. Let's take a look at some other markets here. We can see silver. Now, silver has had a tough time here as a quasi-industrial metal, more so than gold. It's really been falling off a cliff. We can see for the year it's off 5%, and then year to date it's off even more, about 33%. Hasn't really been benefiting from the same flight to quality that gold has, but gold hasn't either over the last couple of weeks.
It has not. It is baffling us all. Jared Blickery, thank you. Coming up, we're going to dig deeper into this market, including a special focus on bonds. Stay with us. It's been a volatile month for the 10-year Treasury yield as the coronavirus continues to panic the bond market. Joining us now on the phone is the CIO of Global Fixed Income at Morgan Stanley Investment Management, Michael Kushma, along with Jared Blickery over at the Wi-Fi Interactive Board. Michael, thanks for making time for us today. I'm going to start with the bond market, the credit markets. Do we have a liquidity problem in the credit markets right now?
I think we do. There is has been a mass rush to the door, an exodus from risk. And lately, last week, we saw not only problems in liquidity in credit markets, but in the Treasury market as well, that when everyone runs to the door at the same time, there's a very small opening relative to what is needed at that point in time. And certainly one of the actions the Fed took late last week and over the weekend was to address the issue, at least in the Treasury market.
Jared Blickery here. I want to ask you about negative rates because Sunday night, the one-month T-bill briefly went negative. Is that something, although it's not the Fed's intended policy here, is that something that could come to the U.S., and what would be the implications of that?
I think it's unlikely to have the entire yield curve structure move negative, but at the very front end of the yield curve, there's clearly a problem in the commercial paper market and the prime money market areas in terms of a heightened need to sell shorter dated paper to raise cash that investors want to do. So the rush into risk-free assets, into government liquidity funds, can push T-bills, given the current muck structure of money market rates the Fed has implemented, to push T-bills into modestly negative territory. Although I think that from a policy perspective, the Fed does not want to see anything material below negative as we move further out from the sort of very short end of the Treasury bill market.
Michael, can you frame this for us? How shocking will corporate default be looking out over the next 3 to 6 months?
That is the question of the day, and that is what markets are grappling with. Right now, the credit markets have priced in probably 85–90% of a probability of a conventional recession. However, we don't know the true ramifications of this economic shutdown that's been rolling through the U.S. economy, how much further it will go. Corporate cash flows will be severely diminished in many industries and generally speaking as well, and that will have to be taken into account. We'll also have to see what kind of policy response there are in terms of forbearance, liquidity provisions by banks or by government entities to allow companies to tide themselves over. The airline industry and the leisure industry are clearly in the crosshairs of this issue, and those issues need to be dealt with.
You know, Michael, investors are demanding far greater returns for holding corporate debt right now. What are some of the winners, or where are some opportunities for those who have a stomach for corporate debt?
Well, I think the areas are with kind of like banks, because they've been turned into quasi-public utilities with all the extra regulations been put on them in the last several years since the last global financial crisis. And that has provided them with extremely strong balance sheets. So our view is you want to focus on companies that have strong balance sheets, have strong underlying working capital, can do well and certainly survive for sure what happens through an extended global economic slowdown. We've already seen in China what happens when you shut down an economy for extended periods of time. Well, actually just for 2 months, and where industrial production fell 13–15%, retail sales fell 20%. I think in February, car sales fell 90%. Clearly, that can't be sustained over months and months and months without putting companies' financial integrity in jeopardy. But just for 2 months, we can probably recover from that with some extra financial support coming from public sector entities or the banking sector.
You know, Alexis, it is amazing. This is a market that Jerome Powell has said that the market doesn't need negative rates, but that seems to be where the market is trying to take us.
It is. Michael Kushma, we want to thank you so much for being with us this morning. Jared Blickery, thanks to you as well. We also have some breaking news we want to bring you now from the Federal Reserve. We've got Brian Chung standing by live in our newsroom with the latest. Brian, what is this about?
Hi, we got some breaking news. The Federal Reserve has just announced that they are opening a commercial paper funding facility. This is what they call a way to supply short-term money to companies that may be under stress as a result of the coronavirus. For those that aren't aware, commercial paper is a way for companies, not just banks, companies across the board, to finance short-term needs that they have. So commercial paper could be 90 days, for example, which would cover 3 months. And this is basically short-term corporate debt. There's been concern as of late that that market has been drying up and that companies that have been squeezed on margin have not been able to issue commercial paper or find appetite for purchasing commercial paper because everyone is hunkering down. Now, what this commercial paper facility that is opened by the Fed will do is it will allow companies to go directly to the Federal Reserve to roll over any commercial paper obligations that they have so that they can extend the short-term funding that they will have access to. Now, what's important to note about the commercial paper funding facility is that unlike what a lot of the Fed usually does, this is not just for the banking industry. So any type of company, any type of corporate, whether it's a pharmaceutical company or even an airline company, they will be able to go directly to the Federal Reserve if they meet certain eligibility standards to have their short-term debt rolled over. Now, what's important to also note about this is that the Fed didn't do this by themselves. They needed to coordinate with the U.S. Treasury to find some sort of guarantee for this. So the Federal Reserve did work with the U.S. Treasury to get $10 billion of credit protection via the Treasury's Exchange Stabilization Fund. But again, this is brand new news coming from the Federal Reserve, and this is a message for them that they want to support corporate debt markets as the stresses continue. Alexis?
All right. Thanks very much, Brian.
Brian Chung, thanks so much. Jared, let me get over to you here. We saw the market is all over the map. It initially popped, then briefly went negative. What are you looking at over at the Wi-Fi Interactive board?
Well, I'm not looking at the individual markets, right, or all the zigs and zags in the market right now. I think overall, this is actually a low volatility day. We've seen a lot of swings. We saw the market up 5% overnight, and it swung into negative territory and then into positive territory. Relatively speaking, these market movements don't really make much of a difference in the big scheme of things. I think the market is simply waiting for the next headline right now. And really, I mean, we could see the Dow pass through the unchanged 15 times here.
You know, I want to bring Brian Chung back in here. Brian, I'm just reading a statement from the Fed. It said it's doing this because it's acting to provide credit that, quote, will support families, businesses, and jobs across the economy. For those listening and not quite understanding what, you know, establishing a commercial paper funding facility means to them, why should the average person or the average investor care about what just happened with the Fed?
Well, they should care because this is a way that you can keep businesses at least alive through the stresses from the coronavirus. So when you consider the fact that there are all these retailers, large and small, that have to rely on funding while they close their businesses, while consumers are quarantined inside their homes, it's uncertain about how long these companies will be able to survive with no profits, with no revenue actually coming in. So when you consider that we don't know how long this coronavirus will last and that most commercial paper issuance is only 90 days, the assumption is that if you cannot survive beyond 3 months, if you don't have enough cash on hand to last that long, you ultimately will have to go out of business. So that's why people have not been buying commercial paper or actively participating in those corporate debt markets. And the Federal Reserve right now is trying to say, we're going to offer our own lending facility so that if anyone has commercial paper that they need to renew, you will be able to find a counterparty to keep that funding going. So the Federal Reserve is effectively saying, we are going to allow you to do this. And what's important to note is that the Federal Reserve mostly does a lot of its activities through the banking system. This, again, will be available to even non-banks and many other types of industries.
All right, Brian Chung, thanks so much. And we're seeing the markets really starting or trying to rally hard off of this news. But tech companies are banding together to fight misinformation about the coronavirus online. We'll tell you what some big names are doing to protect you. Major tech companies are working to fight disinformation surrounding the coronavirus. Yahoo Finance's Ethan Wolfman joins us now with the details. Ethan?
Yeah, so essentially Silicon Valley is looking to combat all of this coronavirus misinformation. This is like any large event or, election season, except unlike an election, nobody knew it was coming. And so essentially what we have is this entire ecosystem of Facebook, Google, LinkedIn, Microsoft, Reddit, Twitter, and YouTube all deciding, okay, we are seeing a ton of fraud and misinformation on our platforms, and we're going to try to do something about it. As of now, it's very unclear what exactly that means. Clearly, since 2016, when the presidential election had a lot of misinformation problems, there hasn't been a ton that we've been seeing, in terms of action to make this better. So right now, I can't imagine that we're going to see a ton of stuff being able to keep up with the rate of disinformation. There's been this national lockdown rumor, fake medical tips, other sort of fake rumors, that weird text of a text thing that New York City was going to lockdown. So I think we're going to see a lot more of this stuff. I actually was speaking to somebody in the telecom industry yesterday who was telling me that they've been seeing robocalls and other kind of text things with malware being involved, and also this sort of scam where you can reserve your place in line paying by an Amazon gift card, which of course is never something that's legit. That should always be a red flag. I think that we're still going to see a lot of this until real measures are put in place, and we don't have a lot of information exactly on how these companies are going to do things. So I'm still worried here, Brian.
All right, we're going to leave it there. I, by the way, like your red KitchenAid mixer. I have the same one.
Love it.
Now that you're going to have a little more time on your hands, you'll be working from home. Maybe you can bake us up something. Ethan?
I'll try.
All right. Thanks for the update. All right, I want to bring in Dennis DeBuscher. He is leader of Evercore ISI's portfolio strategy team. Dennis, thanks so much for joining us on the phone this morning. Just first off, what's your take on the market action today? We seem to have a market here that's searching for direction.
Yeah, unfortunately, I don't have anything pithy on the market because although I think the commercial paper action was very, very important, and the previous guest did note that it does help small businesses at least try and meet payroll and things of that nature near term, we still have this giant problem of how long this will last, meaning how deep will the economic downturn last, how severe it will be, and how long it will last, which is really going to be a function of getting our handle on, is the curve bending, which we all know what the curve bending means now, i.e. the COVID infection rate curve, and will the hospitals be run for an extended period of time. So that's why vol's at 80. The VIX is sitting here at 80. That implies 4.5% moves on a daily basis and roughly 30 on a monthly basis, and that's what we're seeing today.
Hey, Dennis, Brian here. I just got an email from you guys in my box. A fiscal plan could approach $1 trillion. Let's say we do get that plan, and that's where we're headed. How do you think the market reacts?
Very positive. Full stop. That's bigger than the initial American Relief Act. I'm saying that wrong. From 2009, I think the initial plan was $750 billion, got up to about $950 or $900 billion, roughly. By the time it was all said and done, that would be significant, and I think the market would react very positively. My initial kind of pushback from clients on that is that there's still a lot of doubt that something of that size will get done just because of the politics of everything. I tend to take a little bit more positive outlook on it, meaning if we're going to quarantine the entire country and shut them down, despite the fact that both Republicans and Democrats can't stand each other, we're going to have to get something done because you cannot quarantine the entire country, shut it down, and not have a fiscal offset. So I'm a little bit more positive on it. I do think the market would react very positive to that.
Would that signal, though, the turnaround for this market, or will it just be one of those initial knee-jerk reaction type things, and nothing's really going to fundamentally change for the market until we get better news and a better understanding of what's happening with the virus?
I think for sure puts in a bottom. I think it does push the market up roughly in the 5 to 8% range. But anything beyond that would require better news for the virus. So I don't think it's something you would fade, which is to say that you get news like that of $1 trillion stimulus, which is massive, and the market just fades it. That will go a long way in offsetting some pretty dire economic forecasts. To put it in context, coming out of 2009, $750 billion initially. That went a long way in stabilizing the economy, which is the largest drawdown since the Great Depression. So it will help, but ultimately how far we go to the upside will be determined by, getting a handle on the virus and bending the curve.
Dennis, do you think earnings estimates for the S&P 500 have come down enough? I don't see it, but what are you seeing out there?
Not even close. It's just not even close. Earnings estimates, at least at consensus levels, indicate roughly, I think as of today, probably maybe a little lower, but at 4% and 11% next year. If we got plus 4% this year and plus 11% next year, we would all be dancing in the streets. So that's not even going to come close to happening. We're at negative 20% for the year. Most people are coming in around that level right now. So those estimates will come down. But no, they're not even close to coming down enough. I do think the market, though, by the way, from a buy-side point of view, has gone a very long way in pricing in some pretty dire earnings scenarios.
All right, Dennis DeBuscher, thank you so much for the insights and appreciate all your help all week during this market. That'll do it for the first trade. I'm Brian Sozzi.
And I'm Alexis Christoforous. On the move up next. Stay with us.
All right, a little after 11 a.m. in New York City, we are 90 minutes into the trading day. Stocks have been all over the place. They started to trade higher on some big news from the Federal Reserve. Welcome to On the Move. I'm Adam Shapiro.
And I'm Julie Hyman. Thanks for joining us. We've got more news, in fact, from the Federal Reserve. It just announced it'll open a commercial paper funding facility to support the financing needs of companies facing stress. Yahoo Finance's Brian Chung is joining us from our newsroom with more details. Brian.
Hi, Julie. About 15 minutes ago, some breaking news just crossed the wires. The Federal Reserve opening up a commercial paper funding facility. For those that are unaware, commercial paper is a way for companies to get short-term funding, sometimes between as short as 2 days or as long as 3/4 of a year, where they can find short-term funding to keep the business alive. This is usually unsecured debt, and the concern now is that with the coronavirus and a lot of shutdowns and quarantines in many areas of the country, that companies may be forced to go out of business. So the Federal Reserve stepping up to the plate here here by opening up a commercial paper funding facility where companies can go directly to the central bank and then renew any sort of commercial paper that might be expiring. It does have to be eligible. The Federal Reserve says it will only consider a commercial paper that's rated either A1 or P1 as of March 17th. And for those that aren't aware of the inside baseball, again, this is just a way to make sure that companies can continue to chug along despite the business disruptions as a result of the virus. Now, what's important to note about this commercial paper funding facility is that it was actually opened in conjunction with the U.S. Treasury. They actually needed to use what they call the 13(3) authorities under the Federal Reserve Act to create and open this facility, which is technically a special purpose vehicle. And the U.S. Treasury is actually providing $10 billion of credit protection via its exchange stabilization fund to open this up. Now, it is entirely possible that the Federal Reserve and the U.S. Treasury could at some point choose to beef up this program and make it even larger. But for right now, it sounds like it's $10 billion of credit protection. And what's notable, again, is that the Federal Reserve usually provides direct help to the banking industry, but the commercial paper funding facility will actually be a way for the Federal Reserve to plug into non-banks. So it could cover pharmaceutical companies, airline companies, cruise ship companies, many different types of industries that usually don't have direct access to the Federal Reserve. And in a statement, they did say the commercial paper market has been under considerable strain in recent days, but said by eliminating much of the risk, this facility should, quote, encourage investors to once again engage in term lending in the commercial paper market. Julie, Adam.
Brian, a very quick follow-up for you. In the past financial crisis, one of the reasons they enacted the commercial paper lending facility was essentially a run on money markets, and one of them actually broke the buck. So this not only hopefully stabilizes the lending issues for small businesses, but it also reinforces for millions of Americans, some of whom are watching right now, that the money in their money markets is secure and essentially backstopped. Would that be accurate?
Definitely, and I think that this is just another one of those measures that the Federal Reserve has deployed in addition to the number of measures that it announced in that surprise decision on Sunday afternoon, where the Federal Reserve is trying to instill confidence in the markets. But more importantly, this is actually something for Main Street, for those businesses that have commercial paper that are worried that they might not be able to survive the impact of the coronavirus. So again, providing this commercial paper is just one way the Federal Reserve is trying to say we're confident in trying to support the market.
All right, we want to check how markets are reacting to all of this news, and to find out, we go to Inez Frey on the floor of the New York Stock Exchange. Been all over the place since the announcement. Where are we now?
Adam, at least the S&P climbing towards the highs of the session right now. Percentage-wise, you've got the Dow that's gaining the least. It's being really dragged down by Boeing. That's the biggest laggard right now on the Dow. Also, you've got McDonald's that's under pressure. McDonald's saying that in-dining will be suspended in its restaurants, and also it may offer some rent deferrals to some of its franchises. As far as the financial impact of the coronavirus, McDonald's saying that it's too early to tell yet. Adam, Julie?
Inez, thank you very much. The number of coronavirus cases in the U.S. has risen to over 4,600 cases. We just got some new numbers from New York State as well at more than 1,000. Yahoo Finance's Julie LaRoche joins us now, and joining us on the phone to discuss the government's response to the virus is Virginia Congressman Don Beyer. Congressman, thank you so much for joining us. You, in fact, are in self-quarantine because I know you dined with a friend who was diagnosed with COVID-19. I do want to ask you about your experience with that in just a moment. But first, I want to ask your reaction to the Fed's latest announcement, this commercial paper announcement, since you are a member of the Joint Economic Committee. So talk to us about your thinking around this latest monetary policy move.
Well, I think it's a really good thing, and maybe more important than the Sunday afternoon announcement to the 0%, which was probably more symbolic in that but the notion that a lot more commercial paper will be available to small and medium-sized businesses is a good thing. Because, in the bill that the House passed early Saturday morning is in the Senate right now, did a lot in terms of paycheck, guaranteed 14 days sick leave, extension of unemployment benefits, things that were trying to maintain the income flow to the workers. But we also have to be concerned about the small and the medium-sized businesses and even the large businesses. We have enormous pressure if we do lose 1 million jobs just in the month of March.
I mean, we have Republicans, sir, on the other side of the Capitol who are saying it's time to send paychecks, or at least checks from Treasury, to middle-income and low-income Americans, which seems, shocking coming from that side of the aisle. But I am curious, when we talk about fiscal stimulus, one of the issues the president is proposing is a payroll tax cut. But that could undermine, according to Democrats, what we're trying to achieve. How would that be an undermining of what we're trying to achieve?
Our Joint Economic Committee did a great analysis of this just a couple of days ago. The dilemma with the payroll tax cut is even at 2%, that's less than $9 a week for people making $25,000, which is a pretty big part of the country. The bill we passed Friday night was directed at the people who need it most. The healthcare workers, the waitresses and waiters, the auto mechanics, the people working for the McDonald's that aren't allowing people to eat in anymore. So I really like the idea of the direct payments. I was glad to see Mitt Romney, among others, come out for that. Every economist that I've talked to so far says we need to put hands in the people that are consuming, that are buying, that are going to be missing paychecks right now. And you don't do that through a payroll tax cut.
Congressman Beyer, it's Julia LaRoche. I'm also from Virginia. So I just want to get your read on what's going on there. What are you hearing from the small, medium-sized businesses? I know you're in quarantine right now, but just from your own constituents, paint a picture for us. We're here in New York, so we're seeing a lot of things happening here.
Well, I guess like New York, the streets are empty. I took the dog around the block last night, and not a single car passed me in 15 minutes. Many of the shops are closed, either from fear of the coronavirus or because nobody was coming in to begin with. So we need to be able to look ahead in some kind of optimistic way to when business can get back to normal, even if it's 60 days out or 90 days out. And I'm hoping that the epidemiologists will come up soon with a protocol that says, here's when life can start again. But one of the most interesting things is we're all trying to do a really good job about flattening the contagion curve. Mm-hmm. But as you flatten it, you make it a lot longer. And that means a lot longer before the businesses start to recover.
And so, Congressman, we've been talking about the different remedies that are being proposed in Congress to deal with all of this. It seems like it's pretty urgent, right? I mean, people are staying home right now. Businesses are closed right now, particularly for small businesses. We don't know how much cash they have on hand. Sure, you've got more maybe lending happening, but they still got to pay that money back. So what's the holdup here? I mean, in a partisan Washington, can we get a productive bill through that is going to help people right now when they need it?
Yeah, Julie, I sure hope so. I know that on the Democratic side, in the House, we were on the phone for a couple of hours yesterday afternoon putting together all the pieces. Our staffs at Ways and Means, Appropriations, they've been working around the clock, literally overnight. So I'm hoping that we'll have phase 3. First of all, we'd like to get phase 2 passed in the Senate today. But we'll have phase 3 ready by the end of the week, and then phase 4 after that. So, yeah, it is urgent, all capital letters.
And, Congressman, I just want to pick up where Julie started. How are you doing? You have self-quarantined. Describe for us what you're feeling. I mean, you were near somebody who's tested positive. Doesn't mean you have the virus. What are you going through right now?
Well, it's been okay. We have a 24-year-old daughter working part-time, living with us. So she's the one who goes to the store and goes to the post office and the like. And our friend who was desperately ill a week ago is now recovering, which is also a wonderful thing. But right now, we're more just trying to help model the behavior that we hope everyone will, which is to stay as socially distant and isolated as you can until we get over the hump. But really concern for me is I don't feel it so much personally, but there are so many people whose anxiety levels are at an all-time high. I have 2 dear friends who are both psychiatrists, and their phones are ringing off the hook.
I think all of us know people who are a little bit nervous right now. And Congressman Don Beyer, we appreciate your being here. We wish you and everybody the best.
Thanks, Adam. Thanks, Julie.
Thank you.
Okay, so we're going to move on now. And we're going to check where markets are because the Dow had, as you know, its 3rd ever worst day of trading. Joining us to discuss all of this is Nouriel Roubini. He's a professor of economics at NYU Stern. And Nouriel, I have joked with you in the past, the nickname that some on Wall Street have called you, Dr. Doom, because you do warn people about things that are right in front of our faces. So I'm going to ask you this question. Do you see silver linings? What do you see that might be optimistic looking forward economically as we confront this growing crisis?
Well, for now, there is not much to be optimistic. What we can hope is that if there's going to be the right fiscal stimulus, that has to be something of at least 3% of GDP, this is going to be a very severe but short recession, meaning the recession already starting in this quarter, given the data on retail sales that came out today. So we'll have a Q1 contraction, a Q2 contraction, most likely a Q3 contraction. But if we have the monetary easy we have right now, if we control the pandemics by doing really systematic quarantines, maybe by June, July, the pandemic is stopped. And maybe by the fourth quarter of this year, we have an economic recovery. So this is going to be more severe than the global financial crisis because it's front-loaded. It didn't take a year and a half for having the collapse of output. It didn't take us to get to Lehman. Lehman got into 1 month rather than in 18 months. And it could be shorter, 3 quarters rather than 6, 7, but it's going to be very severe. But the key thing is that we need the fiscal stimulus. You know, the Fed has done everything under the sun. They'll do more, including today the commercial paper facility. But unless you have something to backstop private demand that is collapsing, exports are collapsing, consumption is collapsing, residential investment is collapsing, capex is collapsing, everything is collapsing in the private sector. So you need to have the one agent in the economy that has the balance sheet that can either spend more and or transfer income to those who need it. I've been among the first one to propose $1,000 to every single U.S. resident. Doesn't matter whether you're young or old, employed, unemployed, student, formally employed, partially employed, hourly worker, contractor, gig, small business. Everybody needs at least $1,000. Otherwise, we're going to end up like in the Great Depression at this point.
Nouriel, it's Julia LaRoche. Thank you so much for joining us. I was going to ask you about the Fed's move today and if you thought that might be somewhat helpful, especially given the stress that we have been seeing in the debt markets. What do you make of it?
Well, it's useful because large firms that are investment grade, that even the investment grade firms now cannot issue commercial paper, let alone those that are not investment grade. That's going to help those highly graded firms. The reality is, however, is that the credit market has completely shut down. There's no issuance of CLOs, of leverage loans, of high yield, of high grade, and we have trillions of dollars of fallen angels, of junk bonds that have been issued with covenant light and other types of junk of that sort. And we're going to have a debt crisis. We've had a spike today in the last month of high yield spreads from 300 to 800. It took 1 month. In 2015 and 16, it took 7 months between August of 15 and February of 16 for having the same kind of spike. That spike has occurred in 1 month. This is something we didn't even see during the global financial crisis. This is not a problem with the stock market falling 30%. Yes, there will be a wealth effect. The problem is in credit market. We're on the verge of a debt crisis. And while there'll be programs to provide credit to those firms and individuals that are illiquid but solvent, the reality is that in the economy, there has been so much issuance of debt in the last few years, corporate debt especially, that many companies are going to go bankrupt regardless of. This is going to be a debt crisis. It's not just a liquidity crisis.
So, Nouriel, if that's the case, what do you make of this announcement that the Fed just made in terms of restarting the commercial paper facility? If that is one of the areas of most acute stress, does it make sense for them to do that? And how much is that going to mitigate what's going on?
Listen, if you are a AAA or AA or single A company issuing commercial paper, now you can have access to that facility. But if you are that $1 trillion of fallen angels that are BBB minus, you don't have access to this facility. If you're among those firms that have issued something like $8 trillion of junk bonds that is not investment grade, you don't have access to that facility. If you are any one of dozens of millions of small and medium-sized businesses and firms that do not even have access to the bond market, let alone to the corporate paper market, you're not going to be able to have access to this facility. You have essentially the very top of the U.S. corporates, those that actually have cash, those that are AAA, AA, and single A, today cannot issue commercial paper, and we're going to help them. everybody else, that is 95% of corporate America and businesses, small, medium-sized, and even larger, do not have access to this facility. So is it helpful? Yes. It's helpful to the Boeings of the world, to the Ford of the world, to those kind of firms. It's not going to be available to anybody else, nobody else, meaning 95% of corporate America and of firms of businesses do not have access to this facility and will not have access to this facility. So let's not exaggerate the importance of this small facility that is small in size and limited to very, very few firms that are highly, highly graded.
Noriel, I want to go back to the stress that we are seeing in the debt markets. Just want to get your take on this, because last year and the year before, we were often talking about just record numbers of stock buybacks, of share repurchases. How much do you think that factors into all of this?
Well, there has been a massive increase in the last decade of corporate debt. Corporate debt as a share of GDP, as a share of corporate income, as a share of any measure of ability to pay, has exploded. It's an all-time high. And part of it was, of course, firms borrowing to invest into capital spending. But we know that in the last few years, there's been a massive increase in share buybacks. Some of those share buybacks have been occurring by using the cash that really profitable firms had, but also less profitable firms, that were those that were junk firms, have issued a huge amount of debt to do share buybacks. This was financial engineering that was boosting artificially earnings per share, that was boosting artificially the value of these firms in the stock market, that was making these firms even more leveraged than they were before. There was a crazy, dangerous, and I would say reckless form of financial engineering, and therefore those firms that were already highly leveraged, that use share buybacks financed with debt, including many of the activities that are occurring in private equity, are going to be now under severe stress. They were highly leveraged before. They are more leveraged now because of what they did.
So, Noriel, I am curious. I just want to point out, you mentioned the $1,000, and I quoted you. I tweeted your quote out to everybody on Twitter that the Congress needs to send $1,000 to everybody regardless as soon as possible. Facebook is giving its employees $1,000. They've just announced that. But as Congress is now debating a stimulus package, at the top of this discussion with you, and we should point out you're going to be with us for several more minutes, another 20 minutes, even if we go to break. You mentioned that any stimulus package, fiscal package, needs to be 3% of GDP. So we're talking minimum $600 billion, accurate? They're talking possibly $1 trillion. How quickly can the Congress get that money to stimulate the economy so that we see positive results?
Well, first of all, I fear that doing even a $200 billion fiscal package is going to take us time. They've been discussing the Pelosi bill in the House for over a week now, and that's only $50 billion. And that has not even been passed because the Republicans and the Senate are dragging their feet on permanent paid sick leave or things of that sort, right? So we're at $50 billion. And then they're talking now about 800. We're not going to reach 800 until the stock market is down 40 or 50%. And then once the market has crashed, once the economy is crashed, we're going to get there. Think about it. During the global financial crisis, it was only after Lehman, a year and a half after the crisis started, that we did the bailout of the banks. And it was only after Obama came to power, essentially April of 2009, when we had the joint G20 London conference that led us to a massive coordinated global fiscal stimulus. The reality is that we're in an election year. What the Democrats want and what the Republicans want is completely different. We need at least $600 billion, possibly $800 billion, plus liquidity support and other things that the Fed can do. But we're not going to get there, in my view, for another 2 or 3 months, because we're going to start with 50, then 100, then 200. And once then everything is imploding, once the GDP number for the first quarter are going to show us a free fall, once we're going to have a stock market falling not 30%, but 40 or 50, maybe at that point, the markets are going to force the hands of the politician in Congress and we're going to get the fiscal stimulus, but it's going to be too late. And also our health response is too little too late. Today, in terms of the number of the contagion, we look exactly like Italy 2 weeks ago. And we're not doing even the kind of things that Italy is doing. Italy has full quarantine. Everybody, everywhere in the country, 60 million people are locked up at home. We're still in a situation in which Anybody can go anywhere. We have to do what Italy has done. We should have done it 2 weeks ago. Therefore, the contagion in the United States is going to be much worse than in Italy. Mark my word. 2 weeks from now, we can discuss it. Going to be much worse than Italy. So we're not dealing with the health crisis, and we're not dealing with the economic crisis. We're not dealing with the debt crisis, and we're not doing the fiscal stuff. The fiscal stuff should have been passed by Congress 2 weeks ago. It's going to take us another 2 months until we get to 3% of GDP. It's not going to happen before, unfortunately.
Right, Nouriel, I hope that some members of Congress are listening right now. Nouriel Roubini is going to stay with us. Thank you so much for your initial insights there. And to give you an update on what's going on with stocks, we are seeing a rebound in today's session that seems to be holding for now. As we know, things change very, very rapidly. But after that announcement about commercial paper from the Fed, we saw a rebound really take hold here after the third worst day ever on Wall Street yesterday. We're going to bring you more market coverage all day, not just next, right here on Yahoo Finance.
Stocks in the green, but don't hold your breath. I'm Jared Blickery. Welcome back to On the Move. We got the Dow up 581 points. That's 2.87%. But don't forget, in the pre-market overnight, it was up 5%. That was limit up, and it sold off pretty hard. The S&P 500 is up nearly 5%. That's quite a bit more. And the NASDAQ is up just about the same. The Russell 2000 just treading water here. And then we're going to take a look at the VIX, still very elevated, coming off the highest since the greatest financial crisis. That is in the spot market. And then the 10-year T-note yield slightly elevated. It's up 4 basis points, had been up a little bit more earlier, but that's coming off that steep decline that we had yesterday. Finally, the U.S. dollar index up 1.5%. It's been on a tear recently. Got to keep an eye on that. Dollar funding stress around the world has been leading to liquidity pressures in all markets. Here's a NASDAQ heat map just to give you a flavor. Lots of green here. Big change from yesterday. Apple's up 4%, Microsoft up 6%, Amazon up better than 6%, and Alphabet and Facebook up better than 2%. Here's the sectors that we're looking at today. In the lead, it's defensive, utilities, staples, tech, real estate, healthcare, all outperforming. To the downside, consumer discretionary and energy, they are the laggards. We're going to be back in a minute.
We want to check markets one more time for you. We're trading higher right now. This is after news from the Federal Reserve that they are launching once again their commercial paper lending facility. This is to help some businesses get the necessary short-term financing that they might otherwise not be able to get. It also is a backstop for your money market funds, which are not FDIC insured. Nouriel Roubini is still with us. Nouriel, I want to get back to this $1,000 for every citizen in the United States that you talked about. And we've already gotten a response on Twitter from somebody who says, what good would that do? So can you answer that question? What good would sending each of us $1,000 do? And then the second part of it would be, is this a universal basic income argument? And should we be looking at perhaps maybe long-term continuing that?
Well, we need it because right now what's happening is that lots of people are losing jobs, especially those who don't have a formal employment. I mean, if you're formally employed, you cut the payroll tax, your health, but there are dozens of millions of people that are informally employed, partially employed, that are gig workers, contractor, hourly, retired, student, children, and so on and so on. If you offer $1,000 to every single American, first of all, it's highly progressive. If I make only $10,000 a year, it's 10% of my income. If I make $100,000, it's only 1% of my income. Secondly, if I'm a household of four, husband, wife, two children, I get $4,000 also for my children. And you cannot do something only targeted. Yes, we'll do targeted help to those who are sick, to those who are unemployed, to those that have trouble. But we have also provide money to everybody because we have no idea who is the gig worker that worked for a restaurant or for a hotel or for any service that right now has zero income. So we have to use $1,000 for everybody. Just transfer it to their bank account, to their checking account, to their Venmo, to PayPal, whatever not, and you provide immediately income for people that don't have any. Today, 40% of American households, based on the Fed number, have less than $400 of liquid cash to deal with emergency. 40% of households, less than $400. These people are not going to have even money to buy food once they lose their jobs. So you have to do something emergency. You cannot just try to do something exactly targeted. It's going to take us months to figure out who is supposed to be getting what and so on. You do something across the board for everybody, is progressive. You could maybe exclude the top 10% of the population that is rich, but it doesn't matter. If you exclude the top 10%, you save yourself only $35 billion out of 350. And 350 is only 1.5% of GDP. I'm expecting a stimulus that has to be more like 3% of GDP, closer to 600-700 billion. And then you're using the target, the support, the need for the targeted one. So you do both across the board and targeted. Is this universal basic income? Not really, because it's temporary. The idea of universal basic income, you give everybody something every month for all their lives. This is too expensive. Right. Even for 1 month, it's going to cost us $350 billion. If it was done for a year, it would cost us $3.5 trillion. Of course, we cannot afford it, but we can do it on a temporary basis because right now there is a severe economic crisis driven by a totally exogenous shock. If and whether in the future we deserve, we need, and we can afford a universal basic income is another story for when we're going to get out of this financial crisis. But that's separately. This is temporary. UBI instead is permanent.
So I want to mention two headlines that I saw this morning. One was from a Marist poll that said about 18% of Americans, and this survey was done in the last couple of weeks, about 18% of Americans say they have already had their hours reduced or been let go because of coronavirus. And then there was another headline that apparently The Information, which is a tech news source, said that Facebook is planning $1,000 bonuses to help employees during this crisis. So what those headlines say to me is that if we don't have a plan like you're discussing, and as you painted earlier, the likelihood of us actually getting that until it's too late is pretty high, that we're not going to get it until it's too late. What kind of income inequality increase are we going to see as a result of this virus?
Well, if we don't do it, we literally going to have riots in the streets and people going to the supermarket and literally taking over everything and stealing it because people are going to start starving. There are tons of people I know in New York, everybody that is in hotel business or in a restaurant or in a bar or in the gig economy, they tell me they have no income. their income has collapsed to zero. And as I said, almost half of Americans have less than $400 of liquid cash to deal with an emergency, $400. So either you give $1,000, and that's not even sufficient. You're going to have to do more targeted for the people who deserve it. But if you don't start with $1,000, you're going to have riots in the streets and people going and taking over every store. We're going to have violence in the street in the next few weeks. That's what's going to happen.
Wow. Noriel, it's Julia again. It's certainly a dire picture. And again, like the likelihood of the $1,000 going through, if that doesn't happen, the consequences, as you just highlighted there, and answering Julie's question, are severe. I guess my question is, what role can even the private sector play to help mitigate some of these? What do you think they can do?
Well, you know, the Facebooks of the world can keep their employees on payroll at full pay, even if they don't work or they work from home. They can give them $1,000. So if you're the top 5% of corporate America, highly profitable, highly rich, highly cash full, you can help them. You can even afford having a collapse of your revenue for 3 months and paying everybody. But if you are any other firm that is medium size or smaller size that has a collapse of your revenues of, say, 50%, let alone more, you have a dilemma. If you pay the workers in full, you're going to go bankrupt. And if you don't pay them and you furlough them and they don't get this support from the government, if you don't have unemployment insurance, and most people are not formally employed, and therefore they're not going to qualify for unemployment insurance, then you're going to have people literally starving. So you have a hit to the income. Either the hit is taken by the workers, in which case they starve, or is taken by the firms that pay them full salary and they don't work, in which case the firms go bankrupt, or you share the pain. How do you do the risk sharing? The worker doesn't get full pay. Maybe they get 70% of pay. Some of it, the rest of it is paid by the firm, and some of it is paid by the government. So you do a risk sharing between the firm, the worker, and the government. That's how you absorb the shock so that neither the worker, nor the firm, nor the government goes bankrupt. That's what you need to do.
Noriel Rubina, professor of economics at NYU Stern, we appreciate your insight here on The Move.
Good talking with you today.
Well, as we've been talking about, the Federal Reserve slashed interest rates to near zero late Sunday night in an emergency move to curb the economic impact from the coronavirus. And also, it just announced a little while ago a new commercial paper lending facility, renewing a tool it had used during the financial crisis. Here to discuss all of this is Arkansas Congressman French Hill. Congressman, thank you so much for joining us. It's good to see you again. I know you were on the House Financial Services Committee, so you have some thoughts on the Fed, I would imagine. Hopefully you're still with us there. If you are, tell us what you think about this latest move by the Fed regarding commercial paper.
Well, thanks for having me this morning. It's another important step. The Fed's cutting rates to zero was, of course, a good insurance policy. But what we need is to make sure that we have money flowing through the economy. The commercial paper facility is a good idea. Also today, Treasury and the Fed released $10 billion from the Exchange Stabilization Fund. That will also be an important step for liquidity in the markets today. And the Fed's active by increasing its repurchase agreement commitment to $500 billion. That, too, frees up capital throughout the banking system.
Congressman, I'm curious. Tom Cotton, the senator from Arkansas, has said that the government should be sending at least middle-income to low-income folk $1,000. Mitt Romney has said send $1,000. There are economists, we just heard from Noriel Rubina, who said everyone in the country should get $1,000. Should Congress do this?
Well, I think we need to make sure that we put money in the pockets of families. We did the public health money with the $8 billion appropriation. The House passed and the Senate will pass this afternoon money that makes sure that there's funding for people who are quarantined, funding for people who have their kids out of school that they're taking care of. That was an important step. Now I think what's important is getting money directly to businesses impacted. A lot of concern in my district about people in the hospitality business, the restaurant business. I think we should make sure that the SBA doesn't just have more money, but that they can extend their guarantee up to $500,000.
Sir?
Yes.
If I work at a restaurant and I'm laid off, how does a Small Business Administration loan help me when the cities have ordered the restaurants to be shut?
Let me tell you.
But listen, because Mario Rubini is saying put money into the pocket of the person who can't work for the next month to 2 months. Well, New York City, San Francisco, and perhaps the rest of the country soon.
Right. Well, that's exactly what I'm talking about, which is I spoke to restaurant owners last night who are paying all their employees, that are not laying them off. And that's why it's important that they get up to 90 days or longer of very low cost money from their bank or from the SBA, so that they have the funding, unsecured funding, to keep their staff in place because they have no revenue. That's an absolute important component of this. That's not to say that people can debate direct money through an appropriation to people. I'm simply arguing that we need to protect our airlines and get capital there so they can continue to employ people. And the best way in most places I know is the local bank can help that restaurant keep funded, keep staff in place during this period of uncertainty over the next month or two.
Congressman, we talked to one of your colleagues on the other side of the aisle at the top of the program, Don Beyer of Virginia, and I'll ask you the same thing I asked him, which is that in a partisan Washington, can you all get something done quickly? Because the aid is needed, whether you are talking about the individual who was laid off from a restaurant or an airline, that aid is needed right now. So every day that passes with Congress not taking action means more pain for people.
Well, we took action within just a few hours on an $8 billion appropriation for the public health aspects of the emergency. We passed in a couple of days money that goes directly to families for quarantine, for child care, for expanded unemployment coverage for everyone who's unemployed. If you were laid off last week, you can apply for expanded unemployment insurance if the Senate passes that bill today. All this has been done in a very bipartisan way. My friend Don Beyer is a great entrepreneur in Northern Virginia. He knows the importance of having good employee relations and keeping employees in place. And that's exactly what I think these facilities will do. It's not about Wall Street, it's about Main Street.
So if it's about Main Street, would you tie those Small Business Administration loans to small businesses, make them contingent on their passing that money to their employees? Because listen, it's a wonderful thing companies are doing, paying people during this period. There's no guarantee that they're not going to do it. So would you make it a requirement? Because we didn't require the banks to lend money when Treasury bailed out the banks 12 years ago.
Yeah, Adam, it's a good question. I think that if I was in business for 40 years before I've been in Congress for 5 years, the most important people and most important assets I had in my business are my employees. So of course I want to keep them stable to be able to serve customers when the end of this public health crisis comes to a conclusion.
Would you require the Small Business Administration loan be contingent on the owner getting the loan saying, I will continue to pay? Look, I washed dishes at a diner in Old Orchard Beach, Maine when I was a teenager. For last hired, first fired, right? Would you make it contingent?
Yeah. Well, I think you could. I think the purpose of the money would be to keep that restaurant open and functioning, pay rent, pay employees, pay all the expenses they have, keep food coming in, because most restaurants I know here, for example, are running a takeout business now in order to try to keep some revenue coming in, keep their cooks occupied. So I think the fastest way we need to take action is to let our banks serve our small businesses, and we do that by expanding the U.S. government guarantee on express loans and loans through preferred lenders at SBA. That's the way to get cash right now, overnight, into the hands of businesses all across this country.
So, Congressman, we've been talking about what Congress can do in all of this. I'm curious what more you might want to see. Oh, excuse me. We're going to actually go to President Trump right now, who's giving a press conference. Congressman French Hill, thank you.
Progress being made. And I appreciate you all joining us. Last night, the FDA announced groundbreaking new policies to further increase testing, very substantially so. All states can now authorize tests developed and used within their borders in addition to the FDA. So the states are very much involved. They have been involved from the beginning, but we're stepping it up as much as we can, and the testing procedures are going well. And within a short period of time, all of the private labs will kick in. This has never been done before, and it's going to be something very I think it's going to be incredible if it's done properly. And these are great companies. These are among the greatest companies in the world, actually. So the state's going to be dealing through themselves and with local government, local physicians, local everybody. They're also dealing with us. But we have a tremendous testing capacity. Today, we're also announcing a dramatic expansion of our Medicare telehealth services. Medicare patients can now visit any doctor by phone or video conference at no additional cost, including with commonly used services like FaceTime and Skype, a historic breakthrough. This has not been done before either. In addition, states have the authority to cover telehealth services for their medical patients. And by doing this, the patient is not seeing the doctor per se, but they're seeing the doctor, so there's no getting close. During this time, we will not enforce applicable HIPAA penalties so that doctors can greatly expand care for their patients using telehealth, so the penalties won't be enforced. We encourage everyone to maximize use of telehealth to limit exposure to the virus. It's been a very successful method of communication, but never used on a scale like we're going to use at telehealth. And you'll be able to also better maintain hospital capacity by doing this. Earlier this morning, I spoke with executives from America's fast food industry, Wendy's, McDonald's, all of the big ones, Burger King, and they were great. We're talking about the pickups in light of yesterday's guidance you heard. To avoid eating or drinking at bars, restaurants, or public food courts, we discussed the important role that the drive-through pickup and delivery service can play in the weeks ahead. So that's happening, and they have been fantastic. They have been absolutely fantastic, and they've been doing it already, but they're keeping it open, and smaller staffs, very capable people and very capable companies, and they're doing it, pickups. Our guidance yesterday urges Americans to take action for 15 days to help stem the outbreak. So it's a 15-day period. I guess now would say it's a 14-day period. It's 15 days from yesterday, and we're asking everyone to work at home if possible, postpone unnecessary travel, and limit social gatherings to no more than 10 people. By making shared sacrifices and temporary changes, we can protect the health of our people, and we can protect our economy, because I think our economy will come back very rapidly. So it's 15 days from yesterday. We'll see what happens after that. If we do this right, our country and the world, frankly, but our country can be rolling again pretty quickly, We have to fight that invisible enemy that, I guess, unknown, but we're getting to know it a lot better. Today, the Senate has taken up coronavirus legislation that includes free testing for those who need it, as well as paid sick leave and family medical leave for workers affected by the virus. We're also committed to getting small businesses the support that they need. In fact, one of the things we talked about with the fast food operations, we spoke to the chairman and CEOs of all of the companies, but one of the things we discussed is exactly that, getting small businesses support and flexibility that they need for themselves and for their workers, and that's being worked on right now. At my direction, Secretary Mnuchin is meeting today with senators on additional stimulus packages. I can tell you he was meeting with them late until the night last night, and for a big part of the day yesterday, and tremendous things are happening. There's great spirit, tremendous spirit, and I can say that for Republicans and Democrats. I can say that with respect to Governor Cuomo, we had a great talk this morning. We're both doing a really good job, and we're coordinating it. And we agree, different states need different things, and we agree on that 100%. But we had a very good talk, and I think we're right down the same track, and it's going to be very successful. New York has a pretty big problem. I guess would be the #1 hot spot. That's no fault of anybody's. It's just the way it is. But we're working very closely together. We're also getting FEMA very much involved. They've been involved, but now we're getting them to a different level. And we'll have everything ready. We're dealing with the Army Corps of Engineers should that be necessary. We have them working in some cases, on standby in other cases. But my conversation with Andrew Cuomo was a very, very productive one and a very good one. I appreciate that. We're giving relief to affected industries and small businesses, and we're ensuring that we emerge from this challenge with the prosperous and growing economy, because that's what's going to happen. It's going to pop. One day we'll be standing possibly up here. We'll say, well, we won. And we're going to say that. Sure as you're sitting there, we're going to say that. And we're going to win. And I think we're going to win faster than people think, I hope. Later today, I'll meet with the leaders from the tourism industry, as well as industrial supply retailers and wholesalers, to discuss their critical roles. As you know, I met with the department store people, all of the retailers, the big ones, including Walmart and others. And it was a great meeting. They're stocking up their stores like they've never stocked them before. We're trying to get people to actually buy less, if that's possible, buy less. Don't take everything, just buy what you need for a while. They're going to stay open all hours of the day, and they've been fantastic. We're taking aggressive action now as one nation and one family so that America can rebound stronger, frankly, stronger than ever before. And we recognize that while many American workers can work from home, many others cannot. Many of our healthcare providers, first responders, and men and women in the food service and manufacturing are showing that they're showing up and standing up to provide us with the goods and services we need. So we want people to stay home where they can, but in many cases, when you talk about food service and manufacturing, certain items in particular, they're going in and they're practicing all of the safety rules and regulations that we talk about. So with that, I'd like to just introduce our Trade Vice President, Mike Pence. He'll say a few words, and then I'll make some other introductions. Thank you very much.
Thank you, Mr. President, and good morning. It should be very clear to the American people that President Trump has initiated not only a whole-of-government approach, but a whole-of-America approach. And the President's interaction even today and through the course of this day with leaders in industry around the country reflects that we're not only bringing the full weight of the federal government to bear, but the full weight of the American economy. And I know I speak on behalf of the President when I say how inspired we are at the way the American people have stepped up and the way that American businesses, large and small, have stepped up. It's truly been inspiring. Our task force met this morning. We continue to focus on President Trump's priorities of testing, prevention, and supplies. And in that category, I'm pleased to report that while testing is available in all 50 states, as the President just indicated, through the swift action of the FDA at the encouragement of governors around the country, now state health authorities can authorize labs in their state and expand existing testing capabilities. But also in connection with the FDA's action, which you'll hear more about in a moment, we now have continued to expand the public and private partnership that the President forged with vast commercial laboratories around the country, increasing access to the high-volume, high-throughput coronavirus testing that is greatly expanding access even as we speak. Also, our task force received a report this morning on the progress that the U.S. Public Health Service and FEMA are making, working closely with state governments and also partners in the private sector like CVS, Target, Walgreens, and Walmart to expand remote testing sites around the country. And we'll have a full report later this week as those come online. It's important the American people understand that testing is happening all over the country. But all of our health experts wanted me to tell the American people, you don't need the results of testing to know what you should do. And President Trump's 15-day coronavirus guidelines are advice for every American in every community. They're the result of the best guidance of CDC and our health experts. And as the President said, we continue to urge every American over the next 15 days to put into practice the principles in the President's coronavirus guidelines. By every American practicing these principles, we believe that we can slow the spread of the coronavirus. In fact, our experts have told our task force that if every American acts on the President's coronavirus guidelines, we could see a substantial reduction in the spread of the coronavirus. But as the President said, it will take all of us to do it. And so if you feel sick, stay home. If someone in your house tests positive, keep the entire household home. Especially if you're a person with an underlying health condition, we urge you to stay home and practice social distancing from people. No social gatherings of more than 10 people. Use drive-through, as the President discussed with leaders in the industry today, and every American, especially practicing common sense and good hygiene. For the American people as a whole, the risk of serious illness remains low, but we're asking every American to partner with us in this effort to slow the spread of the virus, and especially to be mindful of seniors or others with serious underlying health conditions for whom the threat of the coronavirus can be very significant and very real. As I said, the President has continued to push our task force to bring a whole of government, a whole of America approach, and we continue to be inspired the way our nation's governors and nation's businesses are responding. We spoke just yesterday with the leaders of every broadcast network in America that will soon be unveiling a public service campaign using CDC guidelines. And specifically, as we work on the issue of supplies, meetings yesterday with Department of Defense officials about excess supplies. The President and I will be meeting today to speak about the supply chain for hospitals. We would make one specific request, and that is we would urge construction companies to donate their inventory of N95 masks to your local hospital and forego additional orders of those industrial masks. Because of what the President asked to be included in legislation moving through the Congress today, those industrial masks that they use on construction sites are perfectly acceptable for healthcare workers to be protected from a respiratory disease. But we're asking construction companies that our President knows very well from his background, we're asking them to donate their N95 masks to their local hospitals and also forego making additional orders. At the President's direction, we will continue to do whatever it takes. We'll continue to marshal the best of the American people, the best of all the people behind me, the people behind them, our state and local officials, and we will get through this, and we will get through this together. Thank you, Mr. President.
I want to thank Chad Wolf and Homeland Security. The job they did at the airports was really incredible. They screened thousands and thousands of people. O'Hare got backed up a little bit, but they got him out. But everybody was screened and screened very carefully. They didn't want to rush it. I think it was 13 airports, and it was an incredible thing. Then they had a big surge also from the UK and Ireland, and that went very smoothly. But they did a fantastic job. They worked long hours, and they did a fantastic job. I'd like to introduce Steve Mnuchin, and then I'm going to ask Steve to leave because he's going to the Hill. He's been working very hard with the Senate and with the House on a very, very big, bold package. It's going to be big and it's going to be bold, and the level, again, of enthusiasm to get something done, I don't think I've ever seen anything quite like it. So, Steve Mnuchin, please.
Thank you, Mr. President. I'd like to announce some very significant actions that the President has approved today. The first I would say is earlier today, I sent a letter to Fed Chairman Powell approving his request to use 13.3. And what that will do is the Fed will be setting up a special purpose vehicle, which the Treasury will invest $10 billion in from one of our funds. That will enable the Fed to guarantee the purchase of A1, P1 commercial paper going forward. That is a $1 trillion market and is critical to American workers, it's critical to American business, and it's critical to American savers who have a lot of that money in money market funds. So we heard loud and clear there were liquidity issues. This is very significant and will create, I don't think we'll need to use it all, but we have the ability to have the Fed purchase up to $1 trillion of commercial paper as needed. That has already created significant stability in the market today. The second thing I would say is, we've previously talked about deferring IRS payments. The President earlier this morning authorized me to announce this program. I have previously announced we would defer $200 billion. The President suggested we increase that to $300 billion, which we will be doing. Now, let me just be clear on the specifics. We encourage those Americans who can file their taxes to continue to file their taxes on April 15th, because for many Americans, you will get tax refunds, and we don't want you to lose out on those tax refunds. We want you to make sure you get them. Many people do this electronically, which is easy for them and easy for the IRS. If you owe a payment to the IRS, you can defer up to $1 million as an individual. And the reason why we're doing $1 million is that covers lots of pass-throughs and small businesses, and $10 million to corporations, interest-free and penalty-free for 90 days. All you have to do is file your taxes. You'll automatically not get charged interest and penalties. Now, of course, any American has the right to extend their taxes. We're not taking that right, but the president has asked us to go up to $300 billion. That's also an enormous amount of liquidity in the system. The third thing is the president and I worked on a very significant economic stimulus plan. Thank you for being available last night and throughout this morning, and I will be presenting that to the Republicans in the Senate this morning, and also discussing that with the House. We look forward to having bipartisan support. We're now working with the Senate to pass this legislation very quickly, and these will be payments to small businesses. We've talked about loan guarantees to critical industries such as airlines and hotels, and we've also talked about a stimulus package to the American worker. You can think of this as something like business interruption payments for the American workers. Thank you.
Do you have any questions for the Secretary of the Treasury?
When you say a stimulus package for American workers, do you mean direct payments to Americans, or are you talking about a payroll tax holiday?
Although the president likes the idea of the payroll tax holiday, I will tell you what we've heard from many people, and the president has said we can consider this. The payroll tax holiday would get people money over the next 6 to 8 months. We're looking at sending checks to Americans immediately. And what we've heard from hardworking Americans, many companies have now shut down, whether it's bars or restaurants. Americans need cash now, and the president wants to get cash now. And I mean now, in the next 2 weeks.
How much?
I will be previewing that with the Republicans. There's some numbers out there. They may be a little bit bigger than what's in the press.
Go ahead, please. Please, wait, please.
What help are you going to give to airlines specifically?
I've had discussions with all the airline CEOs this week. The airline CEOs have had conversations with the Senate and the House. As the president said, I was up with a subset of the Republican senators last night. I've discussed that with them. I think, as you know, this is worse than 9/11. For the airline industry, this is, they are almost ground to a halt. The president wants to make sure that although we don't want people to travel unless it's critical, we want to maintain for critical travel the right to have domestic travel.
$50 billion, is that enough?
I'm not going to comment on the specifics. I will tell you we're very focused. There's a lot of workers. This is strategically important to us, and we'll be working with Congress on this.
The airline industry will be in good shape. Yeah, go ahead, please.
There's been talk about $1,000 checks to every American, increasing support among Republicans and some Democrats for that. Would you support that going to everyone, or would you support some sort of income restriction on who gets a check?
Well, I think it's clear we don't need to send people who make $1 million a year checks, okay? But that's one of the ideas we like. We're going to preview that today, and then we'll be talking about details afterwards.
Well, I think we're going to do something that gets money to them as quickly as possible. That may not be an accurate way of doing it, because obviously some people shouldn't be getting checks for $1,000. And we'll have a pretty good idea by the end of the day what we're going to be doing.
Mr. Secretary,
Yeah, John.
can you tell how would the mechanics of this work? I mean, we've been talking about a payroll tax holiday. Some $500 billion worth was floated to me today. But so how would this idea of sending people a check work? Would that be sort of an advance on what they would pay in payroll tax?
Again, we want to make sure Americans get money in their pockets quickly. We want to make sure small business owners have access to funds. We want to make sure that hotels, airlines, we have an entire package. We'll be laying out those details later today.
Yeah, I have to say this. There are 4 different ways you can do it. That's okay. 4, you can hear me well enough, I imagine.
Sorry.
Okay. People at home, you're right. Those are very important people, come to think of it, especially your people. Look, we have 4 or 5 ways we can do it, 4 ways in particular. I think there's a 5th possibility, but there are some very good ways of getting the money out and getting it out quickly. Payroll tax is one way, but it does come over a period of months, many months, and we want to do something much faster than that. So I think we have ways of getting money out pretty quickly and very accurately. Okay?
Can you talk about the timeline, please? How quickly do you think you can get this done? And
The president has instructed me we have to do this now. So this is now.
By the end of the week?
We are going to work with the Senate, who's in session right now, actively. We will continue to have conversations with the House. I've already spoken to Speaker Pelosi once today. This is stuff that needs to be done now. The president has instructed me that this is no fault to American workers. For medical reasons, we are shutting down parts of this economy, and we're going to use all the tools we have, as I've said, and what tools we don't have, we're going back to Congress. I got to go back to
$850 billion. To those who might be concerned that's too expensive?
We don't want to talk about it, but it's a substantial number. We're going big. The expression, we could do it 2 ways. We could keep going back every day or every week. We're going big, and that's where Mitch McConnell, that's the way he wants to go. That's the way I want to go. I think we want to get it done and have a big infusion as opposed to going through little meetings every couple of days. We don't want to do it that way. We want to go big, go solid. The country is very strong. We've never been so strong, and that's what we're going to be doing. We don't want, with this invisible enemy, we don't want airlines going out of business. We don't want people losing their jobs or not having money to live when they were doing very well just 4 weeks ago. So we're going big, and that's the way it'll be, and that's the way everybody seems to like it on the Hill. Any other questions for Steve?
Sorry, in addition to airlines and hotels, you had a call with restaurants today. Was any type of emergency assistance discussed on that call? A lot of restaurants have to close. Even if they are doing delivery, they're not making as much money as they would with a full house.
Well, let me make 2 comments on the restaurants, and the president understands this. This was emphasized this morning. First of all, we want to make sure that the states allow the drive-through portion of these fast foods to stay open, particularly in a time period where we're telling people don't go to restaurants. These companies feed a big part of America, and I expect they're going to feed a bigger part of America. The second thing they asked me to emphasize, I wasn't going to do it now, but as long as you asked, many of these companies have apps. You can order ahead of time. That way, when you get there, it's as simple as they'll have it packed. They can give it to you with social distancing, and it'll be very fast. So we expect that they will be able to feed a large part of the population. And in regards to support, I will say a lot of these businesses are small businesses, are companies, franchisees, 500 or less, and we have a specific program we'll be unveiling that helps all businesses, small and medium-sized businesses of 500 and less.
Secretary, real quick question regarding Marriott Corporation. It announced that it is furloughing thousands of individuals because of the impacts of the coronavirus. Will your legislation help those individuals?
I hope so. That's one of the reasons why we got to act very quickly, because we understand whether it's the airlines, hotels, for good reasons, to protect the United States on medical issues. These businesses are shut down, and the president wants to make sure, as I've said, we will use all the powers we have. You saw this today, $1 trillion of potential liquidity into the market, and the powers we don't have, we're going to Congress. And I will say there's a lot of bipartisan support for these issues. So I'm going to apologize because I have to go deal with some other things, if that's okay, Mr. President.
Thanks.
Oh, yeah, I do want to comment on this, okay? We absolutely believe in keeping the markets open, okay? Americans need to know they have access to their money. After September 11th, the only reason why the markets were closed was because the technology was disrupted. I've been on the phone with the major banks, with the New York Stock Exchange. Everybody wants to keep it open. We may get to a point where we shorten the hours if that's something they need to do, but Americans should know that we are going to do everything to make sure that they have access to their money at their banks, to the money in their 401ks, and to the money in stocks. So I want to just be very clear, we intend to keep the markets open.
And the banks are record-setting strong, so we have that, which is a much different event than what we had not so long ago.
Mr.
John, go ahead.
Mr. President, you mentioned the Army Corps of Engineers. I know that you've had a conversation with Governor Cuomo. He believes that New York is going to run out of hospital beds. Are you prepared to mobilize the Army Corps
We've been asked to
increase capacity?
Yes, we're starting to. We're starting the process, and it's a process. We hope it's not going to be necessary, but it could be necessary. The state is working on it very hard themselves, but we'll probably supplement what they're doing.
And given that many of the precursors for our pharmaceuticals come from China, and there have been supply disruption, that supply chain has been broken to some degree. Do you expect that we could run into a shortage of prescription drugs?
No, I don't see that at all, and I think China has every incentive to make sure that things work well. China wants to make sure that things work very well. They have every incentive to do so. John?
Mr. President, the governor of Ohio has called off the election that was supposed to happen today, the primary election. Do you agree with that decision, and what steps are you taking to ensure that elections going forward, if this pandemic continues, that elections will be able to happen, including, of course, the big one in the fall?
Well, the governor of Ohio is doing a great job. He called that off, and we'll see what happens. There's a court case, and it hasn't been fully determined yet. But if he called it off, I could understand that because, he's definitely somebody that knows what he's doing. We'll be seeing what very soon. They're going by the rule of 10 as opposed to 50, and that's pretty tough. I would say probably you could violate that if you wanted to for an election. I just think an election is a very special thing. He chose a different date, I think a date sometime in June. But that would be a decision that would be made by him. He felt it was necessary. The courts somebody's challenging it, so the courts will ultimately decide.
Well, what are you doing to ensure that further elections, if we're still in this situation a month from now, 2 months from now,
what I'm doing, John, is very simple. We're getting rid of this virus. That's what we're doing. That's the best thing we can do. By the way, for the markets, for everything, it's very simple solution. We want to get rid of it. We want to have as few deaths as possible. This is a horrible thing. You look at what's going on with Italy. We don't want to be in a position like that, but a much larger, because we're a much larger country. We don't want to be there. And I think we've done really well. I think we've done well. I think the states have done well. We're all working together. The best thing we can do is get rid of the virus. Once that's gone, it's going to pop back like nobody's ever seen before. That's my opinion, but I think it'll pop back like nobody's ever seen before. Please.
Mr. President, just to follow up on John's question, specifically how many new hospital facilities could the Army Corps of Engineers build? And also, what specific measures are you taking to try to increase the number of ventilators in the stockpile?
Right. We've ordered massive numbers of ventilators. We have, by any normal standards, we have a lot of respirators, ventilators. We have tremendous amounts of equipment, but compared to what we're talking about here, this has never been done before. And yesterday I gave the governors the right to go order directly if they want, if they feel they can do it faster than going through the federal government. Now, we've knocked out all of the bureaucracy. It's very direct, but it's still always faster to order directly. And I gave them, that was totally misinterpreted by the New York Times on purpose, unfortunately. But it's very important. Yes, Mike?
I could amplify.
Yeah, please.
Yeah, thank you. Our president directed us to work with the Department of Defense. There's two ways that DOD can be helpful in terms of expanding medical capacity. I know the governor of New York has asked us to look at the Army Corps of Engineers, which could perhaps renovate existing buildings. But the president also has us inventorying what you all would understand as field hospitals or MASH hospitals that can be deployed very quickly. We spoke with Governor Inslee yesterday in Washington State. We have resources in that part of the country that we could move. And as governors make these requests, we will process them, bring them to the president. But there are two different lanes that DOD can provide, in addition to many medical supplies to augment our national reserves. And the president has tasked us to evaluate, make available, and to consider every request from governors for either field hospitals, expanding facilities, or the Army Corps of Engineers that could retrofit existing buildings.
The Army Corps is very prepared to do, as we say, and we're looking at where it's going. But and they do call them MASH hospitals, but the field hospitals go up very quickly. We have them. We have all of this equipment in stock, and we're looking at different sites in a few different locations. And we're not going to need them in West Virginia, where so far I guess they have none. Still none? Still none, right? West Virginia. Big Jim, the governor's, he must be doing a good job.
Or is that just reported?
That's what's reported.
No, but is that a reporting issue, or is that they have no cases?
Well, that's all that, I just see West Virginia is the only one that has no cases. So obviously, that's being treated differently than in New York or California, different parts of California. I do say this, though, the Army Corps of Engineers is ready, willing, and able. We have to give them the go-ahead if we find that it's going to be necessary. We think we can have quite a few units up very rapidly. I'm going to work with Governor Cuomo. I'm going to work with a number of the governors. Governor Newsom has been very generous in his words, and I'm being generous to him too, because we're all working together very well. And I think a lot of very positive things have taken place. We're talking to California about different sites, but we can have a lot of units up fairly quickly if we think we need them. I think what I'll do is I might ask Seema to say a few words on the telehealth, and then we can get back to this, please. Seema?
Thank you, Mr. President. And as the President announced earlier, we are doing a dramatic expansion of what's known as telehealth for our 62 million Medicare beneficiaries who are amongst the most vulnerable to the coronavirus. And we're acting in accord with the appropriations bill that was signed on March 6th, as well as the President's emergency declaration last week. And this action is a part of our broader effort to ensure that government requirements, rules, and regulations don't get in the way of patient care during an emergency. And today's announcement builds on the significant progress that the President has already made over the past 3 years around telehealth services. And while we have allowed for virtual check-ins, full telehealth benefits have been restricted to those living in rural areas, established patients, and just for those brief visits. But no longer, Medicare beneficiaries across the nation, no matter where they live, will now be able to receive a wide range of services via telehealth without ever having to leave home. And these services can also be provided in a variety of settings, including nursing homes, hospital outpatient departments, and more. And thanks to the leadership of HHS, we'll also be temporarily relaxing certain HIPAA requirements so that doctors can provide telehealth with their own phones, and we'll be using enforcement discretion when it comes to collecting copays so that cost won't be a barrier. This is a part of our larger efforts around mitigation, and as we are encouraging Americans to stay home whenever possible, we don't want our Medicare policies getting in the way. And so consider the implications of this. Perhaps an elderly patient with diabetes needs a routine checkup, and this has nothing to do with the coronavirus. And so with our new telehealth benefits, this person who's not really, who's at risk for the coronavirus doesn't have to venture outside their home. They can talk to their doctor via Skype, and they don't have to risk exposure to the virus, and they can receive that care from the safety of their own home. It could be another Medicare recipient who's experiencing mild flu-like symptoms, and instead of leaving the house and sitting in a waiting room full of other vulnerable people, they can also receive advice from their doctor from their home. And this shift is very important for clinicians and providers who over the coming weeks will face considerable strain on their time and resources. And now Medicare patients who don't absolutely need to come in to an office won't have to, and this allows the healthcare system to prioritize for care for those that are that have more needs or in dire need, and preserves protective equipment as well. State Medicaid agencies can also provide telehealth services without federal approval, and so we're asking all states to make this available as well. And we've also asked private insurance companies to expand their telehealth benefits and make it clear to their providers and their members what they cover. As our nation seeks to balance the twin imperatives of getting Americans the care that they need during this outbreak and limiting the spread of the virus, the impact of this historic action simply cannot be overstated. In an emergency, those on the front line shouldn't have to worry about federal rules and red tape, hamstringing them when they need flexibility above all else. And we're doing everything in our power to make sure that that doesn't happen. I also just want to briefly mention that because of the President's emergency declaration, we do have the ability to provide a lot of Medicaid waivers, and Florida was the first state to be approved. We were able to do that in a matter of days. Thank you.
Any questions, please?
Where do senior citizens go for instructions on how to do the telehealth?
They should call their doctor's office, and their doctor's office can tell them how to do that. Also, there may be some of our Medicare members that may not have access to equipment, so we're asking family members to help with this, but also respecting the requirements around social distancing, and if any of those family members or neighbors have symptoms, they should obviously stay
Will
away.
you be posting numbers also?
That's correct,
That might
exactly.
be the easiest way to do it.
Yes.
If you post in ads, if you post some numbers.
And they can also call our 1-800 Medicare number, and they can also get information. Those phone lines are open.
Thank you. Thank you very much. Admiral, if you'd say a few words about where we're going, and then I'd like to ask Dr. Birx to say a couple of words, but how the system's working.
Well, thank you very much. As we talked about earlier this week, the commercial system is rapidly advancing in the testing capabilities. As of today, our public health laboratories, meaning the CDC and the public health labs, have reported out 31,878 tests, so almost 32,000 tests. The clinical laboratories, the Association of Clinical Laboratories, have reported out about 27,000 tests, and most importantly, of those 27,000 during the cumulative period of time, 8,200 of them were yesterday. This is showing the dramatic ramp as the high throughput comes in. We don't have the numbers this morning from the American Hospital Association, which means all the individual hospital laboratories. We will have that upcoming in the next day or so, and then Ambassador Birx will have this whole process fixed with the legislation that everything will roll up into a common reporting probably by the end of next week. In terms of our drive-through laboratories, again, these are blossoming all over the country by individual states. The ones that we are heavily involved in and really pushing equipment to, we expect over the next few days to begin setting up 47 of these in approximately 12 states. The material is already palletized and being shipped to the locations. Most cities have the specific locations. Some do not, but it's still going to a central receiving. And we know that we'll be deploying at least 140 Commissioned Corps officers. About half of the sites have reported their requirements. About 140 officers will be going. We expect that to go up. So this is going on the way we expected. We did a trial site yesterday with a full mobile unit for drive-through with full PPE. We had a lot of kinks in the system, as you can expect. That's why we do a test before we go out into the field. Don't expect these to be 100% perfect the moment they come. They're going to be adapted to the state and the local situation, but we're very confident that these will add testing to the already very robust healthcare system and commercial system. Thank you, Mr. President.
Thank you very much. Thank you, Admiral. And this has never been done before, and it sets a great roadmap for future. Should we have something like this in the future? I hope we don't. But it's never been done before, and they've done an incredible job. And again, we're working with the states and relying on the states. We have to, because they have, it's point of sale, it's point of sight, and we're in, I think, just about every instance getting along really well with the states. If I could, Dr. Birx, if you could say a couple of words, please.
Great, thank you. Thank you, Mr. President. So I think what you've been hearing from us is to find solutions that are high quality and sustainable based on the frontline workers and governors' requests. And those come in on the governor's call. We've been immediately responsive to those. And that's the level of red tape and bureaucracy that we have removed. I think that point about sustainability and quality is very important because, as the president says, we're creating a roadmap for a different level of functionality for future pandemics. Our flu pandemic preparedness plan was a plan. Now we're seeing where we have to revise, where we have to create new avenues of research, new avenues of work to really ensure that the need of the American people can be reached. We were adamant about having a high-quality test based on our commercial vendors. Over the next few months, you will begin to see that other tests that were utilized around the world were not of the same quality, resulting in false positives and potentially false negatives. These tests were studied and studied by the FDA to really ensure that they are that level of quality, and we've given the states the permission to ensure that same level of quality. Now, I want to just say 1 minute on the testing. Testing should not be used as an assessment of your risk. We are asking every single American, no matter what your generation, from Z and up to X and millennials in between, to really ensure that you're following these guidelines. We hear every night of people who are not in work, moving that time into bars and other areas of large gatherings. If we continue with that process, we will fail in containing this virus. So every single generation has a role to play. We're asking our older generation to stay in their homes. And we're asking the younger generations to support them in social contacting through videos and other Skype-type functions, or just the simple telephone. We're asking the younger generations to stop going out in public places, to bars and restaurants, and spreading asymptomatic virus onto countertops and knobs and grocery stores and grocery carts. I heard an innovation last night and this morning again on the news. I really want to applaud the private sector who are now creating senior-only shopping times. I think that's extraordinary. I think that shows what America brings, and I think other countries will learn from us about how to really protect seniors in this type of way. I'm hoping that carries through to next year when we have our flu epidemic, where we can really have a very different profile of the amount of mortality that we have during flu that we never talk about. Anywhere from 15,000 to 45,000 individuals are lost every year. If we learn how to do this well and sustain some of those core changes, we can change the way respiratory viruses, not only for this, but the future, affect Americans.
It's a big thing.
Doctor,
maybe a couple of questions.
Yeah, so a question on the clinical data. So we've had now roughly 5,000 people test positive. We've had 90 deaths or so. When are we going to know the data of who those people are? Who has been infected, what the ages are, what the pre-existing conditions are, how serious it was, both for those who have been tested positive, but also those who have died?
Well, you are singing my sheet of music. I'm very data-oriented, so thank you for bringing up this issue of data. I really want to applaud HHS. We had a discussion about this several days ago. They've made calls into Seattle and California to really understand that, and also importantly to understand how many of their patients needed ventilators, how many of them needed oxygen support, how many of them needed and what they needed. Could we predict early someone who was going to have a more difficult course? These are all the questions we're asking and answering right now. We did get an early report back from Santa Clara and Seattle. We're digesting it. We just got it this morning. We're looking at that carefully because we think that roadmap is very important to other communities. We have not discussed this with New York yet. We do know from other countries, and that all is available online, that profile. You can see that mortality under 30 is extraordinarily low. The mortality across the board outside of Wuhan is now settling somewhere around 0.7, but that should not be reassuring because it's much higher in people with pre-existing medical conditions, even if young, and people that are older with pre-existing medical conditions. And so we still want every American focused on doing what they can do today to change the course of this pandemic.
Will you commit to making that data public so we will all know?
We're committed not only to making it public, but to have a website that everyone can see in real time.
Dr. Birx, if I could just follow up. You all are signaling a much more aggressive posture toward containment mitigation now. And many states have been very aggressive. But there is a small number of states that have not issued public guidance to their residents. Is it important for the success of the effort that 100% of the states be forward-leaning on this? And if so, Mr. President, what would be your message to those states that have not? Okay.
So that's why the Vice President and the President yesterday issued those critical guidelines. As I said this morning on Fox and Friends, you can look at them as guidelines, you can look at them as requirements, and you can look at them as the president asking every American in every state to follow those. That's why we put them out at the federal level. We wanted to make sure every American knew what they could do today to change the course of this epidemic. I think it's empowering. I think it says all of us have a social responsibility to each other, and that's why we believe that every mayor and every governor should be instituting these guidelines that came from the White House and the President of the United States.
And we've been very tough in those states. I know exactly who you're talking about. We've been very tough in them. Thank you. Please, go ahead.
A follow-up question on the testing. You've been telling us for days now that millions of tests have been sent out. So why have fewer than 60,000 people actually been tested?
I think you will see different numbers this week. You heard just at 8,000. Remember, all of these tests, the high-speed tests, were approved last Friday night, and last Thursday night. I think if I could talk to Thermo Fisher and the other groups that have these platforms out there, do not rely on a pull technology push out those tests. Because we can only make them available, groups have to order them. So we've been talking to Thermo Fisher, one of the key platforms, to push out tests based on need and not wait for orders.
And is that where the issue is, getting the tests out, or is it getting the tests conducted?
That's a great question. I know part of it is getting the test out right now. I think the Admiral and others are working on getting the issues related to getting the test conducted. Obviously, that does take time. He is working on innovative solutions that are creative and sustainable that will be a game changer in testing, but we don't have the data yet. This is a critical comparator. Can you do it yourself? Can you actually sample yourself? These are the kinds of things we're working on right now, and he's getting the data for us.
And the states are actually doing a lot of it. The governors and the states are doing a lot of it, with even our tests. Yeah, go ahead. Go ahead, please.
Okay, thank you. Can you give us a sense of how long these tough new restrictions will need to be in place until we start to see the rate of this virus going down? And also, can you speak to this study that as many as 2.2 million people in the United States could die if there weren't this type of action by the government taken? To what extent did that prompt what we saw yesterday?
I think, models are models, and they're based on input, and they're based on infectiousness without any controls. I can tell you we've never seen that level of infections that modeled up to that 2.2 million in mortality. So we are looking at that. We are having a particularly model meeting tomorrow. I think that's really going to be important. I've dealt with a lot of modelers in my time. They're wonderful people. But they all have their favorite inputs and they all have their favorite integration functions. So we're evaluating all of those so we can integrate and create the best model for the United States based on the best data. And that first set of recommendations you saw were based on what we could do today to prevent anything that looks like that. If I could just say one other thing to the hospitals and dentists out there. Things that don't need to be done over the next 2 weeks, don't get it done. If you're a person with an elective surgery, you don't want to go into a hospital right now. There's a lot of distraction. There's a lot of people doing a lot of other things to save people's lives. So let's all be responsible and cancel things that we can cancel to really free up hospital beds and space. And then let's do everything that we can to ensure that we don't need the ventilators because we protected the people who would have needed to use them.
And are you looking at the possibility of more actions like, for example, limiting travel within the United States? Are you looking
It's possible. It's possible. We'll see how it goes. I think there's been great cooperation with local governments, states. We'll see how it goes. It's going right now pretty well. Yeah, please, go
Can I
ahead.
follow on that, Mr. President,
Please,
very quickly?
yeah.
Just very
Go
quickly.
ahead.
Do you need to invoke the Defense Production Act to get more of those medical supplies to different
Well,
hospitals?
we're able to do that if we have to. Right now, we haven't had to, but it's certainly ready. If I want it, we can do it very quickly. We've studied it very closely over 2 weeks ago, actually. We'll make that decision pretty quickly if we need it. We hope we don't need it. It's a big step.
Need more help from the federal government
Well,
when it comes to those supplies.
You know, when you say
What
the
do to
states,
those governors?
in particular, 3 states need some help. And some states, have 2 people, 3 people, no people, in the case of, again, West Virginia. So we're looking at it very closely. We've taken it apart 15 different ways. It's a very difficult thing to do. It's a very big step. And if we need that step, we'll take it. Okay?
Quick follow-on, Kristen's first question. A lot of people have got travel to places that aren't considered hotspots,
Yeah.
Caribbean, Mexico, that sort of thing, over the next few weeks. Would you recommend that they follow through with those plans?
I would just say enjoy your home stay. I would just say right now, we have to get this problem fixed, and then we'll get back into business really quick. We'll open up our country, we'll open up our society, the world will hopefully open up. We see areas of the world that are that haven't done well, and we see areas that are doing very well. And I would put us in the category of doing very well for a country so big. I think that I would recommend that they just enjoy their living room. John? Yeah, go ahead, please.
What do you say to people who are not heeding these guidelines from the White House? And then also I have a question on asymptomatic people
Sure.
that Dr. Birx.
I'm not happy with those people if they're not. But, you know, those people are being shouted down by other people. They know it. They're being, it's almost like self-policing. People went in, there are a couple of instances, I guess, probably more than a couple, where people are not happy when they see others doing what they're not supposed to be doing. We have to get rid of this. We have to win this war, and ideally quickly, because the longer it takes, it's not a good situation. And I'm not even talking about the economy. I'm talking about the lives of a lot of people. Yeah, please, did you have one?
Will the White House put any restrictions on corporate bonuses for companies that do get bailed out like airlines?
I'm going to ask, I think I'm going to ask Mike, answer that question.
I think it's all a work in progress. What President Trump has made clear to industries around the country is that we're going to do whatever it takes. We understand this is an extraordinary moment in the life of our nation. It's the reason why the President brought in leaders of the financial sector, airline industry. He'll meet with all additional industry leaders today in tourism and hospitality. But he has tasked the Secretary of the Treasury to work with members of Congress in both parties to make sure that we construct the kind of economic support that will allow those industries to weather the period of the coronavirus and then to come back stronger than ever before.
We've had such incredible, I don't know, it's almost the word spirit is the best word. It's like a spirit. The banks have come in, and the banks are doing things that they would have never done. They're working on extensions and lots of things that they wouldn't have done. Co-pays with regard to the insurance companies. I mean, for them to be doing what they're doing, you know all about the co-pays. They would have never done that, and they did it. They were in my office. They, I would say, the 11 biggest in this country. I guess probably the 11 biggest in the world, the big ones, all the big ones, and they did things on copay that nobody would be doing, that they wouldn't have done in a million years, but they're doing it. There's a great spirit going on right now in the country. So you want to, yes, please.
Dr. Fauci, you've said you like being accused of overreacting because that is an indication we may be doing things necessary to beat this, bend the curve. How long do you think it will take for you to be confident that yes, we're bending the curve, or no, we're not?
You know, I can't give you a firm number on that because the dynamics of outbreaks in some respects are predictable historically. They do this and that. We don't know because this is really unprecedented. I mean, of all the outbreaks that I've been involved with over the last at least 36 years and then going historically back, we've never had a situation where the mobilization of all the different components, travel restrictions, internal containment, mitigation, financial assistance, public health assistance, testing. So we don't really know. But the one thing I do know that if you look at models with all of their vicissitudes of models, is that when you have input into the kinds of mitigations and things that we're doing, we're going to see a hump instead of a peak. I would be really surprised if all the things that we're doing, and this is really a comprehensive approach. I was struck as I was listening to everyone make their presentations that, you know, I'm a scientist, I'm a health person, and I'm a physician who sees patients. So I look at it from one particular standpoint. But what I'm being impressed by is that this is really a comprehensive thing that has multiple components to it. All of them got to succeed if we're going to get to that end point that I've described multiple times from this podium. So I hope that if everyone does their job, we're going to be able to give you a number and say, you know, we've seen that inflection and we're coming down. I would hesitate to do it now, to be honest with you, because it might be misleading, and I don't want to be misleading. I just want to say one other thing, because I heard Dr. Birx say it, and I think we need to say it over and over again. When I was young, a long time ago, I felt that I was invulnerable, the way I think many of us feel we're invulnerable. And when we're asking the young people to help us with this mitigation strategy, by staying out of the bars, staying out of the restaurants, really trying to distance yourself. Don't get the attitude, well, I'm young, I'm invulnerable. You are, well, in some respects, you're certainly less vulnerable than I am. However, what you might inadvertently do, and I know you don't want to do that, you don't want to put your loved ones at risk, particularly the ones who are elderly and the ones who have compromised conditions. We can't do this without the young people cooperating. Please cooperate with us. Thank you.
Dr. Fauci, and I'm going to read my notes so I get this right, but there's apparently a new study out of China. It found that the vast majority of cases, 86%, were in untested patients with mild to no symptoms. So what does that say about the impact of testing, and does it mean that testing should actually go beyond the sickest patients?
You know, that question keeps coming up, and I'm not going to evade the question, but I want to make a point. We tend to think that we're not going to be able to mitigate or contain without testing. They complement each other in some respects, but they're separate channels. Even if we had no testing, we should be doing what we're doing now. The question you're asking, so I won't evade it specifically, would it be important outside of a doctor-patient coming in together, of knowing what's out there, what might be under the radar screen? The answer to your question is yes. So let me tell you what the CDC is doing right now. They're going out there, and part of their program is to get a feel for what is there that wasn't initially thought to be coronavirus, that was thought to be something else. When you do that, you're also going to get a feel of what the penetrance is in society. So we are heading with the high throughput things that you've been hearing about to get an answer to your question.
Dr. Fauci, Governor Cuomo said this morning he believes that we'll see a peak in terms of infection in 45 days. Would you concur with that?
You know, it's possible. I mean, I know the governor has been really, I believe, doing a really good job of trying to stay ahead of this. 45 days is not unreasonable. You have to be careful. When you get a number, you own the number, and then if the number doesn't come out, you're in trouble. And that's the reason why, from our standpoint, from the federal government, we're talking about a range. So within that range, I mean, it isn't like you want to be correct for the sake of being correct, but you don't want to be wed to something and then have to back off.
Go ahead, please.
When is the soonest that we'll know that these new guidelines are actually bending the curve or actually working? And is there a point in time where you know, in the next couple of weeks, where you'll be able to tell the president more draconian measures are needed?
Well, okay, so what's happening, I mean, if you look as a metaphor, it's kind of like a race against the virus. If left to its own devices, will do this, and us trying to somehow blunt that. Now, you could see the virus going up and up, and your effect, your work, what you're trying to do, may actually be having an effect, but you may not see it because it'll still be going up. And as you're trying to implement your interference with the virus, you may not realize that you're actually interfering, and you'll say, wait a minute, it's still going up. What's going on? You've done nothing. But you don't know whether it would do this versus that. So the answer to your question, it probably would be several weeks and maybe longer before we know whether we're having an effect. It may be at the end of the day, we'll see a curve that would have been way, way up. But I wouldn't put us to task every few days. Well, wait a minute, it's going up. Is it working or not? That would be really misleading if we do that.
Dr. Fauci, I have a question.
Go ahead.
Regarding the 15-day guidelines which were announced yesterday. One of those guidelines was a recommendation against gatherings of 10 or more people. And today, the governor of Alabama issued her own guidelines, and it was a recommendation against gatherings of 25
Right.
or more people. What is your recommendation for people of Alabama, people across all of the country, as far as the guidelines that were announced yesterday by the federal government?
Okay, so the one thing we don't want to do is to get hung up on the difference between 10 and 25. I think you might agree with that. When we give guidelines, they're only guidelines. We sit down, we look at the data, as Dr. Burke said, we're data-driven, and we say, on different models, 10 looks good. If someone wants to do 25, we're not going to fault them, but if someone wants to come to us and ask us what we think the best is, We stand by the numbers. It isn't perfect. It isn't precise math. It's assumptions and it's data that make you get your decision.
But would it be more effective if every state and every city in the country was playing by the same rules
Yes,
instead of different?
of course. But this is the United States of America. There's a lot of free enterprise there. People do their own thing. And quite frankly, I don't think there's a big deal difference between 10 and 25. We got many, many more important things to worry about than that difference.
Mr. President, thank you. Going back to supply chains and then talking about preparedness for the future, yesterday Larry Kudlow said that there is an idea floating around the administration to cut taxes for companies who would be bringing their supply chains back to the United States. He said he specifically liked immediate 100% write-offs for structures, equipment, but he said you hadn't endorsed that yet. Would you endorse an idea like that?
We're looking at many ideas. That's one of them, frankly, and we're looking at creating incentives for companies, not only that type of company, but other companies. We're also looking to help companies such as the airline industry within the airline industry, and we'll be doing that. We will be doing that. This is not their fault. And they've been very understanding, actually, and we're going to be helping them. We will have a very powerful airline industry, and it'll start up as soon as this is over. We'll have those planes ready to go. So we have to help them during the short term. We're very important. Yeah, please.
Thank you, Mr. President. I wanted to know, have you taken a look at some of these models, such as the Imperial College London model, that kind of poses a very difficult choice, whether it's shutting down society or overwhelming the healthcare system? Is that something that
We've
you
looked at
take
every
into
model.
consideration?
We've relied on the very talented people, and there's no better team than the people behind me. And I will say that all of the people that have done those models are all in constant touch with Dr. Birx and Tony and everybody that you've been hearing so much from over the last couple of weeks. We've looked at many different models, and the model we have is we want to save a lot of lives. We want to save a lot of lives. If we get too steep on that curve, you're going to lose a lot of lives, perhaps unnecessarily. Now, we're going to find out. Everything has a risk. We're going to see. But if people do what we're telling them to do, what we're asking them to do, you're going to see the saving of a lot of lives. Now, Boris, in UK yesterday, you saw what happened. It looked like they were going a different way, but then he went away of similar, I don't know exactly, but I would say we had a conversation yesterday similar to what we're doing. So a lot of people seem to think this is going to be, we are looking to save the maximum number of lives. Everything else is going to come back. A life is never going to come back, but everything else, our economy is going to come roaring back. You're going to know, we're going to know, we're going to all know that day. If somebody was asking about the day, when will you know? When will you know? We're going to know. All of a sudden, we're going to say, wow, that's looking good, that's looking good, that's looking good, and we're going to be on the other side of the curve, and that's a day that we look forward to, okay?
Is there something, sir, that you saw this week, though, that made you decide that, yes, now is the time to implement these much more stringent social distancing measures?
No, I don't think so. This is where we were going. I really think from the beginning, this is where we were going. This is what we had in mind. We're just going step by step. That was the next step, the next logical step. As Dr. Fauci said, and I think very importantly, one of the most important things when you write the history of this was the fact that we closed it down to China and Europe, but in particular China. We closed it down to China, the source, very, very early, very, very early, far earlier than even the great professionals wanted to do. And I think in the end, that's going to be, that will have saved a tremendous number of lives.
Follow up, one on the economy and the other on the broader picture here, but just to follow up on my colleague, some people did note that your tone seemed more somber yesterday. You talked about that August timeline. Did you see a projection? Some people thought perhaps that 2 million potentially that could die maybe prompted part of that. Was there a shift in tone?
I didn't think, I mean, I have seen that where people actually liked it, but I didn't feel different. I've always known this is a pandemic. I felt it was a pandemic long before it was called a pandemic. All you had to do is look at other countries. I think now it's in almost 120 countries all over the world. No, I've always viewed it as very serious. There was no difference yesterday from days before. I feel the tone is similar, but some people said it wasn't.
Your former economic advisor said almost 100% chance of a recession. Do you see it that way?
It could be. I mean, I don't think in terms of recession. I think in terms of getting it out, because when we're finished with the virus, we will win. We will win. And when that victory takes place, our economy is going to go through the roof. It is so pent up. It is so built up. It is so ready to go in an upward direction. But we have to knock out this enemy. This is a really tough enemy, but we have to knock out all of us. That's all of us. So I don't think in terms of recession, not recession, it's words. We have to knock out this, and we will have an economy. I actually think we'll have an economy like we've never had before. It's all pent up. Did you have something to say, Mike? Yes.
Well, I think the question about the actions that the president's authorized, beginning in January, when he took the unprecedented step of suspending all travel from China, the efforts to issue travel advisories for portions of Italy and South Korea, and then to begin screening all the passengers. The efforts regarding suspending travel from Europe and what went into effect at midnight last night, adding the UK and Ireland to that, have all been informed by the experts that are surrounding us. What the president's asked us to do from the very beginning, as Dr. Birx and Dr. Fauci often say, is let's follow the data, bring the president the best options in response to what is actually happening on the ground. But with regard to yesterday's 15-day slow the spread plan, our team unanimously brought to the president these very strong recommendations for every American, because we truly believe we are at a point in this epidemic in our country when we can reduce the number of people that actually are exposed to or contract the coronavirus. But we'll continue to bring the best data, the best evidence, and the best recommendations, frankly, of the best health experts in the world, and the president will continue to make decisions that put the health of America first.
In other words, reduce the number of people that die. That's what we're trying to do. And when you do the steep curve, a lot of people are going to die. A lot of people. You know, the worst ever, they say, 1918. And I don't have to go into the numbers, but they were unbelievable numbers. Had they known and had they done what we had now, it would have been a very much different story. It would still be tragic, but it would have been a very much different. But that was the one that people write about. That was an incredible pandemic, like we haven't seen. But we have done something that I hopefully we will all have made the right moves. We're all in this together, including you, and we want to see fair press. And I tell you what, it's been, generally speaking, I think it's been a great thing to see. It's been very, very, getting along with Democrats, getting along with Republicans, for the Democrats themselves. There's been a lot of spirit. There's been a lot of things happening that I haven't seen happen in the first almost now 3.5 years. It's been very nice to see. That's one of the good things. But what really the good thing is we have to knock it out. We have to win. And we want to keep that slope as low as possible, because that's a lot of lives in there. Let's go back there for somebody that didn't get one, please. Go ahead.
Mr. President, this has had a huge impact on China's economy as well. Have you received any indication from officials there that they're going to have trouble meeting the purchase agreements, part of the Phase 1 deal, particularly the agricultural buy?
Well, they need our product very badly. And no, I haven't received any. We have a good relationship with China. I have not received anything to that. No, we have a signed agreement. They're going to be buying, and they have been buying a lot of product. Yeah, please.
Earlier today, Dr. Birx was talking about the possibility of our hospital system being overburdened, overtaxed, and she talked about certain options that are available to the United States if that happens, including VA hospitals, Department of Defense medical treatment facilities, and even hospital ships. At what point do you tap into those options?
Well, I'll know the point, and by speaking with Governor Cuomo and other governors, we're going to know the points. It's going to be different for New York than it's going to be from, Iowa, or from Idaho, or from West Virginia, frankly, or for it's different. New York has got a big problem. The state of Washington has a big problem. California has some big problems. Everyone's doing a good job, but we're going to know when it will be, and I believe it'll be more spot than it will be. It's not going to be the whole thing. It's going to be spots. There are some hot spots that are in trouble, big trouble, and there are other areas that are in no trouble at all. They watch it on television. They don't know. It's just not affecting them, and they're lucky. They're lucky, but there are areas of the country that don't have much of a problem, and some that don't have any problem. They're not going to have a problem with hospitals, but some areas like New York, California, state of Washington, they're going to have some difficulty. And when we see that coming, we're going to be in there. We're already making preparation for it.
Senator Marco Rubio of Florida, your trade advisor Peter Navarro have been recommending an executive order that would ensure that the raw materials for pharmaceuticals and medical devices are manufactured here in the United States. We were getting some indications last week that you were close to signing this executive order. Can you tell us?
Well, we're
where
looking
you
at
are on
different
that?
things, John. I don't want to say exactly. Right now, China's been sending us everything we need, but we're looking at some alternatives. Yes, we are looking for alternatives, and we have other places. Ireland does a lot of work for us. You know that in that world, in the pharma world, a very tremendous producer, and we are looking to bring a lot more back home. And I've been, excuse me, you know me for a long time. I've been talking about this for many years, long before I decided to run for president. I've been talking about this, and we have to be able to take care of our country, and that was one of the many things on the list. So we'll be talking about it, but we are discussing it, and Marco is very much involved, and Peter is very much involved. A lot of people are involved, and a lot of people feel that way, but we'll be discussing. Let's go, please.
Thank you, sir. You said Canada has closed its border to non-citizens. Are you considering...
Not to the United States.
Not to the United States, of course. Are you considering closing the land borders in the United States? And also, you've discussed...
Well, Canada has not closed it to the United States, so we're working very closely with Canada, but they have not closed it. They have closed it to the world, but they have not closed it to the United States.
Are you considering closing the U.S. land borders?
I don't want to say that, but we are discussing things with Canada, and we're discussing things with Mexico, quite honestly. And again, the relationship is outstanding with both. Outstanding. We just signed our deal, USMCA, and the relationship is very strong. Go ahead, please.
China and others have criticized you for using the phrase Chinese virus. How do you feel about that? Are you going to continue using that phrase?
Well, China was putting out information which was false, that our military gave this to them. That was false. And rather than having an argument, I said, I have to call it where it came from. It did come from China. So I think it's a very accurate term. But no, I didn't appreciate the fact that China was saying that our military gave it to them. Our military did not give it to anybody.
Critics say using that phrase creates a stigma.
No, I don't think so. No, I think saying that our military gave it to them creates a stigma.
Mr. President,
Please.
When you speak to travel and tourism executives today, what specific help are you going to offer to them, if at all, or is it still vague?
Well, we're going to help. They need help. Look, let's face it. You know, they go from having record-breaking years. This is the third year of record-breaking years, travel and tourism, airlines, everything. They were doing record numbers, ordering new planes, building new hotels. Everything was really hunky-dory. And then one day, we hear about this rumor in China, and then we find out it's much more than a rumor. And then all of a sudden, we make a great decision to close it up early. It would be a whole different world. It would be a whole different world, but we make a decision to close it up to China, and all of a sudden tourism, and then we close it up to Europe, which, you know, people never heard of this before. I'm not sure that that's ever been done. I know that when I made the decision to close it to China, people told me that's never been done before, but it was a great decision. We make good decisions. So I'll tell you my best decision, the people behind me are total pros. All over the world, they're respected. Dr. Birx, Anthony, who's become He's become a major television star for all the right reasons. No, he's just so professional, so good. The people that we have working here have been incredible, and they're totally respected. The Admiral has been incredible, having to do with the testing, incredible. And he's viewing this as testing also for the future. We're building a platform. When we took over this platform, first thing the Admiral said was, this was not designed for what we're talking about, millions of people. It wasn't. And it's nobody's fault. It's not like, who could have ever predicted a thing like this? But we broke it down, and it's really going to be an incredible system. And it is now a great system. I just want to say, these are incredible people standing behind me. They're the most respected in the world. Every country that you've mentioned today so far has called them, and they call them all the time for advice. There's nobody better than what we have.
Why haven't we seen Dr. Redfield?
Say it?
Why haven't we seen Dr. Redfield the last couple of days?
I don't know. I can't
He's in
imagine.
Atlanta.
running the CDC.
I can tell you he's doing a good job. We're very happy with him.
Mr.
Yeah, please, you have it. Go ahead.
Mr. President, yesterday we were being told that the payroll tax was going to comprise the lion's share of fiscal stimulus.
Right.
We also had the markets fall quite dramatically yesterday. And did that inform?
It wasn't about the payroll tax.
Did that inform your decision? What made you make that change, and when did you make that change?
Well, I didn't make a change. We're looking at payroll tax, and we're looking at various other forms of getting money to people. And the payroll tax is something that I've always liked. The problem is it does take a period of time, months, before they really see something. And we don't really have months in terms of people living. A lot of these, you have people that work on tips. You have people it's a large number of people. It's a tremendous, who would think this, right? And they do nicely. They work very hard, but they work on tips. We have to take care of our people. We don't want to have people suffering during this period. It wasn't their fault that this thing all of a sudden was upon us. So we're looking at we're also looking at payroll tax. It's possible. It's also possible we'll do a percentage of payroll tax and then other things. But we'd like to be able to get money to people. We're very lucky. Our country's doing so well. We can do this, and we can do it easily, but we have to do it. And I have to say, Mitch McConnell, if you look at Mitch and Kevin and the whole group, and it's been incredible how they're reacting, how Congress is reacting, how, whether it's the House or Senate, how they're moving. And I'm talking about Democrats and Republicans, but we've had tremendous leadership meetings, and they want to see it done right. And they do want to go big. I think going big is important. I don't think we want to go up there every day with a different idea, a different concept. Oh, gee, let's worry about the airlines. Let's do this one. You have a big problem with the cruise ship industry. It's an industry that was setting all sorts of records 2 months ago. Then all of a sudden, there's nobody on the ships, okay? So we have to help these. These are great industries. These are going to be taking care of people and passengers and for years to come, and paying tremendous taxes for years to come. So we have to make sure that this is done. Yes, John?
Mr. President, I want to bring up what you referred to just a short while ago about politics. In your address to the nation, you said we have to put politics aside, stop the partisanship, and unify together. But this morning, you criticized the Democratic governor of Michigan. Yesterday, it was the Democratic governor of New York. You've attacked Obama. You've attacked Biden. In fact, every day except one since that address, you've lashed out at a Democratic leader. Are you going to set the example?
I only do that when I have to respond. I watched her on television. She said something that was false, and therefore I did do that. And I will continue to do that. If they're not going to play fair, because, they have the media on their side, I don't. I just have me. And if they're not going to play fair, I'm going to do that. If they are going to play fair, there's going to be nobody better than Donald Trump in terms of bipartisanship. But if they're going to say things that are false, like the story that was written yesterday, a lot of people, I don't know, somebody, I think I know who, but they taped the conference call that I had with the governors. It was a good call. It was fine. I assume somebody's going to tape it. They handed it to various people, and one of them was the New York Times, and the New York Times chose to write totally inaccurately about it. It was a disgraceful thing. It was bad journalism, but, they do a lot of bad journalism. But we respond to that. And actually, people get it. People get it. No, I want it to be bipartisan, and nobody's going to be better than me. But when they attack me or the people, these incredible people behind me, I'm not going to let them get away with it. I can't do that. Okay, how about one or two more questions? Go ahead, please.
Follow-up on the 15-day
Please.
guidelines was the next natural step. So is the next natural step after that a national lockdown similar to what San Francisco is doing?
Well, you can do a national lockdown. Hopefully, we're not going to need that. We think of everything. I mean, we have every idea that you mentioned we've thought of, and, it's a very big step. That's a step that, in one sense would work. It's a very big step. It's something we talk about, but we haven't decided to do that. Please, go ahead.
Mr. President, what would be the determining factors for you to take that action?
It would have to get to a level. I just don't think it's going to be an action that we're going to take. I don't think I'll talk. But Anthony, all of the people standing behind me would get together in a room, plus some additionals, and we would make a decision. But I don't think that's a step that we're going to be taking. All right, one more question. You didn't have one, did you? Come on.
Will the U.S.
government provide financial assistance to Boeing and airplane suppliers like GE?
We're looking at that. We're certainly looking at Boeing. Boeing got hit hard in many different ways. Boeing never had a problem for years. They were an incredible, it was unthinkable what happened with respect to Boeing. Unthinkable. Probably, I would consider it the greatest company in the world prior to a year ago. Now they get hit in 15 different ways, and they have different management. I've met the new people running Boeing. I think it's going to be outstanding. But yeah, we have to protect Boeing. We have to absolutely help Boeing. They were doing a job. They were getting, it was coming along well, and then all of a sudden this hits. So obviously, when the airlines aren't doing well, Boeing's not going to be doing well. So we'll be helping Boeing.
Can you just respond to something, Mr. President, before you leave, on what John was saying? You've called for people to leave politics out of this. Joe Biden said the World Health Organization offered testing kits that they had available to the United States, and to give it to us now, we refused it. We didn't want to buy them. PolitiFact says the WHO never made that offer. Can you tell us?
Well, that's what I heard, and I'm going to let Tony answer that question, or whoever's best at answering that. But I do have to say, when you talk about politics, I watched the debate. Not too exciting, but what they said about me, and we've done a great job. When you talk about not being bipartisan, what they said about me, and if you look at swine flu, the whole thing, and I guess it was 2009, and what they did and the mistakes they've made, they were terrible. They were horrific mistakes. 17,000 people died. And I'll be honest, they shouldn't be criticizing because we've done a fantastic job. The only thing we haven't done well is to get good press. We've done a fantastic job, but it hasn't been appreciated. Even the closing down of the borders, which had never been done, and not only did we close them, but we closed them early. The press doesn't like writing about it. So we've done a poor job on press relationships, and I guess I don't know who to blame for that. I don't know. Maybe I can blame ourselves for that. I will blame ourselves, but I think we've done a great job. I think we've done a poor job in terms of press relationship. But let me have somebody answer your question.
Yeah. So I tried to cover this in the answer when I talked about quality of kits, and our quality analysis runs through the FDA. So all of these platforms, we have asked people to submit, and we've asked states to quality control. So, I mean, anybody could submit their test to us. We don't buy tests that haven't been quality controlled, and they show us the data. Either show us the data up front or show us the data after they've been running them. Because quality testing for our American people is paramount to us. It doesn't help to put out a test where 50% or 47% are false positives. Imagine what that would mean to the American people. Imagine their level of concern now and telling people that they're false positive. We take this same approach to HIV. Imagine telling someone they were positive to HIV and they weren't. So that is our bottom line, the customer, the American people first. And so any of these groups can submit their testing kits through our regulatory processes. But without that and without a plan, we are not going to accept tests that have not been studied by us.
Good answer. It's a good answer. Would you have something on that?
I'm just going to emphasize a little bit more on that. When I became involved in the testing world, I called as senior officials at the WHO as I could find to understand what the situation was. And as far as I can tell from sources that should know, no one ever offered a test that we refused.
That's what I heard too.
This is a research grade test, right? Research grade test that was never not approved, not submitted to the FDA. That was supplied in tens of thousands of quantities to 100 countries in the world. Okay, so I think there's a lot that people are saying about this that's just based on rumor and myth. Nothing was offered that we refused. It was a research test that was not approved. And again, there was a small number that we have greatly surpassed in a very short period of time.
So number one, nothing was offered. Number two, it was a bad test. Otherwise, it was wonderful. Listen, thank you very much. No, he made a mistake. I assume that he'll apologize. He made a mistake. Thank you all very much. Thank you. We'll be back. Thank you all.
All right, you just heard from President Trump addressing the latest when it comes to the coronavirus crisis. Welcome into the Ticker on Yahoo Finance. I'm Zack Guzman.
And I'm Akiko Fujita.
We just were talking about this before we came in here when we're talking about what is going on in the stock market. You saw it selling off a little bit as President Trump stepped to the podium and began speaking there, but not really necessarily giving all the updates that people wanted to hear regarding the crisis right now.
Exactly, but I think there were some key takeaways here, especially because we heard from Treasury Secretary Mnuchin talking about the Fed today establishing the commercial paper funding facility, which is, of course, something we haven't seen since 2008. Secretary Mnuchin saying that we heard loud and clear there are liquidity issues and we have the ability to have the Fed purchase up to $1 trillion of commercial paper if needed. Also thought it was interesting that he said that we are looking to send checks to Americans immediately, Zack, which is something that we have heard a lot of analysts who have come on and said this is the immediate step that needs to be taken right now.
But a lot of questions still remain about what would happen if people even got those checks if no one's going out and wanting to spend money right now. A lot of the questions that we're trying to figure out. So I want to address this a little bit more. Joining us now for more insight is Vice President of Market Research at TipRank's Christine Short. And Christine, I mean, we just heard from the president. Akiko laid out some of the policy proposals that we're looking at here. But when we're discussing all of these, how do you think that that might address the fears out there right now when people are potentially losing jobs and thinking about buckling down for the long term?
Yeah, I know, and that's the issue. Like you mentioned, we're seeing markets aren't so sure what to make of this information. I think yesterday was very surprising to hear President Trump say we might sort of be living in this world till July or August. So I think everyone's kind of doing the math and saying we might see a Q2 that reports negative GDP, but August, that's the middle of Q3. That would be a second quarter of negative GDP. That firmly puts us into a recession. So you saw the markets take a dip based on that because we've been waiting for this information. We've heard, the peak is 4 to 8 weeks away. But to hear this could last all summer, I think some people are thinking, how are we going to continue on like this? And a lot of people, the math just doesn't add up as far as can they go this long without employment? So a lot of people are trying to figure out how they're going to make this work.
Christine, as you point out, the consensus among economists seems to be that we are, in fact, headed towards a recession. The question is how long that is likely to last, how severe it is, depending on the kind of stimulus we could get from the government. Secretary Mnuchin's comments earlier saying we will be sending checks directly to the American people. I mean, we don't even know how much the amount is going to be, but how significant is something like that when, as Zack points out, people are pretty much holed up in their homes right now, not willing to go out and spend?
Yeah, I think we were hopeful a couple of weeks ago for a V-shaped recovery. As many have said, look, the economy was very strong going into this. There's been many comparisons to 2008 where the underlying economy wasn't strong. We had very low unemployment. Corporations were doing quite well. Once we get past this, the economy will go back up and we'll see a V-shaped recovery. Sure, people are looking for relief, but as you said, where are they spending it? They're finding some places to spend it, but if they think they could be out of work for long term, I don't think you're going to see them filter that back into the economy. So that's something that we have to think about. People might hold on to those checks as they prepare for the long-term future, and we don't quite know yet.
Yeah, Christine, you talk about doing the math, and right now we're looking at a potential stimulus package, if you believe Steve Mnuchin here, of $850 billion in terms of addressing the problem. That would be much larger than the TARP total of $700 billion we saw back during the financial crisis. But when we look at this, it's also coming at a time when a lot of people have been talking about what's going on in the commercial paper market right now as companies are struggling to secure short-term funding. There have been a lot of question marks about debt out there. When we look at the corporate debt bubble, just highlighting that right now, close to $16 trillion in outstanding debt, and the stress right now when we think about what could be happening to some companies that might be strapped for cash. How does that complicate what's going on here in the way that we're seeing the Fed react as a lender of last resort to maybe address those liquidity problems?
Yeah, look, I've covered corporate earnings for over 10 years, since before the last recession. And I think what's been most striking to me is corporations' reaction. So they've all, specifically within the travel and leisure sector, many have come out and withdrawn guidance that they gave at the beginning of the year saying, look, this is no longer relevant. We will be downgrading, but we don't know by how much. And to me, that's quite scary because that filters through to what analysts are saying. Analysts are unwilling to reissue their guidance if they're not sure what companies are saying. But it makes me back to many of these names. He mentioned Boeing, he mentioned the airlines and potential bailouts here. I wonder how many of them are regretting those very long, decades-long programs of share buybacks. That's one big issue here is there's not the liquidity on the balance sheet, because over the years they have chosen to use their cash to repurchase shares. We all know why they do that. It's not to benefit investors necessarily. A lot of times it's to bump up that EPS number, which of course helps management look better. And so I'm kind of looking into some of these names that now need this bailout, and what they've chosen to do with the cash that they had, and seeing that they don't have the short-term cash right now and are having to employ cost-reducing measures such as furloughing staff and who knows what else as if they don't get this bailout.
No, it's a good point, and it's something that we saw even the banks now agreeing, a consortium of banks saying that they will not be executing any share buybacks, at least in the short term, to help address those liquidity problems. But for now, Christine Short, thank you so much for joining us. Appreciate you taking the time.
Thank you.
All right, well, as we mentioned earlier, the Fed plans to open a commercial paper funding facility to support the financing needs of businesses facing stress amid the coronavirus outbreak. And joining us now to discuss is Barron's reporter Carlton English. Carlton, it's good to see you. I know that you sat down with Mervyn King, the former governor of the Bank of England. He said that central banks and politicians need to show a degree of humility during the pandemic. And when we look at this right now, there are a lot of issues going on. I'll start with the commercial paper lending facility there, because the Fed is addressing some of these short-term borrowing problems that we're seeing companies face. We saw that back in the financial crisis as well. So this is not completely uncharted territory, but just yet another policy tool that the Fed is again pulling. Are the similarities striking to you as they seem to be to me, that we are now in a similar crisis to what we saw in 2008, at least if you read the way the Fed's reacting?
Yeah, there's definitely some feeling of deja vu here in some sense. When I spoke with Mervyn King, and I have to say it wasn't fair to say a sit down because, he's unable to travel. He's in London right now, so we spoke over the phone. But the thing that he tried to make a point of is, in 2008, we were purely facing a financial crisis. The financial system was breaking down. We do have banks, going through stress testing right now. They are stronger than they were 12 years ago. This right now does not look like a financial crisis, but some of those comparisons to that feeling of anxiety that we're feeling is definitely true.
So what should we be comparing it to? We've heard the comparisons to 2008 in terms of the financial fallout that we're seeing right now. And then, of course, 2000 or 9/11, post 9/11, when we saw a lot of these airlines grounded. I have to say, hearing some of these estimates coming out of the airline sector, certainly very grim. We're looking at U.S. airlines asking for $50 billion. I mean, if you look at all of that combined, and $850 billion on the table here is what Secretary Mnuchin said in terms of a stimulus package. I mean, how do you think that is likely to be divvied up?
Yeah, it's really tough to say right now. And a lot of what's going on, seems to be theoretical. And I think that's why we're seeing this kind of volatile stock action today. We had the Dow up more than 1,000 points earlier today, thinking that something was going to come through. But then, there's some more uncertainty on, what we're going to be getting.
Yeah, Carlton, I mean, when we look at the reaction, right, the volatility that we've seen, it's been kind of a swinging day when we think about we'll have a big down day, big up day recovery. Right now, only up about 2.2%. So not exactly really following the trend here. I'm not sure what that might signal to you based on what you've seen out there with the fear index at all-time highs when you think about even what happened back in 2008. But as you kind of weigh this, I know you've been covering markets for a long time. What's kind of your reaction to the way that there are so many unknowns out there, whether it be the health questions right now about how long this will last, but then also what companies and the issues that we're talking about here on the lending side with companies trying to access short-term borrowing?
Yeah, and I think you just hit it perfectly on these unknowns that we're feeling. As I said earlier, during the financial crisis, even though the impact was widespread, we knew it originated in the banking sector. In a weird way, and as bad as that was, we felt we could kind of isolate it in a way. But right now we're seeing, policy is failing. We're seeing stores shut down. We don't know the full impact of, restaurants and people who are going to be out of work. So it really is a stressful time. And when I'm talking to a lot of fund managers who are thinking about, okay, how do we allocate here? Overwhelmingly, they're seeming to either have already put down their hedge positions or they're kind of stepping on the sidelines because, as one put it to me last week, there's times to make money and then there's times just not to lose money and to kind of step aside for a little bit.
Yeah, I was just rewatching Ben Bernanke, former Fed chair's reaction and assessment of how he responded back in 2008 to the financial crisis. A lot was talking about contagion, and very strange to be dealing with contagion on two fronts now as we try and assess where this might move next, both on the health front and then also on the liquidity crunch that we're seeing play out. But for now, Carlton English, thank you so much for breaking that down. Appreciate it. Coming up, the VA is getting ready to become a backup health system for those infected by the coronavirus. The former Secretary of Veterans Affairs will weigh in with us next.
Well, the Department of Veterans Affairs is getting ready to become a backup health system for those infected by the coronavirus. Joining us now to discuss is Dr. David Shulkin. He is the former Secretary of Veterans Affairs. Great to have you on today. Let's talk first about the capacity concerns about some of these hospitals. We've been hearing that some, at least in places like Washington State, are already feeling overwhelmed. Can you help us understand how the Veterans Affairs can step in here to help alleviate some of that load?
Yeah, what we're seeing in terms of hospital capacity and the concern that we have for that healthcare system is very geographically specific. So we're already beginning to see hospitals in New York City and other regions seeing patients with COVID-19 and beginning to be admitted to their hospitals, where other hospitals around the country have not yet begun to see that type of surge. The Department of Veteran Affairs is a unique healthcare system, the largest in the country. It has facilities in every part of the country and the largest number of doctors and nurses, with the ability to serve as a backup function in national emergencies. And it is a system that trains and prepares for these types of emergencies. And we're fortunate that we have the number of individuals who are trained to be able to help assist in emergencies like this.
Yeah, and if it is kind of built to be that backup healthcare system, I mean, what kinds of things are you seeing right now that might be most worrisome in being able to serve in that function? Because we're already seeing hospitals that are here already kind of dealing with these stresses. It sounds like Governor Cuomo, if you listen to his address, there's not going to be enough ventilators for what he needs there. So, I mean, if that's the backup system right now, but our first system's already getting overwhelmed, what's after the Veteran Affairs here if that's a fall?
The biggest challenges that we're seeing are going to be in staffing. And what we know about past pandemics is that up to about 35% of staff will experience the inability to work, either because they themselves are sick or because they're needed for family or people that they care for themselves. The Department of Veteran Affairs is already entering this pandemic with a staffing shortage of 49,000 people, so lots of vacancies. And while I think that there are lots of capabilities that the system has, you can't make up that amount of staff vacancies, particularly when you enter a period where there could be high demand with a lot of staff absenteeism.
So having said that, I mean, it sounds like the VA is already dealing with its own shortage. How do you see those services being integrated to the broader response right now from the federal government?
This is what emergency preparedness is about. This is triaging your resources, taking people who are routinely doing other activities and putting them to where the greatest patient needs are. So we're already seeing hospitals in New York City and around the region canceling all elective admissions, stopping elective surgeries, taking the staff that are available, making sure they're trained on the equipment, the protective equipment, and there to respond to, in this pandemic, what is likely to be largely a respiratory illness where people are going to need more intensive care services. So it's these days in the pre-planning that really are essential to determining how well our healthcare system can respond. And let me just say that I think what we need to see is a greater coordination between private sector, state, and federal efforts. And we're seeing real leadership at the local levels beginning to coordinate that. And of course, we're seeing the federal government's willingness to step in and to help where they can. But this type of coordination of resources really hasn't been seen in recent years. And so this is something that I think everyone's working hard on right now.
You know, the president or the administration certainly taken a lot of criticism for their initial response to this. It seems like things are starting to come together. But what would you say in terms of the timeline, where we are in this phase, in the response phase right now? Are we still just kind of in the first innings? And are we going to likely to see the integration increasingly over the next few weeks? Are we already starting to see that the capacity? I mean, you know, where do you think we are?
I think that, as we heard just a little while ago in the press conference, that we still have a great deal of uncertainty about which epidemiologic curve we're likely to follow. But there's no doubt that we're still in the early innings here. If we take the curve that we've seen in Italy, and I think that that's the most concerning, aggressive number of infections in terms of percent of the population. And when you do this type of planning, you really should be planning for the worst case scenario and hope for something much better. But if we take that curve, I think that we're about 11 to 12 days behind what they're experiencing in Italy, which would suggest, again, if we follow that curve, that we're at about 4,500 infections now. We'd be going up to about 200,000 infections in the United States, patients are infected, in about a 30-day time period. So while we're beginning to see hospitals in certain regions of the country starting to see these patients, I think that we are likely to expect a much, much greater demand on our healthcare system throughout the country.
Yeah, I mean, and just to return to that question of kind of planning here, I know it's hard to predict these things and how they'll spread, but when we looked at Dr. Richard Stone, the Veterans Health Administration currently said that he had not been contacted up until 2 days ago for trying to help here. So that's kind of alarming in terms of if you are the backup option, and that would be where the spillover would go, why that wouldn't have been tapped even as of 2 days ago. If you're trying to address the flattening the curve here, are you surprised by that not happening if we're talking about coordinating efforts?
Yeah, I think what we've seen is that people have been waiting for direction and to be told what to do. And of course, I think every day that's a missed opportunity in this type of planning and coordination is going to cost people's lives. So I have been encouraging people, and it's been heartening to see the local officials and state officials step up. I had called for several weeks ago the Department of Veteran Affairs to be integral in this planning effort across the country. I've called for state and local officials to make proactive requests of our national stockpile to get the ventilators and protective equipment that is available out distributed to the field. And I think that sitting back and waiting is going to end up being the biggest problem. So it's good to see that people are reaching out because, frankly, I know in the Department of Veteran Affairs, there are people who train for this, who want to be helpful, who see this as part of their mission. Many of our federal agencies feel that way, too. And as we begin to start thinking about calling in the military and the Department of Defense, those are individuals that didn't think they'd ever be called up for this, but are certainly going to want to step in and help their fellow citizens.
Okay, Dr. David Shulkin, a former VA secretary, I appreciate you joining us today.
Glad to be here.
Well, coming up, how working from home could impact the psyche of millions of Americans being forced to do so. We're going to be discussing what the impact is there on the other side of the break.
Welcome back. The coronavirus is forcing many Americans to work from home, but many are wondering what will be the mental impact for those workers no longer in the office. Joining us now is Dr. Gail Saltz. She's an associate professor of psychiatry at New York Presbyterian Hospital's Weill Cornell of Medicine. And doctor, when we're looking at this, it might not seem like that serious of a problem, but I've been talking to a lot of people who have been stuck at home for weeks now, working from home, and they'll tell you that the toll has already started to rack up here. So what should be some things that people might be on the lookout for?
I think this is definitely going to impact people's mental health. They're not only home, but they're home under scary circumstances. They may have lost a lot of the structure of their day that they typically have. They're together with people, their family, yes, but that they, in the setting of being more anxious, get on each other's nerves. As that relationship feels frayed, that stresses people further. As their finances are concerning, that increases anxiety as well. And over time, the social isolation from others can really impact not only anxiety, but mood. And social isolation causes loneliness. Loneliness causes anxiety and depression. So I think everybody has to be thinking preventively about their mental health care while they're home during this time and injecting things into their day that can definitely help control and stave off increasing anxiety and depression.
You know, it's been interesting to see on social media a lot of parents sharing tips on what they're doing with their kids at home and being sure to set a schedule so that they, you know, they have this sense of normalcy. I know we're talking about people who are working from home, but, you know, what are some tips, what's some advice that you can give to those adults that are working from home to try and get through this uncertain period right now?
Absolutely. Keep a structure. You know, get up at a usual time, shower, eat, create a workspace that is away, as much away as you can manage, that you each have your own separate workspaces. Children, you know, have their school separate workspaces, you have your own. Inject into this structure of your day that you're going to create 30 minutes of aerobic exercise. I realize that may be in your apartment in a very small space, but whether it's calisthenics altogether or literally running around the apartment, whatever it is that, you know, better yet, obviously, to get outside if that's possible for you, to be in nature for 30 minutes of truly aerobic exercise, which controls stress, decreases anxiety, and improves mood. And you could have little episodes that you've structured during the day of relaxation techniques. Different things work for different people. So for some people, mindfulness or yoga is very helpful, but for other people, just deep breathing, deep belly breathing, muscle relaxation, distraction via, you know, watching a little comedy routine, watching or listening to something, reading a book for a few minutes, something that you find truly physically relaxing and mentally relaxing, morning, middle of the day, and evening. And then socializing. Create social time. I realize it's going to be online, but that actually is better than nothing, believe me. So set up, you can have a Google Hangout play date for your kids. You can have a dinner date with a friend with your computer in front of you, each of you with your dinners for a couple of hours. Definitely keep up as much as you can, some face-to-face, if not at least on the phone, social time.
Yeah, and I mean, there are some clips going around right now. I'm not sure I would recommend them, but putting soap on the ground and using it as a treadmill in a makeshift manner as well. Not sure how effective it is, but, you know, desperate times call for desperate measures. Dr. Gail Saltz, thank you so much. I appreciate you taking the time.
Thanks for having me.
All right, well, just ahead, how President Trump's handling of the coronavirus crisis is hurting his re-election chances, and who betting markets are banking on when it comes to former Vice President Joe Biden's pick for his running mate. Why it could be one of his fiercest debate challengers right after this.
Welcome back to the ticker. We are seeing stocks getting a bit of a boost after yesterday's big sell-off. This partly on the back of some additional specifics we've gotten from the White House on additional stimulus measures that are likely to come out. We're seeing the Dow up more than 400 points, the S&P 500 up 75, and the Nasdaq up 229. President Trump and former Vice President Joe Biden are in a close race for the 2020 election. That's according to an overseas betting giant. Paddy Power sees the two tied 50-50 now as the president grapples with the economic fallout over the coronavirus pandemic. Joining us to discuss is Lee Price. He is the head of PR at Paddy Power. Lee, let's talk about where the turn has happened. Clearly, the White House has gotten a lot of criticism over the last several weeks about its response to this pandemic. What has actually helped lift Joe Biden's chances, though? What specifically has he laid out that you think has maybe turned the tide for him?
I think it's very simple, actually, for our bettors. He's in a one-horse race, Biden, so he's the main contender. Trump's been sliding for weeks now, actually, and Biden actually overtook him a couple of days ago before they've reached parity again. And bettors here believe that Trump is vulnerable and that Biden is the only man that can challenge him. Therefore, that's why it's 50-50. It's really as simplistic as that, rather than anything particularly policy-based. It's just the raw mathematics. He's at risk. He's one against him. He's got a chance.
Yeah, according to a new Marist poll, though, it is interesting to see the split between Republicans and Democrats in terms of approval over handling the coronavirus right now. Democrats, 83% say they disapprove of his handling. Republicans, 85% say they do approve. Independents, 50-40 disapprove. So there is that in the middle that could be key when we think about how the election might go when everyone votes, and it's not so partisan. But when we look further into that as well, obviously Joe Biden, the front runner right now on the Democratic side, but he will be selecting a running mate. And when it comes to that decision, you're also seeing Senator Kamala Harris lead the betting markets for Biden's VP pick, which kind of, to me, seems surprising since Kamala Harris attacked him so hard on the debate stage. How has that betting market played out?
Yeah, I think profile here is the key. So the top two there, Harris and Klobuchar, have both been very vocal during this process, and that's probably why they top the betting. They're the best known over here. And Kamala Harris clearly has strong opinions and will challenge him, and for that reason might be a good choice. Doesn't mean it will be the right choice, but we think she's an interesting candidate, and our punters have put their money where their mouth is. She's the favourite so far with us.
You know, it really does feel like the 2020 election has kind of taken a back seat over, just nonstop coverage of this pandemic, rightly so. There are a lot of people that are concerned out there right now about their own health. Bernie Sanders, when you look at his policy, he is still all about Medicare for all. And I wonder if there is an opportunity for him right now at a time when this is kind of top of mind for people, or has that already kind of passed, given that a lot of people aren't paying attention to the policies of the Democratic candidates right now, given that they're concerned about their everyday lives?
Exactly. You're totally right with what you say, but he's missed the boat. And to emphasise that, we give him a 4.3% chance to be the nominee, which is less than Hillary Clinton. That's how far out he is. Joe Biden has a 96% chance to be the nominee. We think it's done and dusted, and for that reason, and for the coronavirus, as you say, what Bernie's policies are kind of irrelevant now, as harsh as that sounds.
Well, it's just surprising to see that fall, because it used to be at 11%, Bernie Sanders' odds. I mean, it was a long shot as is when you try and do the math on what time is left here before we get to that nomination in Milwaukee. But still surprising to see Bernie Sanders falling now behind Hillary Clinton, according to your bettors. A long way to go, long road ahead. But for now, Lee Price, thank you so much for breaking down all of that from across the pond. And be safe out there, my friend.
Thank you, guys.
All right, well, coming up, we'll speak with a restaurant owner about how he's faring as cafes are forced to shut down in-store dining in New York City. That's next. Welcome back to the ticker. We are seeing a bit of a recovery here in the afternoon trade. The Dow up 611 points, the S&P and the Nasdaq in the green as well, although not doing too much to comfort investors after yesterday's nearly 3,000 point sell-off. Again, another rough start to the week. We are getting updates today, though, in terms of what that stimulus response might be on the fiscal side. Secretary of Treasury Steven Mnuchin requesting a package that could total $850 billion. That would be larger than what we saw back in the financial crisis with the TARP, which was $700 billion. A lot of different things going on right now. Potentially also on the table, $1,000 checks, potentially $1,000. We didn't get a dollar figure around that, Akiko, but potentially checks getting sent out to Americans as well. The question still becomes whether or not Americans will want to spend if they do receive those checks. And of course, we also have the Fed stepping in to backstop the commercial paper market, as well as we saw businesses struggle to secure short-term lending. The market digesting all of this, and still the Dow up 600 points for the time being. All right, well, let's check in with Ines Ferre on the floor of the New York Stock Exchange for more on the market moves we're seeing so far. Ines?
Zach, I'm here with Pete Tuchman from Quattram Securities. Pete, earlier we were just listening to a press conference with Treasury Secretary Steven Mnuchin, President Trump, talking really about the ways that the government's going to help. And we saw that the markets went higher. We are off those highs.
Clearly look, I think I was impressed with the news conference on all parts. I think they're throwing everything they can at this. It seems in an organized fashion, so I was impressed. It felt like a bit of a little irrational exuberance on the way the market responded to it, but as we've talked before, the two narratives are hope and fear, right? For the moment there, midday, the market was living in the hope mode. Right now, it's getting a little more realistic. I think net down the road, these are all things from the rate cut to the stimulus package to everything like that. These things are going to have positive effects on the market. They can't help it. Helping sectors, a lot of bailout, stimulus, interest rates, and whatnot. They're really putting everything they can into the economy and the markets to try and preserve this. So we may not see it over the next few months, net. You may see some more down days, which feels like, oh my God, they shot all their bullets and there's nothing to do. But my gut is net, adding liquidity, repos, interest rates, stimulus, and all those things will net at the end of the day have a positive lasting effect.
Thank you, Pete. Zach?
All right, Ines Ferre on the, hey, that's all good for now. Ines Ferre on the floor of the Stock Exchange. Thank you so much.
We're socially distancing.
We got to be safe down there. Coming up, racking up the individual costs that could face Americans that eventually become infected with COVID-19, why healthcare costs could further add to inequality in the U.S. right after this. Welcome back to The Ticker. Across the country right now, restaurants are being forced to shut down service as coronavirus cases grow in the U.S. And in New York, businesses are only allowed to offer takeout or delivery options in a bid to enforce social distancing. So joining us now to discuss this is the owner of 3 New York City Italian restaurants, Gianfranco Sorrentino, along with Yahoo Finance's Sabile Marcellus. And Gianfranco, just want to start with the reaction that you've seen, how it's played out in the timeline to where we've gotten today, as now really you can only offer to-go meals.
Yes, it's been already now 8 or 9 days that the business went all the way south. We had really the last days a decrease in the 90%. We had guests coming to the restaurant in the single digit, lunch and dinner.
So tell me about the economic cost you've faced so far. I know you own 3 restaurants plus a catering business, and you're the president of a restaurant association. So how is it all added up?
Well, the catering business is completely finished. In this, we had cancellation for the months of March, April, May, and June for over $400,000. And right now we are dealing with our client regarding the deposit that they made. Some they want it to be reimbursed, some they are postponing events after June and July. The restaurants are completely shut down per governor order. And our loss right now, let's say just to keep the restaurant as they are right now, costing the $150,000 per month. That not including the rent, but I'm including the health insurance that we guarantee no matter what to all our employees, the insurance liability, the real estate tax, and the utilities that we have to pay. And we are now on the verge to talk with the landlord and to see what they can do to help us, because this is really a crisis anyway.
So I know a lot of restaurants have pivoted to delivery because they can't keep their doors open. What are you considering on that front? Does it make economic sense to keep some staff around to keep that demand going, or are you getting any calls at all from people who are wanting to do that kind of takeout?
It's so strange because all my life I've been pushing to come to the restaurant and don't take a delivery, and now I have to push for the delivery and take out. But anyway, I am the president of Gruppo Italiano, a no-profit organization with 408 members, mainly restaurateurs. And I've been talking with them every day for the last week. And we didn't see the increase in the takeaway and the delivery order. The increase was 10-15%. In Midtown, even less, because all the offices are closed, mandatory to work from home. MoMA is closed, Broadway is closed, so there is no traffic whatsoever. So the increase on 10% on the delivery and the takeout doesn't pay for the cost that you're going to have having a few people in the kitchen, a few porters, and then the delivery guys.
So how many employees do you have in total at the catering business and the 3 restaurants? And how much have you reduced it now because of the ban?
Right now, we are completely closed, all the restaurant and the catering. So we are at 0 employees right now. We have 160 full-time employees, plus we have another 20 part-time employees. Yesterday morning, we had a general meeting with all our co-workers, all our collaborators, and we saw the option that we have. Some of our staff, they're going to go on unemployment. And we're hoping that the Senate will pass the new package that has been brought by the Congress, so they can apply also for the family pay leave. Those are palliative, of course. They're not going to cover the money that they were used to make, but at least it's going to help them.
So what kind of aid would you like from the government? You mentioned the Senate there, that would actually help you retain these workers.
Well, first of all, we asking, and as Gruppo Italiano, we pushing the governor to give us a break on the payment of the sales tax from 30 days to 90 days, the payment of liquors and wine from 30 days to 90 days, and also to freeze all the loan, rent, etc. payment, so they can we can breathe for a while. Right now, we also don't have an idea when we're going to reopen. So, as you can imagine, even keeping the restaurant closed, we have costs that we have to pay.
So how many months can you last? When you say right now you're not sure, you're closed, you have no business at this point, and we have no idea how long this closure is going to last.
Yes.
When you look at your finances, how many months are you planning for?
Yes, that was yesterday exactly. We went through our P&L, balance sheet, and cash that we have in the bank. And we are a strong company, so we can last several months anyway. But after June, July, we're going to have a problem.
You're going to have a problem in June or July. That's interesting, since the president yesterday said that there's a chance it could go to August when we think about all of this. Hopefully not as drastic as shutting down everything, but there is still a chance of that. When we talk about potentially tapping the loan market here, some credit to make you last longer than just June or July, how has that been when you've maybe assessed potential opportunities out there for you?
As far as I know, the loan, which has to be also guaranteed from other things anyway, is for $75,000, which covers me 15 days keeping the restaurant open. So really, it's not going to help me a lot. I think that the government has to decide, and they have to tell us what they want to do specific to help our industry. We depend also from the hotels, from the museums, from Broadway, from the shopping, from the office coming back to work in the midtown. So they have to decide what to do to make it going again around anyway.
Well, hopefully it doesn't last as long as some people are saying, and hopefully you can get back to opening your doors and serving customers once again. But for now, Gianfranco Sorrentino, thank you so much for joining us. And Sabine Marcellus, thank you for bringing us that. Appreciate it. All right, well, we're also watching gold pushing back above $1,500 an ounce after the Fed's announcement. And Jared Blickery is standing by for more details on this. We're going to get to him in a second on the gold futures. But Akiko, as we continue to watch all the market action, it's interesting to see the way that the gold market hasn't necessarily played out in the way that we would think as a safe haven here.
Well, it hasn't, but we're seeing it push back above 1,500. And when you look at all the correlations that we usually do, I mean, last week we were talking about the bond market as well as the equity space as well. That correlation wasn't actually playing out as well. And so, there is an argument to be made that maybe we're seeing people sort of pull out altogether and go into cash as well. We've got Jared Blickery standing by here at the Wi-Fi Interactive Board. The VIX also closed at a record high yesterday. What do you have your eye on right now?
Yeah, so we're looking at gold. This is the intraday price action. We got so many headlines. Looks like we're going to get a lot of fiscal stimulus and also more intervention from the Fed. It's going to ease regulatory requirements, institute that commercial paper funding facility. So all of this is having an effect on gold. It is marching higher right now. Now, it had started from below 1,500 just before the market opened, and we can see it's advanced $42 net on the day, and that's good for an increase of nearly 3%, which is quite a bit for this market here. Now, we can also see what's happening in the interest rate space with the 10-year T-note yield. Now, that is even more elevated than it was, up 16 basis points. We have the yield curve expanding. So all of this is good news. It might not translate into higher prices for stocks that we keep on an immediate basis, but overall, I'd say we're marching in the right direction here.
We're going to be watching the oil market close in the next hour right now, but that's off another when we look at the prices back under $30 a barrel. Curious to get your take on what that means, because right now energy is the only sector in the red. So, I mean, when we talk about how important it is to see oil prices come back up a little bit to relieve this selling pressure, what do you make of that?
The energy sector is in real trouble here. There's no getting around that. Not only the energy sector, but the banks that have made loans to them. There are probably some banks in Texas that are going to have some severe problems here. These guys simply can't pull oil out of the ground and make money at these prices here. At least most of them can't, and that's in the shale oil space. Other producers, the traditional ones, they have it a little bit easier. But at $27.98, you got OPEC in a price war with itself and with Russia. I don't see any of this easing anytime soon. Now, the only thing that's going to put upward pressure on prices is that a lot of these shale producers are going to shutter production. But that's going to take a while, and it's going to take a while for existing supplies to work themselves through the system here.
Very quickly, Jared, when you look at who's actually leading today, I mean, it's all sort of relative, I guess, given the drop that we saw yesterday. But we have seen consumer staples, for example, being some of the safer buys that are out there. What are you seeing today?
Well, let's take a look at the sectors that are leading today. And this is pretty interesting because with the 10-year T-note expanding along with the yield curve, usually we would have some more plays like cyclical and value, but we're not seeing that. This is very defensive. So utilities is in the lead. It's up 11% after getting whacked considerably over the last week or so. Staples, real estate, and then we have tech and healthcare. Now, all of those are outperforming, so it's nice to see tech outperforming. To the downside, energy just can't catch a bid because, as we spoke, crude oil under pressure, then industrials, which is a cyclical, and then consumer discretionary, which is a cyclical. These guys just really are underperforming right now.
Okay, Jared Blickery, we'll check back in with you a little later in the show. Turning to combating the coronavirus, or at least the health side of things, a new report reveals the shocking costs for treatments. Joining us to discuss is Yahoo Finance's Adriana Belmonte. And Adriana, we've heard the White House come out and say in these press conferences repeatedly that the tests themselves will be free, those who need it. But you're talking about the cost after somebody, for example, tests positive. What are you finding on that front?
Yeah, so this report from Kaiser, they calculated what hospital admissions for pneumonia would be, and because pneumonia is one of the most prevalent conditions that comes with coronavirus, it was the easiest way to get an idea, and it could top $20,000 for a hospital stay, so it's a pretty costly amount.
Yeah, when we think about what was proposed here, too, though, I remember seeing that the idea that insurance companies would be waiving some of these things that was floated out there before. Of course, we're still waiting on the Senate to weigh things. We even saw that House bill recalled and potentially tweaked to appease the Republican senators. When we're thinking about this going back and forth, though, and you do look at the cost, what are some of the implications of not addressing what Americans who come down with COVID-19 might be facing? Because we already know we have an income inequality problem. We have a wealth inequality problem in this country. But if you further the health consequences we're seeing play out with Americans who don't have health insurance, how could things get worse?
Well, I mean, just to take a step back here, even for people who do have health insurance, I think the biggest thing to take away from here is they're still out of network, or the surprise medical bills that come when you go out of network. So, for example, you could be admitted to the hospital with pneumonia, and the hospital's in network, but you have to get an x-ray on your lungs. That radiologist might not be in network, and you could get slammed with the full cost of a bill. So that's already an issue. And then you have the people who don't even have insurance. They're going to get slammed with these as well. So the key takeaway that I've gotten, and just from talking to some experts as well, is that it's the hospital admissions that's the big pricey point here.
What if they can't pay for it? We're being told this is a public health crisis. There are certainly going to be those who test positive who don't have health insurance, who do need treatment, or else that does affect others around them. What plans are in place at this point, or what options do they have?
The problem is this hasn't been addressed yet. A lot of the insurance companies have come out and say, we're going to waive these costs, we're going to waive these costs, but nobody's really talked about what happens to the uninsured. I think for now, it's going to be, there's people through Medicare, Medicaid, those services are trying to, step it up here, but that's still the underlying question here.
Yeah, even when you think about people who have put off health costs, and we know there's a large amount of those Americans here who even do have health insurance, who have waived some of these things as well, which might make it even worse when you think about how the U.S. is uniquely ill-prepared to battle all this, Adriana.
Exactly. And another problem is when you have these high health costs that keep adding up, this is going to eventually add to people's employer premiums and deductibles. It's going to affect us in the long term as well. And another thing here, too, is people are talking about hitting the deductible and then it's covered, but this is early on in the year. A lot of people haven't even come close to hitting their deductibles yet, so that has to be taken into consideration as well.
Yeah.
Okay, Adriana Belmonte joining us on the phone there. Appreciate your time today. We've got much more on today's fast-moving developments around the coronavirus outbreak as well as the market action. We will be right back. Welcome to the ticker on Yahoo Finance. I'm Akiko Fujita.
And I'm Zack Guzman.
And we are watching the markets with 2 hours left to go in the trading day. The Dow is surging after the Federal Reserve announced it is repeating a financial crisis policy move to create a commercial paper funding facility to, in the words of the Fed, support the flow of credit to households and businesses. This comes as the Treasury Secretary Steven Mnuchin says the Trump administration is looking at sending checks to Americans immediately amid the coronavirus outbreak so they have cash to spend. Mnuchin also added individuals will be able to defer tax payments of up to $1 million and corporations up to $10 million for 90 days. So some additional specifics coming out on potential stimulus from the White House, certainly adding to that pop that we're seeing in the markets after that big sell-off yesterday. Economists at Morgan Stanley and Goldman Sachs are adding to the recession concerns, saying a global recession is now the base case. Morgan Stanley expects growth to fall 0.9% this year, while Goldman Sachs says GDP will decline to 1.25%. Joining me now is Keith Bliss. He is the managing partner and CEO at IQ Capital. Keith, what is your base case now?
Well, right now, as far as GDP is concerned, we're definitely going to see a hit from the first quarter and maybe into the second quarter, which would put us in a technical response that the U.S. would be in recession if we see contraction in both those quarters. But I'm of the firm belief that a lot of the lack of demand that we're seeing obviously is induced by the self-quarantining and the social distance policies that our elected leaders want us to play with right now to use in our society. So I think we'll snap back right away. The demand just doesn't automatically disappear. It has to be induced, and that's exactly what we're seeing here with this situation.
In terms of how the market's reacting to all this, though, Keith, when we look at it, I mean, a 30% drawdown already kind of prices in that recession here. So when you think about being oversold, that would clearly, I guess, be the case. We've been hearing that from a lot of analysts, but not necessarily as if it shouldn't be behaving that way, because we are dealing with some serious demand shocks. We got those manufacturing numbers yesterday. Things are looking like they're playing out exactly as you would expect in terms of panic right now. But what do you think about what investors should keep in mind moving forward?
Well, my sense is, Zach, that this wasn't a total capitulation by institutional investors. You have to understand what the market dynamic and the market structure that we're dealing with these days is like. And a lot of the trading and the activity that we've seen, while the volumes have been increasing at very high levels ever since February 21st, when we first caught the markets as oversold, is that you still have a lot of algorithms playing in the market, and they're not picking and selling and buying individual names. They're using a lot of ETFs in their strategies, including some ETFs that could be 3 times leverage one way or the other. So that's why you're seeing this whipsaw volatility. And in fact, the drawdown of 30% on the Dow and near that amount on the S&P 500, which you're right, you would say that is trying to get ahead of potential recessionary fears. But my problem here is that because of the market structure and technology at play here is that it happened too quickly, and therefore we should see some sort of a snapback. The real issue of why we've not seen a snapback is because the real money, the smart money, which again is the institutional players, are just trying to let the machines clear the way, plow the way out before they step in and they start bidding this market. But I'm of a firm belief, and like I said, we caught it on February 21st, and then we got one of the most oversold signals that we see inside of the quantitative models that I view the next Monday on February 24th, and we've been down at these levels, and the volatility has been whipping us around. But I do think this will bounce back. And in fact, my target on the S&P 500 is once this noise clears out and we start trading on a normal level, it should trade back up into the 3,100, 3,200 range on the S&P 500. So given all that, that's where I think it will go. It will take a few more sessions. We've only been in this really crazy volatility for 15 trading sessions. If you go back and look at the calendar, it seems like we've been trading for a year in this, but it's really been a short period of time.
I mean, S&P 500 at 3,100, we're going back to what, just 3 weeks ago, where we were talking about the record levels. If you are anticipating that bounce back, what's the advice you give to investors out there who are saying, I want to position myself right now and buy in at the lows?
Well, a couple of points to keep in mind. Number one is trying to catch a low and trying to call a top is a fool's errand. That's the first thing. The second thing that I tell people is, like you always hear, you hear in the commercials and you hear financial advisors saying this all the time. What is your time frame? How old are you and what are you going to do? Because right now, I never thought I'd see this again in my career. We saw it during 2008, 2009. I said this is a once-in-a-lifetime buying opportunity. In fact, it turned out to be that way. Now we have a twice-in-a-lifetime buying opportunity because of some force majeure event, which is a global pandemic. I would say that you have the opportunity to go out and buy some really good companies that are not going to go bankrupt. They're going to be through this in a short period of time. And I'm talking about companies like General Mills, Procter & Gamble, some of the other big consumer companies, consumer staple companies. And I've even been doing some work and tinkering around with what's happening with Boeing right now. Boeing Aerospace, for me, you see where it was trading just 6 months ago, and now it's down around, wearing a $100 handle. This is an important company to the U.S. and global economy. I dare say if they go bankrupt, we've got bigger issues to worry about than picking stocks. So this is one of those companies where you could buy, just stick it in your portfolio, forget it, and when you retire, you'll be nice and happy with the performance.
Okay, Keith Bliss, appreciate you joining us today.
My pleasure. Be safe.
Well, Treasury Secretary Steven Mnuchin proposing a stimulus package amid the coronavirus outbreak, saying Americans need cash right now.
We're looking at sending checks to Americans immediately. And what we've heard from hardworking Americans, many companies have now shut down, whether it's bars or restaurants. Americans need cash now, and the president wants to get cash now.
Let's bring in Michael Gapin. He's a chief U.S. economist for Barclays. Michael, it's great to have you on today. You put out a note a few days ago forecasting a global recession for the year. 1.8% is the number that Barclays put out. You heard what the secretary had to say today. How significant, how far are those kind of measures going to go in at least softening the blow?
Well, I think that they will soften the blow a little bit. I mean, the bigger picture, I'd say, is monetary and fiscal policy can't really offset the direct effects of the virus, but they can be very important in helping prepare the economy for the eventual rebound. So a large stimulus package is warranted, and it should have the combination of direct assistance to households, which could come, as the Secretary said, through direct tax rebates or direct payments or maybe even a payroll tax cut. But then it's also going to include loan guarantee assistance and aid for the airlines, hotels, the travel industry, and restaurants. So I think it'll be that combination, assistance for the service-oriented sectors that are bearing the brunt of this, but then also just direct support to households.
Michael, when we look at the responses to all this, aside from Secretary Mnuchin sounding like a J.G. Wentworth commercial there with the cash now thing, when we look at the Fed's response, the commercial paper market, and what they're doing there, they're pulling that lever to come in here as a lender of last resort. They're also coming over on the other side, rates now back at zero. It's the first time we've seen that since the financial crisis. As we move forward, we might also get this $850 billion stimulus package as well passed. So when we put all of those things together and think about the fact that once we get out of this storm that is a pandemic, if we move past all that with all of these stimulus measures in place, theoretically, past that, are you seeing a V-shaped recovery right now as well, or is it the case that this is just a backstop, the panic we're seeing right now, but potentially could still stay in a recession beyond these measures taking place?
So we still see it as closer to a V-shape than anything else. But I would just, my point here is that we need these to prevent I mean the extraordinarily accommodative monetary policy, the provision of liquidity backstops, the Treasury fiscal assistance. We need these things to prevent adverse second-round effects and kind of guarantee, hopefully, a V-shaped recovery. Because the real risk here is that there are leverage situations that could go awry. And by that, I mean you don't want too many distress events. You don't want defaults. You don't want widespread layoffs in a way that what looks like a V-shape is actually just a prick of something larger, and it does create that recession. So monetary and fiscal policy, again, they can't really offset the direct effect of this, but you want to prevent financial markets from gumming up and stop working. You want to make sure that credit flows freely, and you want to make sure that households do have some additional resources such that when they can get back out and spend, that they will. So I think you need this policy support in order to really increase the odds that this is just a maybe 1.5 quarter drag on U.S. economic activity, and you get a rebound later this year. If not, then you could be looking at a worse outcome.
Michael, one of the sectors that have been hardest hit is the airline industry, and we got some pretty grim numbers out from IATA today, which is, of course, the global trade group for these airlines, saying 75% of these airlines globally will run out of cash in the next 3 months. They're calling for $150 to $200 billion in government support, not just in the U.S., of course, but globally. How do you calculate the impact of the airline industry and the overall economic picture when it is so significant right now with the fact that these airlines have essentially all but shut down?
Right. I think the numbers were about 95% of all air travel is now affected by bans because of the coronavirus. So I think the way that I would look at it is this is an idiosyncratic shock. It's not the airline industry's fault that it's in this position. It's in this position because of the virus and the response from the public sector. So assistance to the airlines is necessary. I can't really judge the overall number on that level of appropriateness, but we certainly did this before in the United States following the attacks of September 11th. At that time, Congress provided what's going to sound like small numbers relative to what you just said, but Congress provided $5 billion in direct aid to the U.S. airlines and $10 billion in loan guarantees. So if you multiply that kind of support across countries, you're going to get a large number. But I think there is precedence for this, and I do think it'll be part of the fiscal response in the U.S., the Phase 3 bill that is getting discussed right now between the White House and Congress.
Okay, Michael Gapin, Barclays chief U.S. economist. Appreciate your insight today. Coming up, a new report says a global recession is already here because of the coronavirus. Its author joins us with the details next.
Welcome back to the ticker. We are seeing a bit of a recovery here on Tuesday with the Dow up 854 points after yesterday's nearly 3,000 point sell-off. Still waiting to see what kind of stimulus measures could come through after Secretary of Treasury Steven Mnuchin teased an $850 billion stimulus package. Okay, S&P Global's economists say the global recession is here and now. We've certainly seen the concerns intensifying over the last several weeks as we've seen businesses shut down globally because of the pandemic fears. Joining us to discuss is Global Chief Economist for S&P Global Ratings, Paul Grunwald. Paul, it's great to have you on today. Walk me through your thesis here in terms of assessing the recession that you say is already here, because it paints a pretty grim picture.
Yeah, well, first, thanks for having me on the show. A number of things led us to this conclusion to make the call for a global recession. First was the accelerating spread of the virus in the U.S. and Europe. Two was the sharp restrictions of people-to-people contact and what that does to activity. And finally, we're starting to get some early data on the effects of the economic effects of the virus in China, and we saw industrial production drop by 12% year on year in January, February. So it was becoming increasingly clear to us that we're in for a very sharp decline in activity from now until probably the middle of the year. So we're entering a global recession, so we made the call.
So let me pick up on that point about the data we got from China, because I think when those industrial production numbers came out, as well as the unemployment numbers, there was certainly a bit of a gasp. We were expecting a big shock. This was much more than was expected. What are the parallels that we can draw between what we're seeing in China weeks after they have seen the peak of this pandemic and what is likely to play out here in the U.S.?
Well, first of all, you're right. The market was looking for something like a 3% decline in industrial production in China. It was 4 times that large. But we don't really have any models in economics for mapping a health event like this into economic variables. What these restrictions on people-to-people contact are doing is putting a big dent in demand. We know here, for example, in the U.S., sporting events have been canceled, entertainment's been canceled, the kids are home from school, the parents are home from work, so a lot of the discretionary spending is getting hit. We actually think that's going to be the main channel, and how severe it is and how long it lasts is really kind of an open question right now.
Paul, we opened the show talking about the ballooning of corporate debt here as we move along in all this. And when we think about how much that really has ballooned, since 2008, corporations worldwide have issued about $1.8 trillion in new bonds each year. That's roughly double the pace that we saw over the last 7 years. And a new survey from Bank of America says that a record net 53% of fund managers surveyed said corporate balance sheets are over-leveraged. So when you digest all of that, at least sitting here, it seems surprising that we haven't seen more downgrades when we think about the credit ratings for some of these companies out there. Number one, why is that? And number two, where do you think that might happen first when we think about companies that are maybe too over-leveraged here as things slow down?
Yeah, well, first of all, I'm an economist, so I'm not a rating analyst, but my credit colleagues did put out a parallel piece this morning with myself and my team. They're looking at sectors that are going to be most hit by the sorts of things we're talking about: travel, entertainment, oil and gas for the big drop in energy prices, et cetera. So I can't comment on the rating specifically, but we know that the impacts of these, the coronavirus, the economic impacts of the virus are going to be uneven. So they're very focused on those most vulnerable sectors right now.
Paul, let's walk through some of the numbers that you have put out now, because you're calling for, or you're looking at GDP growth of 1 to 1.5% globally, a contraction over in Europe of 0.5% to 1% this year. When you look to the government response that's happening, not just here in the U.S., but in Europe as well, is there anything that, I guess I should rephrase this by saying, what would it take for you to maybe change your outlook on that front? In other words, is there a stimulus package that we could see passed here in the U.S. or over in Europe that could be significant enough to maybe reduce the shock that we're seeing in the system right now?
Right. Well, first of all, I think it's kind of obvious in the current environment it's hard to make point forecasts. That's why we went to this model of using a 0.5 percentage point ranges. We've got implicitly baked into these forecasts some sort of government response, but I think it's going to be the fiscal response is going to have to be something that addresses the most affected parts of the economy, whether those are the sectors in trouble or the SMEs. We've seen some countries like New Zealand roll out subsidies to keep people on the payroll. So all of this is going to be a form of damage control. It's not necessarily going to be cheap, but we think those sorts of measures are going to keep demand strong. The labor market's going to be key to watch for the next couple of months. In terms of getting the forecast numbers higher, we still think the risks to our forecasts are on the downside. It's really more about the health effects, to be honest. As I said, there's just a huge amount of uncertainty right now. And until we see some stabilization in the health numbers, and all the health experts say that's going to be a while, I think we're probably going to stick with a relatively pessimistic forecast.
Okay, Paul Grunwald, appreciate you helping us make sense of all of this. The global chief economist for S&P Global.
After the break, just as it did in the financial crisis, the Fed announcing it will backstop short-term lending for companies looking to secure funding to stay afloat. Why the controversial move signals how serious the financial fallout of coronavirus has become. The ticker is back in 2.
Well, the Federal Reserve announcing today is repeating a financial crisis policy move to create a commercial paper funding facility to support the flow or credit to households and businesses. And we have seen a bit of a pop on the back of that in the markets today. In addition, we heard from the White House, specifically Treasury Secretary Mnuchin today in an afternoon press conference talking about additional stimulus that the administration is currently looking at that has led to what we're seeing here on the Dow right now. 21,161 is the level we are looking at, up 940 or 900, more than 900 points there. Brian Chung is here with us at the desk to kind of break down what we have been seeing here. It's tough to tie the moves we're seeing there directly to what happened with the Fed. Certainly a number of headlines coming within the hour, but how significant was this move that we saw this morning?
It was significant, but it was actually expected. So the Fed announced a number of tools in that surprise Sunday announcement, right? In addition to slashing rates to zero, it also announced $700 billion of quantitative easing and then a number of other measures with regards to bank liquidity and capital. But one specific concern was that all of those types of transmission mechanisms that the Federal Reserve had announced wasn't really doing anything directly to address the stresses that we've seen in the corporate debt market. And one short-term corner of the corporate debt market is commercial paper, right? This is short-term unsecured debt that companies of all different types of industries will issue to get short-term funding for anything less than a year, effectively. A lot of commercial paper is actually 90 days for only 3 months. And there was concern right now that a lot of people and a lot of broker dealers and banks are just kind of sidelining themselves amid the market volatility. So companies have no one to turn to when they're trying to offer the commercial paper. So the Federal Reserve announcement today is saying that they'll be able to renew corporate commercial paper that's issued, which would be a direct relief to any sort of company that's really looking for relief as they try to map out how they're going to get through the coronavirus over the next few months.
Okay, let's bring in Danielle DiMartino Booth. She is with she's the director of intelligence for Quill Intelligence. Danielle, good to have you on today. You heard what Brian had to say about the Fed move today. Your reaction to what we saw?
Well, I think right now we're seeing the Fed in the fastest mode that I've ever seen them. This is turbocharged Fed policy. And the good news is there are so many different facilities that were rolled out during the financial crisis that at the New York Fed in downtown New York, all they literally have to do is dust off the old facilities and roll them out one by one. So as they see stress, I think we're going to continue to see these facilities get reborn, and that's what's important. Clearly, there's somebody there in New York. There are people in Washington, D.C., and Powell himself is very familiar with private equity, with the debt markets, with hedge funds. So he understands the inner workings of these markets on a personal level and is able, I think, better than his predecessors to be able to address stresses as they emerge in the credit markets, which is really critical given the feedback mechanism we've seen between the credit and the stock markets.
Yeah, let's be real. I mean, everyone was quick to bash Chair Powell here, too, though, right? When we saw the sell-off on Monday, and I'm not sure how fair that was, considering there's only so much you can do from a monetary side, and we're still waiting for the fiscal measures here to come through. But he is pulling a lot of the same levers we saw back in 2008, this last move in the commercial paper market space, the latest lever, to also align with what we saw play out back in 2008 in the financial crisis. So curious to get your take on how serious it is when we think about that spread specifically there, since we saw the same thing back when we broke the buck. If you remember what happened back then. I mean, it's strange to see everything playing out, though it's such a different crisis we're dealing with here.
It is a different crisis, and I would be clear to point out that we really haven't had a Lehman moment. And this is something that we've been really debating in my inner circle is what are the differences between now and what we had in 2008? The speed and the violence with which we've seen these moves. We've had the fastest 10 and 20 and 30% correction in U.S. history that have played out in a matter of weeks in the United States. But by the same token, we really haven't had a systemic risk moment yet in the credit markets. Now, what they've rolled out today is overnight funding relief. And what remains to be seen is whether or not, if you go out further on the time spectrum, given the tremendous amount of refinancings that have to be completed in the high yield, in the junk market this year, whether or not the Fed is going to see fit to extend out the time frame that it's offering liquidity on an emergency basis.
Danielle, Brian Chung here. So when we're talking about going forward, what more the Fed could do, seems like they have not yet unleashed the term asset lending relief program that they actually had in 2008. There were some questions, too, about whether or not they could further lever their balance sheet with quantitative easing because they haven't necessarily committed to a certain amount of purchases per week or per month, per se. What would you expect from the Federal Reserve if you were to, say, see conditions deteriorate further in either money markets, treasury markets, or in the credit markets?
Well, I think you have to look back, more importantly, at what happened on Sunday night in order to look forward. The primary opening up the discount window to small and medium-sized banks is really critical because they can park a loan. They can park a bond. They can use as collateral things that you would normally not consider to be kind of safe assets, if you will, a treasury or mortgage-backed security. So there's a primary dealer credit facility that could also be rolled out in this same vein. And as far as quantitative easing goes, and as well as Chair Powell's stated commitment, we can ramp up the money printing, if that's what you're talking about, beyond $150, $200 billion a month. It wouldn't surprise me to see that happen, given they did $37 billion of quantitative easing on one Friday afternoon last week. So I think the Fed stands ready to go as big as it needs to go in terms of a permanent quantitative easing type of balance sheet growth announcement. $37 billion on a Saturday afternoon, $700 billion on a Sunday night. I think the Fed's prepared to do whatever it takes.
Okay, we'll be watching to see if those additional levers are pulled. Danielle DiMartino Booth, always good to talk to you.
Thank you.
Well, let's now bring in Randy Kroschner. He is a deputy dean and professor of economics at the University of Chicago's Booth School of Business. And Randy, you were also, we should point out, a governor of the Fed during the global financial crisis. So you must be looking at what's been happening over the last several weeks, saying this may look starting to look a bit familiar here. We're talking about what happened today with the Fed in terms of the commercial paper market. I mean, how significant is this in terms of getting the help to the businesses that need it most right now?
It's very important, and it's exactly one of the programs that we had done while I was at the Fed in 2008, 2009, and there was a challenge in firms getting their short-term funding from the outside. That's exactly what this is. Commercial paper, exactly as you were discussing before, is a very important form of finance for larger firms to be able to pay employees, to be able to pay their suppliers. And if that dries up, the system seizes up because they can't make payments, they can't pay employees, et cetera. So it's very important for the Fed to provide the funding in a market like this. In normal circumstances, the Fed can just provide more funding to banks, and the banks then figure out where it needs to go. In extreme circumstances like this, the banks are just going to be holding and hoarding liquidity, so the Fed needs to go directly into particular markets like here.
Randy, Brian Chung here. So you were, as I understand it, while you were at the Fed, working a lot with the supervisory issues. And I'm just wondering from that standpoint, what more do you think the Federal Reserve could do? It did clarify that it would encourage banks to tap into their capital and liquidity buffers, but you have some banks like Bank of America today had a research note saying maybe the GSIB surcharge, supplementary leverage ratio, liquidity coverage ratio changes. Reg W was something that was suspended so that discount window money could flow through the other subsidiaries. I'm wondering, do you think those things will be helpful, and would you expect the current Fed to also hit those levers as well?
So all of these are going to be helpful. You've got to put sort of the whole package together, and that's really the key. Do the banks feel comfortable that the Fed really is serious, that they're going to allow them to do more lending, and potentially do lending that's a little bit riskier now than it was just a few months ago, and not get hammered if some of these things don't, hammered from a regulatory point of view, if some of these loans don't work out so well. That's really the key. They've got to give to the confidence to the banks that the Fed is serious, that the banks, it's okay for the banks to be doing a little bit more lending now, especially small and medium-sized enterprises, and they'll be forgiving if some of these loans are a little bit more challenging to get repaid on.
Yeah, Randy, when we talk about this, our previous guest was just talking about not having a Lehman moment, to use the term, to compare back to 2008 and the financial crisis. I mean, obviously, the Fed wants to step in here and make sure that a lot of the panic is addressed. But when you think about rates being so low for so long, and everyone talking about zombie companies and some companies that likely would have gone bankrupt and closed down before, what might happen if you're too accommodative here? I'm not sure if now's the time to be worrying about that when we consider how far we've fallen. But is there a concern? We were talking to a colleague of yours yesterday about some of these companies that likely would have gone bust already might still be floating out there, and whether or not going too far is an issue that the Fed needs to worry about.
Oh, for sure. You don't want to go too far, but you want to show that you're aware of the issue, and that if it turns out that this issue is a 2 to 3 month issue, then providing that kind of bridge financing, that can be helpful to get people through. If it's a longer term issue, then those fundamental supply issues that supply chains are broken, and so that you can't get goods in, that workers are going to be home rather than being able to come into the office to produce, that there are other sort of longer term consequences, then that would not be a good idea for the Fed to be doing that. And so the key is monitoring this very carefully, not going too far, as you said, but providing some support in the short run for firms that if it's just a short run issue, then they'll be able to make it through, but just to make sure that they got the funding for the next few months. But we don't know. That's the challenge with this, exactly as the previous guest said. There's no specific moment or specific thing to focus on. It's a broader issue. There's a lot of uncertainty. But I think some sympathy from the Fed to the banks and to the lenders will also help to provide confidence that the Fed is aware of the issues.
And we've been talking about the differentiating factors between 2008 and now. And I think one important thing is that it was a contagion within the financial system in 2008, whereas this was a truly exogenous shock that the financial industry is trying to insulate itself from with the help of the Federal Reserve. So I'm wondering from that standpoint, how do you reason through the tools that the Fed is using right now? And when we talk about capital and liquidity, for example, I think the regulatory aspect of this is really important. And for those that are maybe watching this who aren't dialed into FinReg, the question is, why would you loosen the rules on the banks if now is the time when you might be worrying that the banks could become the next victim of this crisis? How do you square those two things to make sure you have enough capital in the system to protect the financial services companies while at the same time encouraging lending to spur economic activity?
That's exactly the right question to be asking. And one of the things that we did post-crisis is dramatically increase the amount of capital and increase the amount of liquidity that banks are holding, precisely so that if there is a major shock that comes, you could reduce these, not dramatically, but reduce them a bit to take some of the pressure off the banks to allow them to continue to lend. You don't want to get down to levels that are too low and too dangerous, but taking a little bit of that off in a situation where they have dramatically more capital than they had before, that seems to pass a sensible cost-benefit test.
Randy Kroshner, always good to talk to you. Appreciate your time today.
Good night.
Coming up, the Fed launching a commercial paper funding facility, as we just discussed, to try and calm the markets. Doesn't go far enough to provide longer-term relief.
Welcome back to the ticker. We are seeing the Dow continue its rebound here, up now more than 1,000 points. You can see moving more than 5.5% to the upside as the S&P and NASDAQ respond in kind. We're seeing the NASDAQ the biggest gainer, actually the S&P 500 biggest gainer here, although we have seen some strong moves from some tech names throughout the day. Meanwhile, President Trump says he spoke with restaurant executives earlier today as the industry looks to combat the economic impact of the coronavirus. Take a listen.
We discussed the important role that the drive-through pickup and delivery service can play in the weeks ahead. So that's happening, and they have been fantastic. They have been absolutely fantastic, and they've been doing it already, but they're keeping it open, and smaller staffs, very capable people and very capable companies, and they're doing it, pickups.
All right, so there you go. You hear from the president. I want to bring in Yahoo Finance's Heidi Chung now with more on this. And Heidi, I mean, it's one thing to be dealing with some of the largest companies out there in the restaurant space, but the president and the stimulus package response here also needs to address a lot of the small businesses that we're seeing close shop here in New York and around the country. So how are they going to manage both sides of that equation?
Absolutely, Zach. But yeah, let's just quickly talk about the big restaurant heavyweights that were on this phone call with President Donald Trump. Among those on the call, we had CEOs of Domino's Pizza, Chick-fil-A, Subway, Restaurant Brands, Bloomin' Brands, Yum Brands, Darden Restaurants, Papa John's, and Wendy's. We also had McDonald's USA president also on that call. But like you mentioned, it's not just the big restaurants that are sort of dealing with the fallout from this coronavirus outbreak. We have a lot of the small businesses that are affected. So I want to break down both of those for you. But when we take a look at the bigger restaurants and chains, we've seen a handful of them, including McDonald's, Chick-fil-A, and Starbucks, close down the dining areas of their company-owned restaurants. Last night, McDonald's announcing that across its restaurants in the U.S. that are company-owned, they would no longer be allowing patrons to come in and eat inside the restaurants. Instead, the drive-thrus would remain open and delivery and takeout would remain an option. Now, for some context here, there are about 14,000 McDonald's stores that are here in the U.S., and only about 5% of those are owned by McDonald's. So McDonald's is also urging its franchisees to also take the similar action. I also do want to touch on an SEC filing where it revealed that amid all of this fallout, McDonald's is actually considering rent deferrals for its franchisees for a time period. In the filing, the company saying, quote, "We are working with franchisees around the world in order to evaluate operational feasibility and support financial liquidity, e.g. rent deferrals during this period of uncertainty. We are also working closely with suppliers on contingency planning for continuous supply." And it also went on to say that the negative financial impact to our results cannot be reasonably estimated. So a lot of companies trying to deal with this fallout, but like you said, not just the big companies, the small ones as well. And one of the companies that are actually looking to help some of these independent small business restaurant owners is DoorDash. The company actually announcing today that it will be charging 0 commission for 30 days for any new merchants that are looking to list on their platform. So a lot of people looking to help each other out in tough times, Zach.
Yeah, we saw its competitor Grubhub try and make similar moves to address some of the pains restaurants were feeling, but a lot of questions, being asked right now when we think about these hardest hit restaurant businesses out there, as a lot of people are focusing on their balance sheets right now to see how long they can withstand some of this. Darden just again down by about 20% today. Heidi Chung, thank you so much for bringing us that. Meantime, Amazon is suspending all shipments of products other than medical supplies and household staples to its warehouses. An important distinction there, according to Business Insider. Yahoo Finance's Emily McCormick joins us now with the latest. Emily, I guess that would make sense since they want to conserve space and resources specifically tied to what might be most needed in a crisis like this.
Right, so this move really speaks to just that panic buying phenomenon that we've seen, not just for these big box retailers, for these warehouse retailers like Costco, but also for these e-commerce giants like Amazon. So with this move, Amazon is saying that the only items that can really be shipped are canned beans, things like diapers, dog food, disinfecting wipes, medical supplies, and household goods that are considered essentials. Examples of things that won't actually be shipped to these warehouses are jeans, phone cases, and other non-essentials. And these restrictions are set to last through April 5th. These apply both to large vendors and to third-party sellers who list items to sell on Amazon.com directly. And, I think what's really important about this notice, though, is that it's not immediately clear what the impact is going to be for consumers, because we know this is going to impact the warehouses. But given that we're not seeing as much consumer spending, we just had that retail sales report out earlier today, and it disappointed that they aren't spending as much on these non-essentials. It's not clear how quickly they're going to actually deplete these warehouses of the non-essentials. So I think overall it is being taken as a good sign that Amazon is stocking up mostly on these essentials.
Another question as it relates to the demand that we've seen for Amazon. They're talking about hiring 100,000 additional workers out there. I guess the first question is, where are the workers?
Right.
And what's the plan and what's the timeline right now?
Yeah, so Amazon is looking to hire 100,000 full-time and part-time workers. They're investing $350 million, and this is globally, in order to increase pay by $2 per hour in the U.S., €2 per hour in the U.K., and in other parts of EU countries. So they are trying to really bolster their workforce here. I think one of the things that Amazon really has hitting it on both sides is the fact that, yes, they are providing what many people would consider to be an essential service for those who don't want to go out and physically purchase things in actual grocery stores and other brick and mortar locations. But at the same time, they are coming under some flack for keeping their warehouses open, potentially endangering the workers that they're now actually increasing the staffing for amid the coronavirus outbreak. So it is an issue.
That seems to be the challenge that a lot of these essential stores are having to deal with. We've got grocery stores where we've already seen the long lines in places. Here in New York, we've seen the lines out the door in places like Trader Joe's, but the reality is these places need to stay open, but they've also got workers who are concerned about their own safety as well. What are you hearing among other grocery store chains about how they're going to try to get the scheduling and keep up with the demand moving forward?
Well, we are hearing about different retailers cutting back hours. Of course, we have New York that's actually shutting restaurants, bars, and some of these other non-essentials. But looking at Amazon specifically, it's even more of an issue in Europe, where we have some of the center of the outbreak. So Italy, Spain, we have Bloomberg and CNBC reporting reporting that warehouse workers had tested positive in at least a couple of these locations, and that some of these workers had talked about potentially going on strike, really fighting for the rights that they feel that they have as workers, as some of these other employees who aren't in the warehouses are able to work from home. It's something that they haven't been able to enjoy as well.
Yeah, and you just wonder what would happen too, though, if all of those DoorDash delivery, food delivery people, grocery delivery people also ordered to lock down, like what we're seeing out of San Francisco and potentially.
Well, I was going to say, I mean, you go further down the supply chain, right? I mean, you look at farmers out of California. What if a lot of those farmers tested positive? I mean, they are sort of the essential workers out there to keep up with this demand. So it seems like there's a lot of questions that still need to be addressed. I mean, it really is unprecedented, the kind of actions that we're seeing from these stores.
Definitely. It could come from the companies. It could come from the government, or some combination of the two, and I think that that's what we're waiting to hear next.
Yeah, and we're going to see what city responses across the country will look like. We've already seen drastic measures taken on the West Coast, could be taken here on the East Coast as well. But for now, Emily McCormick, thank you so much for joining us. Coming up, New York reporting another jump in coronavirus cases as Governor Andrew Cuomo says the state is desperately seeking ventilators. We'll chat with NYU's Dean of Nursing about how stretched America's healthcare system is about to become. The ticker is back in 2. Welcome back. New York Governor Andrew Cuomo says the coronavirus outbreak has spread to over 1,000 people in New York State. And this as Mayor Bill de Blasio says New Yorkers should be prepared for a shelter-in-place order. Joining us now is Eileen Sullivan-Marks. She is a dean at NYU Rory Myers College of Nursing and president of the American Academy of Nursing. It's good to see you. I want to start with, the fact that U.S. health officials are trying to ramp up testing with things like drive-through exams. We're still seeing this issue of shortages of supplies that are needed to test Americans across the country. And then there's also the background question mark of how many beds we're going to have to address all of these things. What have you been hearing on the front lines?
Well, all of that, and yes, it is a huge logistic issue. You need testing to understand where the pockets of disease are and where it's emerging. And when you know that, you can block and tackle and do what they did in San Francisco recently, where you shut down certain neighborhoods, certain counties to decrease flow. That's part of how testing informs you. Then the other reason you need testing is diagnostic. And the diagnostic tells you who in your area has the real COVID-19 disease or who has other flu. And then you need to understand, all right, at what point is the surge coming that we're going to need to care for the most seriously ill? And that includes the kind of things you see happening now where separate entrances to emergency rooms, emergency departments, setting up receptions for people coming in and then triaging. And then messages going out that you can use telehealth to triage. In other words, if you feel sick, don't necessarily go right to an emergency department, but contact your primary care provider or provider, call the telehealth lines and find out if you're at a stage where you need to come in for treatment. I think it's going to be a huge test for our system, probably one of the biggest tests we've seen in more than a generation.
Eileen, you alluded to the concerns about supplies or medical supplies to be able to withstand this pandemic as we see the numbers in the U.S. Increase. There's also questions about healthcare workers themselves, and we've heard those reports of retired nurses being called back. What are you hearing on that front, and do we have enough workers in place right now to withstand the kind of estimates we're hearing from the CDC?
Well, the question always has been about nursing shortages, and nursing shortages are in certain areas and other areas don't have as much of a shortage. In urban areas, you might be doing fine. However, I can tell you that within the last few hours, I have been working email within my university to make sure that my alumni, my faculty, my students with licenses are available to the health systems on separate call to be available to be called in for to provide care. And this is rapidly changing by the hour. And I think it won't be unexpected if we do need to call in for larger help from the federal resources, the U.S. Public Health Service, Commission Corps, and even perhaps military. That has to be in the plans for as we move ahead.
No question, those headlines changing by the hour as our viewers look at the latest headline coming out of New York with Mayor Bill de Blasio saying that New Yorkers could be asked to shelter in place. Eileen Silva-Marks, appreciate you joining us today.
Thank you.
Let's now bring in former DHS Chief of Staff and CEO of, or co-CEO, I should say, of the Chertoff Group, Chad Sweet. Chad, it's good to have you on today. I want to see if we can draw on your experience from the Department of Homeland Security. We've been talking a lot about the health concerns, but we've also heard those reports at the airport. You know, those who were coming in even just a few days ago saying they weren't necessarily being asked about where they had been in places like Europe. And so there's questions about whether the screening process is in place. And then, of course, those long lines that we saw at airports across the country over the weekend. What are you hearing in terms of how the DHS is responding right now, whether they're starting to get a handle of this massive crisis?
Well, thank you. I think DHS is getting a handle on it. It's something that in any one of these scenarios, you have to be risk-based, and what they had to do was funnel the traffic to 13 airports that have the capacity to do enhanced screening. And as a result of that, as you saw, unfortunately, the volume of folks that came back is something that you can't predict, but it obviously was a wave that was difficult to manage. I think DHS is also trying to do a couple of additional things to help alleviate that. Number one, you're going to see them using more technology, for example, things like infrared cameras to distinguish who's got a fever or at least evidencing a fever so they can start to triage and separate those that don't. You're also going to see things, I think, that as more and more Americans come home, we would expect the flow to dissipate over time, and that should alleviate a lot of the pressure that we're seeing right now.
Within the DHS, I want to talk about TSA as well. When we're seeing a case of a TSA officer at Cleveland testing positive for coronavirus here, when we have that going on, what's to do about the restriction in travel right now? Because President Trump has seemingly applauded himself for locking out China when he was thinking about what to do back then. But now moving forward, I mean, is there more that should be done? Should we approach the doomsday scenario of shutting down airlines completely here?
Well, I think if you use the example of the stock market, as you saw, literally just yesterday, there are triggers that if it falls to a certain point, there's a pause. And I think what the president may choose to do domestically is either have a nationwide pause, or most likely it'll be more of a targeted pause where in the hotspot states, just like he's done on the hotspot countries globally. He didn't ban all travel from around the world, but he did ban it from China, Italy, South Korea, the areas that really evidence the most cases of infection. And so right now, the three biggest hotspots inside the United States are the state of Washington, California, and New York. So I think there you could see the president taking action in the next few days. In addition, though, airlines themselves are under enormous pressure. Bookings are down 70%. And in some cases, it's just not economic to fly some of these routes. And they lose more money with a half-filled plane, as you can imagine, than just keeping them grounded. So it's going to have to be a blend of looking at the economics as well as a risk-based approach for public safety.
Okay, Chad Sweet, the co-CEO of the Chertoff Group. Appreciate you joining us today.
Thank you. Good to be with you.
We've got much more on today's market rally right after this. About an hour left to go in the trading day. We will be right back.
Welcome back to the ticker. Right now, we are looking at the market action. We're seeing the Dow give back a little bit of the rally we saw, up just 743 points. The S&P and the NASDAQ in the green as well. I want to get to Jared Blickery right now at the Wi-Fi Interactive Board for what is moving here. Jared, what are we seeing move?
Yeah, so we got the Dow up 800 points. Let's take a quick look at the price action here, and we can see kind of a double top. But basically, we were just by the session highs from earlier, and now we're just off a little bit here. I wouldn't call this too much of a move. The S&P 500, similar pattern throughout the day, up nearly 5%. I'd also note, while we take a look at bonds here, that interesting pattern. Over the last 2 weeks, whatever we do in the afternoon, we reverse in the morning. So if we end up, we start down. If we end down, we start up. So basically, kind of role reversal here. This is up to 21 basis points. That would be the 10-year T-note yield, and that is huge. We're seeing the 2's 10 yield curve expand considerably. But the U.S. dollar is now approaching a multi-year high. Got to keep an eye on that, too, because there is a lot of funding pressure out there, and that is reducing liquidity to the marketplace. Apple is up 4%, Alphabet up 2%, Facebook only 1%, but Microsoft and Amazon both up better than 6%, nearly 7%. Notably, Tesla is down today, but we're going to take a look at the sectors before we close out here. We got utilities, staples, materials, and tech, and real estate, and healthcare all outperforming. It's an interesting mix, but utilities up 11%. At least it's not getting hammered the way it was last week. Guys?
Yeah, I'm not sure if a lot of confidence would be brought in here when we see utilities the biggest gainer here, but also interesting to see the 10-year yield almost back above 1%. You think how far we came?
Yeah, I mean, we're talking about the
points.
correlations that.
That's how far we came.
It's nonsense. We're going to continue the nonsense on the other side of the break. Stay tuned. The final round is next.
She's allergic.
Hello, everyone. I'm Shauna Smith in New York, and this is the final round. We have stocks bouncing back here as the Fed and government take more steps to address the coronavirus crisis.
And I'm Dan Roberts. This says Treasury Secretary Steve Mnuchin now saying he wants to get cash in the hands of Americans immediately as a government stimulus bill makes its way through the Senate. We will have more on that and all the market action from today coming up.
Plus, we had the latest on the coronavirus pandemic and the race for a vaccine. And game on, video game stocks poised to get a boost. We walk through Wall Street's top picks. Plus, we have San Jose Mayor Sam Liccardo on the extreme measures his city is taking to combat the virus. Well, with us now, we have Yahoo Finance's Emily McCormick. And Emily, it has been quite a day on Wall Street, very different when we take a look at what we had happen yesterday. So we're looking at another volatile day. We can see the Dow up 726 points, S&P and NASDAQ also holding on to their gains. Now the stocks are jumping higher here after the White House laid out a stimulus plan to cushion the effects of the virus. And Emily, I know you've been closely watching the markets today. I mean, was this what Wall Street was waiting to hear from the administration?
It's at least something that they were hoping to hear. I mean, we're getting more of a response on the fiscal side, on the monetary policy side. We have, of course, the Fed coming out earlier today and relaunching its commercial paper funding facility. So really trying to help businesses get more access to liquidity, get more access to short-term funding. So that's on one front. And then we have, of course, Treasury Secretary Stephen Mnuchin coming out saying that we could be seeing checks of $1,000 sent out to taxpayers in the next 2 weeks. Of course, Trump saying that he wanted to support the airlines, Boeing, some of these major companies that have been hit by the coronavirus outbreak and the related fallout. So we are seeing policymakers start to respond to this. Whether it's going far enough remains to be seen. I'm sure Wall Street will still be asking for more.
Worth mentioning that in pre-market this morning, we hit, the up limits. And, yes, we're up today. I mean, we're up like 700 points, but it is hard considering how far we've fallen to really celebrate being up 700 points or so on the Dow. I mean, we're talking now we're at Dow 20,000. It is just remarkable. I mean, how far we've fallen. And I think some people were hopeful that maybe there would be a certain stimulus step that once we get that, then we're off to the races and we can see a huge rebound. I'm just a little reluctant to call what we're seeing today much of a rebound.
Well, it isn't even necessarily the stimulus itself. It really is fixing this underlying concern. It's a public health issue. Until we have a vaccine, until we see, that curve flatten out in new cases, we're not actually going to see that rebound that everyone is hoping for.
Let's talk about more what we're getting from down in D.C. and the White House. We have Yahoo Finance's Jessica Smith standing by. And Jess, we heard a little bit more from the administration in terms of details. What's the latest?
Well, we actually just heard from Majority Leader Mitch McConnell, and he says that the Senate will move quickly to take up the House-passed bill. So that was phase 2 of the economic relief here. But at the same time, the Senate will start crafting phase 3. There was some question over whether or not the Senate would try to combine 2 and 3 and have the House come back before they pass that second bill. But it seems now they are going to take a vote on that second bill while they're working on the third. Now, the third is going to be the big one. That's what we heard from the administration earlier today. That could include direct payments to Americans. It could help, or it could be relief for airlines. There are quite a few proposals in that. We know that now Secretary Mnuchin, he just left a meeting with senators. He is saying this could be $1 trillion in economic stimulus. Now, it might not include that payroll tax cut. That has been something that the president has been pushing, but now it seems the administration is backing off that idea for now, a little bit at least. Now it seems like there is more appetite in Congress to go after that direct payment to Americans. Mnuchin said earlier today that it could take a few months for a payroll tax cut to really have a benefit for your everyday working American. Here's a little bit more about what he had to say on that.
We're looking at sending checks to Americans immediately. And what we've heard from hardworking Americans, many companies have now shut down, whether it's bars or restaurants. Americans need cash now, and the president wants to get cash now.
Mnuchin did make a few comments after leaving that lunch with senators a few minutes ago. He says that aid would come into a combination of loans, direct checks, and creating liquidity for small businesses. He also says now is not the time to be concerned about the deficit. So we'll be watching this to see when the Senate actually votes on that economic relief and when they start crafting this phase 3. Sean and Dan.
Hey, Jess, we had some interesting comments from several lawmakers really over the last couple of days, but one thing that was recently said was Illinois Senator Dick Durbin. Now, he was saying that the Senate should consider working and voting remotely amid the coronavirus outbreak. From your time just covering Washington, what are your thoughts on that?
That would be a huge change for Congress to have them be able to vote when they're not physically present in the Capitol. Senator Durbin did speak this morning on the Senate floor saying if we're telling people that they should avoid large groups, that older people should stay home, then we should practice what we preach. The average age in the U.S. Senate is 63. There are 100 members. So obviously not following those guidelines. Durbin did suggest using teleconferencing or Skype to hold committee hearings. He says that if we're going to tell Americans to do this, we should be doing it ourselves. Here's a little bit more about what he had to say.
Let's try to abide by the same guidelines we're preaching to the rest of America. Let's use new technology, let's use our best thinking, and come up with bipartisan answers. That, to me, is the way to manage the Senate in the midst of this national emergency.
Now, voting remotely would require a rule change. Senator Durbin said that several senators are exploring that idea right now. We did reach out to their office, Senator Amy Klobuchar, who is the top Democrat on the Rules Committee, but we have not heard back from them yet. But that would be just a really big change. So we'll keep you updated as we hear more about that.
And Jess, Dan here, just a quick follow-up. I know Dick Durbin there is the Senate whip for the Dems. I'm just curious the extent to which both sides are now agreeing, or are they still more disagreeing on what happens next and what to do? Because, it was only a week ago that we heard people, more I feel like on the GOP side, saying, oh, the Dems are politicizing coronavirus. Are we now at a point where everyone has collectively agreed this is enough of a problem that both sides are really on the same page, do you think?
I don't think both sides are on the same page on everything. You're never going to get complete agreement here in Washington. I know that the idea of sending cash directly to Americans is seeming to be a little more popular than payroll tax cut. I think that was going to be a really big hurdle to try to get that through Congress. Lawmakers have just been skeptical about that from the get-go, but there is a recognition on both sides that something has to be done here, something big has to be done here. We did hear from Minority Leader Schumer proposing a $750 billion package. So we'll see if they're able to shake out those details, but they definitely are hoping to address that problem. Whether they can agree on the details, that remains to be seen. McConnell says they will not leave Washington until they vote on that phase 3.
All right, lots going on down there. Jess Smith, thanks so much.
All right, let's get some more on today's market action because stocks did go up. Let's go to Inez Frey live on the floor of the NYSE and see what's happening. Inez, what are you watching here in the final hour of trading on this Tuesday?
Dan, we're watching Boeing, which has come off its lows. Earlier this morning, during the lows of the session, Boeing was down about 20%. Right now, it's down about 8%. And it rallied also after President Trump said that the government would be helping Boeing, that Boeing, of course, is impacted because the airlines have been impacted so much. And speaking of the airlines, Treasury Secretary Steven Mnuchin also saying that the impact on the airlines, the financial impact would be worse than post 9/11, saying that the government will be helping the airlines. So you saw a little bit of a rally there with the airlines. And then also taking a look at McDonald's, that Dow component, with McDonald's saying that it cannot estimate the financial impact of the coronavirus. It's just too early to tell yet. And also apart from the fact that McDonald's in the U.S. is not doing in-store dining, in-restaurant dining, it has drive-thrus, it has deliveries. But also Steven Mnuchin also talking about restaurants, fast food restaurants, saying that the government is making sure that the states keep that drive-through delivery, because remember, in places like Spain, like in Italy, McDonald's, for example, those restaurants are closed. So Mnuchin highlighting that the government is going to make sure that people can still access food, that they can still get deliveries, they can still go through the drive-through, and also highlighting even the fact that a lot of these restaurants have apps. So as far as social distancing, that's the best that you can get as far as being able to get food with minimal contact with people.
All right, interesting stuff from McDonald's. Inez Frey, live on the floor of the NYSE. Thanks so much.
Well, coronavirus cases in the U.S. surpassing 5,000. That's increasing fivefold from where it was just a week ago. It's now prompting new guidance from the White House. Joining us now to discuss, we have Yahoo Finance's Anjali Khemlani. And Anjali, we just heard what Jess Smith was talking about just in terms of what lawmakers are proposing, what they want to see done. In terms of the latest news from each city in the U.S., from counties, from states, where do we stand at this point?
Well, that number continues to increase. You mentioned, that it surpassed 5,000. We're actually nearing 6,000 already within one day, seeing that type of an increase. That shouldn't be alarming because that is exactly the type of increase we're supposed to be seeing. Based on epidemiologists that I've spoken to, they've said that based on, what is happening in Italy and what happened in China, there is a certain number of cases that should be popping up over time. So this is an indication that the testing that we've been waiting on is actually taking place, with even more rolling out this week and next. Meanwhile, we know that state and local governments are really taking the power that they have and utilizing it to make sure that people are staying indoors, not going out, not congregating in large groups, which is something else that's supposed to help flatten that curve. We've talked about this before numerous times, that flattening that curve and making sure that the hospital systems and all health facilities are not overwhelmed is a key goal. And that's where the guidelines for the administration come from as well. There are different guidelines in terms of the number of groups. We know that there's been some discrepancy between groups of 10 versus groups of 50 or hundreds. But at the end of the day, some of the health experts are saying the number is not as important as really just maintaining those rules and sticking to them. Meanwhile, we know that Italy just reported 31,000 cases, more than 31,000 cases, up from 27,000 recently. And then France is also confirming 7,700 cases with 175 deaths as of Tuesday. Meanwhile, we know that back here in the U.S., Mayor de Blasio, going back to that testing, is talking about, being able to do 5,000 tests today in the hospital system. And that's something else we've been focusing on too, is really the ability of the commercial private sector to ramp up the testing that we need and provide that high throughput and automated service. So between that and the drive-through testing that's potentially going to be rolling out this week and has already in a number of states and local communities, we're waiting to see just how this all plays out. So probably by late this week or early next, we'll have a much clearer picture of just how this outbreak is affecting the U.S.
All right, it's hashtag flatten the curve, right? Anjali Kamlani, thanks so much for the latest. Well, we are continuing to monitor the coronavirus outbreak, as is everyone. And joining us now to discuss further is Jake Glanville. He is the CEO of Distributed Bio. So, Jake, thanks for coming on. And let me just get right to testing. That is the biggest question we have right now. Where does the U.S. stand with testing and the criticism of not enough tests to go around?
So the good news is that we are way better off than we were just a couple weeks ago. The United States was caught flat-footed a bit for the first 7 or 8 weeks of the outbreak, where we had released almost no tests, and the tests that we had released had a defect in them. So that has since been corrected. We now have millions of tests that are distributed nationally. Here in California and San Francisco, there's a drive-through testing facility similar to what they have set up in South Korea. That's the good news, that we have improved surveillance. It's going to give rise to an appearance that there's going to be this rapid expansion of additional cases. Now, some of that is the additional spread, but some of that's just that we're actually starting to get a handle on how many people are actually sick at this point.
Jacob, are the test kits able to keep up with demand? Because that's been the big talk really over the last several weeks, just in terms of what has been available. Obviously, like you were just saying, there's been a huge improvement on that front. But going forward, is the supply there?
No, it's not. And really, this is something we should be able to solve. This is something that South Korea solved effectively. And, we are better resourced to tackle these kinds of problems. There are some global disruptions to supply chains, but nonetheless, we should continue expanding the test kits. Right now, if you feel sick, you need to contact a doctor, and they're going to do a little bit of triage to make sure that they have enough kits available to give you a test versus to make sure they have enough tests to test the doctors if they feel ill, which is essential. There are additional technologies on the horizon. There's a cool company called Mammoth Bio that works on a CRISPR-based kit. It's using lateral flow, so it looks like a pregnancy test that could be done potentially in the home. And then there's also a number of institutions that are setting up sort of equivalent test kits using common reagents that we use in laboratories to be able to detect the presence of the virus.
Jake, this is Emily McCormick. I understand Distributed Bio is also working on something to combat the coronavirus. Can you speak a little bit about the cure that you're working on and where you are in that process versus some of these other companies also working on this sort of effort?
Sure. So right now, there is no medicine for coronavirus, the novel coronavirus. The 3 classes of medicines that are being contemplated right now, the fastest ones are some antivirals and an antimalarial. These are drugs that were built previously, and we're trying to see if they work on the coronavirus, and we'll find answers about those in April. There's also vaccine work, but vaccines take a long time to test because you have to give them to healthy people and then watch for a while to see if they get sick or not. So those we're contemplating more like 2021 or even early 2022 that they'd be available. So if this becomes seasonal and doesn't go away, those will be helpful to us. What I work on is the third category, which are monoclonal antibodies. So what my company has done is we've taken a series of 5 anti-SARS antibodies back from 2002, and we're engineering them, tweaking them to be able to recognize the new coronavirus. And the reason we're doing that is that there's a whole bunch of research done on those original antibodies from 2002 that we can piggyback on top of to deliver a therapeutic much faster. So we're done with our engineering on the week of the 6th, just a few weeks out, potentially the week of the 13th. At that point, we're into scale up. We're partnering with US Amarid and DARPA, which are 2 arms of the US military, as well as Charles River Labs, which is a 16,000 person company that specializes in evaluating the safety of medicines. We're having to cut through some red tape to move pretty quickly, but we're anticipating being able to go into human trials in the summer, which would mean given a positive result on a first phase human trial that also tests for efficacy, we could be talking about it releasing a therapeutic in September. That's still a few months out, but the current pacing and estimates here are even with these mitigation measures, we're estimating continued growth of the outbreak into September. So that would still be a very useful time to have a medicine.
All right, keep cutting through that red tape, will you? That is Jake Glanville, CEO of Distributed Bio. Thanks, Jake.
Thank you very much.
Well, coming up, bad Elon. Why is Tesla's Fremont plant staying open as coronavirus spreads? We're going to dig into that story and whether or not he's making the right call. But first, let's take a look at where the European markets closed. Welcome back to the final round. We have the Dow jumping today up just around 700 points. So this comes as the White House seeks $1 trillion fiscal stimulus amid the coronavirus outbreak. We have had the Fed stepping in over the last several weeks. Now they stepped in once again today, and they made a move to support short-term commercial debt here, debt markets, which is something that obviously was welcomed by the street. We have Miles Edlin joining us on the phone to talk more about this. And Miles, this is something that was significant, but was it something that the markets really broadly expected at this point?
I guess expected in the sense that the market thinks and knows and believes the Fed has to use all available tools. And this is something that Jay Powell has, of course, been saying over the last couple of weeks. But basically the move today means that the Fed can now be the lender of last resort to entities that aren't necessarily banks. And when you think about what the administration is discussing in terms of whether it's bailing out or supporting the cruise lines, the airlines, certainly restaurants, small business owners are going to need a lot of support. This does free up the Fed to do some of that. Now, they will have to coordinate, and they will coordinate with Treasury in the weeks ahead. So what exactly this looks like remains to be seen. But again, it is another step in the process of opening all those tools, using all available tools. And I know we discussed just yesterday, what else could the Fed do? Well, here we are a day later, and we have a few more answers.
Yeah, exactly right, Miles. We talked about that yesterday. And I would ask, even after this action, what is still left in that Fed toolbox? Because, Sunday after the emergency action, the narrative kind of shifted to Washington and D.C. and what the White House and what Congress might do. Now we're back talking about the Fed. What more could the Fed do?
Well, I think right now the Fed is probably of the mind that they have done all they can do at this point because as we've discussed over the last couple of days, this isn't just a this week kind of thing. The Fed is telling lawmakers that it is time for fiscal policy to step in and do something bigger. And, of course, the headlines within the last couple of hours have suggested that package is likely to grow substantially, right? We're hearing $1.2 trillion now out of Treasury Secretary. And so I think the Fed is probably a little bit on a wait-and-see kind of mode with respect to what else they are going to do. There are some other authorities they have under the Federal Reserve Act. There's a section, I think it's Section 14B, that allows them to kind of do what they're doing now, but it opens up their ability to buy more assets. And they could, of course, go to Congress and ask for additional authorities to buy assets other than mortgage-backed securities and treasuries. And I think in another QE phase, that's probably where this is headed. But I think for right now, the Fed probably, and I think the market, wants to see Congress do something before we can get a sense of what needs to be done next.
Yeah, it certainly has been what we've been hearing really for, I guess, the last couple of days. All right, Miles, thank you.
Well, in response to coronavirus, we have watched a domino effect of retail chains announcing temporary closures of stores. Today, the following chains joined that big, ever-growing closure list. Canada Goose, Macy's, which obviously includes Bloomingdale's, Uber and Lyft suspended their pool rides, meanwhile, and Adidas joined the list after yesterday, initially, it told employees it would keep stores open. Now, interestingly, all these chains have given current guidance of either March 29 or March 30 or March 31, but you have to expect that that date is going to get extended based on what we're hearing from the CDC. Now, not on that list of closures is Tesla. Bloomberg reporting that Elon Musk is keeping the Fremont factory open, and Musk wrote in an email, "I will personally be at work, but that's just me." He said others can leave and stay home if they feel uncomfortable. So, guys, the number of chains that still have stores open is really shrinking. Yesterday, we did have an executive from CVS Health on. Now, CVS, the kind of store that obviously that's going to stay open. Grocery stores are staying open. But retail stores that don't need to be open at a time like this are kind of rapidly announcing closing their stores, and because they're getting criticized if they don't close them.
Right. And I think it just, as you mentioned, it really comes down to, at this point, the public judgment at the idea of even staying open when this is a public health crisis, when it's something that could endanger employees, could spread the coronavirus even further among the public. So I think that's why we're seeing all these retail closures, why we'll probably continue to see even more going forward. It is surprising to see some of these, businesses that might not be traditionally considered essential, like automakers like Tesla, that are remaining open. And I think think it just is a matter of time before that public crackdown leads to that.
And then you also have to dig into what exactly the language that Elon Musk used. So he was saying that he will be there. It was almost guilting some of the employees that they should be there, that they shouldn't feel uncomfortable when at this time it is a crisis. It's a pandemic. We've heard from the WHO time and time again. There have been very extreme measures, rightfully so, put in place by the state government, by the federal government now, just in order to try to curb the spread. So when you get that type of, I guess, words coming from a leader, then that's kind of confusing. And I think that maybe sets the wrong example, at least for a lot of these employees.
I think what's been so interesting is how the narrative has so quickly shifted, because at first things were closing. Now it looks like the ones that closed last week were early and kind of first out the gate. And there were still some vocal people saying, really, is this an overreaction? Now you're seeing people slam on social media the companies that sound like what Elon Musk is saying, that have basically told employees, if you want to work from home, you can. It's okay. But that's very different from telling people, we are now officially telling you, work from home, please, which is what more and more companies are saying.
And I think that's actually what employees need to hear. They just need a clear message. There was so much mixed communication the past couple of weeks. It needs to either come from the heads of the companies themselves, from the state, local government, or the federal government. It just needs to be a clear blanket message.
All right. Well, guys, coming up, we're going to talk more about all this, plus the market reaction that we have seen. We have trader Bill Baruch, who will discuss today's bounce back and what he sees next for the beaten down oil trade. But first, let's take a look at some of these trending tickers on Yahoo Finance. With stocks rebounding a bit today after yesterday's massive sell-off, with utilities and consumer staples leading the way. On the other hand, energy, the only S&P sector in the red right now, it was weighed down by today's move in crude prices. We had oil settling at its lowest level since 2016. Bill Baruch, president of Blue Line Futures, joining us now. And Bill, we've seen crude under a tremendous amount of pressure, to say the least, over the last several days. When we take a look at where it is today, 26.89. How much further of a downside risk do you think crude has at this point?
Well, today is the expiration for the options contracts for April, and sometimes you can get a sharp move in a directionally moving market. Sometimes it keeps things confined. Today, we got that move lower. I think that was something to do with options. We got the 26.05 level below here is one to really keep an eye on as this all plays out. You don't want to forget that there is a price war taking place, and there's going to be inventory picking up, and that's what's driving the price down. So has the washout happened? I mean, we consolidated for a good week, but there looks to be another leg building here in crude oil, and that could drag the market as well. Now, we're not very bearish at this level, but we are open to the idea of seeing $17 crude oil.
Bill, I want to pivot a moment and speak a little bit about the press conference that we had with the Trump administration earlier today. And one of the things that they talked about is not of closing the stock market, that they do want to keep the markets open, but potentially limiting hours. And I'm just wondering what your take is on that and what impact that might have on market participants, the public, and going forward.
Well, talking among my colleagues and talking among other traders out there and clients even too, if they shut market hours down, I think you're going to bring a bit of panic. And I think as well, that's one of the rumors that have been going around is a 14-day quarantine and people have to stay inside their house. Ultimately, they don't want that rumor to be going around. And I'm not saying they won't come to that, but if you start getting these type of rumors where they're shut the market down, they're going to keep people inside their houses, that's creating panic. And overall, what we're seeing here in the market broadly is that panic playing out. So we like to look for peak panic as a point of capitulation, as a buying opportunity. They always say blood in the streets. That's when you want to buy. So are we going to continue to see some panic because of some of these moves? Overall, I don't think they're going to go the quarantine route. I don't think they're going to close market or really limit the hours. Volatility today, I mean, it's a pretty wide range out there across asset classes, but it's actually a little more constructive than what we've seen in previous sessions. So it's a good day so far. In the S&P, I want to focus on that for a second. The S&P is testing that December 2018 low, and it hasn't broke down through there. It's tested about 3 times, maybe 4 times, and it's responded. That's constructive here in the near term. Now, a bottom doesn't come with a price. A bottom is a process. And we're trying to see that process get underway here today, starting from yesterday. Obviously, that panic coming out of the weekend. So there's some interesting price action here today. And for the S&P, I really want to see it get back above about 27.5. Closing above 27.5 would really, really start neutralizing that weakness we saw late last week and into the early part of this week.
Hey, Bill, just quickly as we wrap here, what do you make of the stocks that have been labeled the stay-at-home trade? There are some names that have done well amid coronavirus, even yesterday when there was so much blood. There's Clorox, there's Zoom. Today, ironically, Blue Apron is up 75%. Would investors maybe do better being wary of going after such names that are just getting a short-term bump? What do you make of all that?
Well, I looked at the heat map from yesterday, early this morning, and Clorox stood out to me. Funny you bring that up, and my initial reaction is names like Clorox, you get that wave higher here, but is that sustainable? And I don't think sustainable long term. So if you're chasing that, names like that, you're going to find yourself hurt here in the 6 months out, I'd imagine. But I do like those collaborative workspaces. I like software. Work got smoked last week on earnings. So it's actually been cheaper, and I use Slack personally for a number of chats. Yeah, Slack, and I think that's a great platform. There's other ones out there that are great. Things like Salesforce, CRM, other software. I don't think you're actually going to see those get hurt overall. I think they're going to come out of this pretty strong. And I think companies are going to use this to obviously stay together, but you're not going to see them limit their software because now people are more mobile. People need to be on the cloud. And I think that's going to be something to focus on over the next 6 months when you come out of this hole here.
All right, Bill Baruch, Blue Line Futures President, thanks for joining.
Well, coming up, we'll have more on the final round. Plus, it's game on. Video game stocks are poised to do relatively well here. We will talk to some of the top picks on Wall Street. But first, let's take a look at where the big financial names have been trading right now. Welcome back to the final round at Yahoo Finance in New York. I'm Dan Roberts. With me now, my co-host for the next hour and a half, Shauna Smith. We also have Yahoo Finance's Emily McCormick. Well, with less than 30 minutes of trading left in the day, let's take a look at where markets are. The Dow right now up more than 700 points, so it is moving higher as we approach the close. The S&P is up 4.6%, and the Nasdaq is up more than 5%. So a little bit of a bump after that awful trading day yesterday. Let's go now to Inez Ferre, live on the floor of the New York Stock Exchange. Hi, Inez.
Hi, Dan. And earlier today, we got a reading from the U.S. homebuilder sentiment that dipped in March 2 points to 72, a reading of 72. Now, that's still a relatively high reading, but keep in mind that about half of the responses came before March 4th, before those big movements that we saw in the market last week. So you may see a bigger dip, a bigger drop in next month's reading. Also, taking a look at some of the ride-sharing companies, take a look at Uber. Uber has been trading at its lowest levels today. This is after the company said that it's temporarily suspending Uber Pool in the U.S. and also in Canada. It will also do this in some other countries on a case-by-case needed basis. Now, you still have Uber regular rides that are still up and running, and also Uber Eats is still up and running. But also take a look at Lyft, because Lyft also has been trading at its lowest levels. In fact, both of these stocks are trading around the same share price, and also Lyft saying a similar measure that it will also be temporarily suspending its shared rides. Lyft regular rides, though, are still ongoing.
All right, Inez, thanks so much. That's Inez Ferre live on the floor of the NYSE.
All right, well, every day here we are hearing about industries that are being negatively affected by the coronavirus outbreak. But one firm thinks that video game publishers are positioned to outperform the broader market in the midst of COVID-19. Let's bring in Yahoo Finance's tech editor, Dan Halley, to discuss. And Dan, we've been talking about some of these stocks that can buck the downward trend, maybe some companies that have a chance in order to gain more business because of this outbreak. What are some of the names that are best positioned to do so in the video game space?
Yeah, if we're looking at video games in particular, there's a couple that really stand out. Those are Epic Games. That's the maker of Fortnite, obviously a huge smash hit, continues to do well. And then EA, they have a game called Apex Legends. That also is doing well. But then Activision Blizzard, which has been under pressure for a while now, they have a new game called Call of Duty Warzone. That's a free-to-play game similar to Apex Legends and similar to Fortnite. They just had in their first 3 days available, or 4 days available, 15 million people downloaded it. So huge amounts of players on there right now, and that's doing wonders for Activision stock, obviously. That's a game that's going to continue to do well as they roll out updates throughout the year. But it seems like as more people are, taking these precautions and hunkering down, you're seeing the amount of gamers online increase. In Italy, for example, one of their telecoms said that they had seen a 70% increase in bandwidth usage, and a lot of that, they said, came from games like Fortnite. So a lot of usage going on here, a lot more people online playing games. And frankly, part of it is because you need something to pass the time. You can only watch The Office on Netflix so many times. And the other reason is it provides a social outlet for people. You get on these games, and you can talk to friends and still have some kind of conversation with them while you're playing. So it's really kind of been a boon for some of these companies. And the idea that it's going to last out through the rest of the year is something that Piper Sandler pointed out, because they're also going to launch new consoles from Microsoft and Sony at the end of the year. And that usually coincides with publishers and developers doing equally well as they put out games for those new systems.
Yeah, Dan, it's a good moment to be talking about this with you, the bump that video game companies might see, because we were just discussing some of those other stay-at-home names that are seeing a stock benefit in the last week amid coronavirus while everything else is down. Zoom, because people are telecommuting. Peloton, because people are working out at home. Today, Blue Apron is up big. But with our last guest, we were discussing this, and he said, some of these, it's really only going to be a short-term bump. He believes that some of the software names will actually still do well in the long run. What do you think for the video game companies? Is this just a short-term bump, or can they kind of ride this momentum right now, and then even when the coronavirus is behind us, which we hope we'll get to that time, they'll be well positioned to still see stock momentum?
Well, look at like Valve, for instance. They produce the Steam platform. And they have recorded 20 million concurrent users. That was up from a week ago where they had 19 million concurrent users. That means people playing at the same exact time. So they're seeing continued increases. And, last year they had seen 14 million. So this could be a temporary bump in terms of the amount of people playing at once. But I don't think that the companies are going to necessarily see a fallback. Potentially what could happen is they end up getting more gamers who just find themselves more interested in gaming after getting on here, and they see a boost from that. But I think the real thing for these companies is that they're going to get those new consoles from Microsoft and Sony at the end of the year, the Xbox Series X and the PlayStation 5. That will see an increase in gamers because people will go out and buy those systems, and then they'll have plenty more games to play. Usually there's a slate of launch titles that come along with those types of systems. Highly anticipated. They're talking about big numbers for them. So I think they'll see a temporary boost, yes, but I don't think we're going to see it kind of collapse after the virus is over. I think that it'll just kind of soften a little bit, but then potentially take off again as we see those new consoles roll out.
Yes, Diana, I've been wishing that I still had my GameCube amid the work from home stuff so that I could play Mario Kart and Smash Brothers Melee.
Hey, those games are free to play. You can get Call of Duty free.
All right, I'll look into it. All right, Dan Howley, thanks so much. Well, coming up here on the final round, San Jose Mayor Sam Liccardo will join us to discuss the extreme measures that his city is taking to combat the virus. First, let's take a look at where the big tech names are trading right now.
Small business owners are feeling the severity of the coronavirus outbreak, which continues to worsen both here in the United States and abroad. We have Jen Rogers, the host of the show, joining us now to discuss. And Jen, I know you've been on the phone talking to some of these small business owners. What are they saying just in terms of the situation that they're in right now?
That's right, Shauna. I've been talking to people in Sullivan County up in the Catskills, and the Catskills have recently seen a real resurgence in travelers coming back here. In 2018, travelers spent $1.5 billion in the Catskill region, and Sullivan County has had the highest growth in New York State, in all of the state in terms of travelers coming in. So this is coming at a tough time. I've talked to a number of owners today. This falls into kind of two camps. First of all, I talked to a wine store, Meg McNeil. She opened Upstream Wines on Main Street in Livingston Manor. she's having trouble keeping wine on shelves right now. So we talk about, what's happening at supermarkets, what's happening at a small craft wine store as well. She also, though, operates a wine bar. And there, over the weekend, she saw a 50% dip from the week before, and now it is shut down. She has one employee there, and she's really trying to come up with some creative ways to keep her on the books. Now you go from one employee to one of the bigger employers in Sullivan County, and that is Foster Supply Company, and that is actually run by Sims and Kirsten Foster. They have 5 different hotels. Talking to them, they have about 120 people, they say, who rely on them to put food on their tables. And right now, they have closed all of their hotel rooms. They're trying to figure out a way to get pickup to be something that takes off. This is not a city. There's no Seamless. There's no Postmates that's going to go pick it up. They're going to try and leverage social media to figure out a way to maybe get people to come and pick up food at the restaurants. Right now, they say they're going to keep paying people, but that cash is what they really need. They want to conserve all their cash, and they're hoping for some big measures from the government. Specifically, here in New York State, there are some taxes that are due on Friday.
All right, that was Jen Rogers. Okay, we had lost you there for a sec. Jen, thanks so much for calling in. That's Jen Rogers, usually the co-host of the Final Round. Thanks, Jen. Well, nearly 7 million people living across Northern California, including in Silicon Valley, are now being ordered to shelter in place in an effort to stop the coronavirus from spreading there. San Jose is one of the 7 counties involved in this latest lockdowning. And joining us now is the mayor of San Jose, California, Sam Liccardo. So, Mayor Liccardo, thank you for joining the program, first of all. Let me just ask, can you explain for the average layperson here who doesn't understand, what does shelter in place mean? Because the latest here in New York is that is something Mayor Bill de Blasio is also considering for New York.
Yeah, that's a good question. Since the order was offered by the 6 counties here issued, we've all been scrambling to make sure we understand what exactly it means. The bottom line is folks are supposed to remain within their homes unless they work within what's considered an essential activity or an essential industry. Those are typically industries that involve the provision of healthcare or food. So grocery stores, restaurants, as long as they're not actually serving people on the premises and just serving food to go, things like that. Those kinds of employees can continue to be engaged at work. Everyone else has to stay home.
And Sam, a very quick follow-up there, because a couple of friends have asked me this about shelter in place. Does that apply, as you understand it, to driving? Or what if people just in their car want to drive from one house to another house?
Only essential travel. That means if you work in an essential activity or essential industry, then you can get to work. You can drive to go get food or medical care, but otherwise you shouldn't be driving. And same goes with public transit. Certainly people can go outside as long as they're walking around and there is sufficient distance between them and other people who aren't in their household. So it's pretty it's a pretty novel situation for all of us. I think a lot of families are struggling with this right now. And of course, we're taking a pretty sensible approach about enforcement. We want to make sure everybody understands first and ensure that everybody knows how to comply before there's any real significant enforcement.
Right, Mayor Liccardo, that actually was my follow-up question. How is this enforced now, and how could enforcement change going forward depending on how compliance is to the new policies?
Yeah, the reality is, we're not sending police out there to arrest people on sidewalks. The police have higher priorities right now. Unless there's something really egregious like a St. Patrick's Day party with 1,000 people, to which I wasn't invited, we might be sending the cops in to break up that. But for the most part, this is about compliance and making sure people understand. And for the most part, people get it. They understand the public health and public safety importance of all of this, and they're complying.
Mayor Liccardo, obviously everyone's health and well-being is the #1 focus right now, but what about the economic impact that San Jose, the city of San Jose, could possibly face? I mean, we were just talking to our colleague Jen Rogers in the last block, and she was talking about the impact that it's already having on small businesses up in the Catskills. What are you seeing in your area?
Oh, it's severe, and it's not possibly, it's happening, and it started happening a few weeks ago. For that reason, we were the first city in the country to mandate a moratorium on evictions of tenants because we don't want to exacerbate our homelessness crisis by pushing thousands of families out in the street. We're considering a similar moratorium for small businesses today. So there's very severe impacts. We know most businesses have already lost 50, 60% of their revenue just in the last several weeks. And we know entire industries, whether hotels, convention center related activity, anything related to the airports, that all businesses have lost 90% of their revenue or more.
Mayor Liccardo, let's wrap this way. If we can just zoom out a little bit. For most people, or I guess everyone, we've never experienced a time like this in our life in America. I mean, we're talking about shelter-in-place rules. What is it like right now to be a mayor of a city amid the coronavirus response and reaction? Everything has changed so quickly in the last week across the business world, sports, and what cities are doing. How does it feel? What is your reaction right now?
Well, it is a very difficult time for all of us, certainly. And as a local leader, your first inclination is really to find a way to fix it. But the reality is there's no simple fix. And so a lot of my effort right now is focusing on how we can communicate to folks that this is our moment. Many generations throughout history are tested with their moment. We talk about the greatest generation during World War II, and this is our moment. And amid all of our common fears, we have this moment to find uncommon courage. And we're starting to see that as people are reaching out to help deliver food to seniors. And we're about to launch a big initiative tomorrow to figure out how people who want to help can help participate in offering a caring hand in various ways. So we're going to find the character of our community through this crisis, and hopefully we'll be able to do it in a way that's a model for the rest of the country.
All right, it's a great answer. I hope everyone is paying attention. San Jose Mayor Sam Liccardo, thanks for joining Yahoo Finance.
Thank you. Good to be with you.
Coming up, we have the closing bell on Wall Street, just around 8 minutes away. We've got a report on the backbone of U.S. manufacturing and retail. That's the supply chain. Just how bad is the coronavirus effect? We're going to dig into that. But first, let's take a look at where the retail names are trading right now. Amazon announcing it is suspending shipments of non-essential products to its warehouses, signaling that the impact that coronavirus is having on global supply chains. Joining us now to discuss is James Gellert, Rapid Ratings CEO. And James, when we take a look at this announcement from Amazon, what do you think of it, and will we likely see other very large retailers make a similar move?
I think you're seeing retailers across the world making different actions, whether it's closing stores or curtailing hours, but everyone's doing what they can. I'm not surprised with Amazon. The unfortunate reality is that thousands of what would be considered non-essential suppliers to Amazon are now going to be shut out while the focus is on the essential. That's important. It's really important that there's access to the most essential supplies. The non-essential ones are run by and sold by businesses that are going to be greatly affected by this, like so many others.
James, just taking a step back for a moment, I know Rapid Ratings, you provide analysis of the financial health for public companies, other corporations overall. And when you look at the landscape right now and the companies that are being hit most by the fallout from the coronavirus outbreak, what are some of the qualities that they have in common versus some of the ones that are being more resilient in this situation?
Well, we rate public and private companies around the world, and what we see in our ratings going into the crisis was a pretty interesting mix. Country by country, we've never seen more downgrades versus upgrades year on year as we have just over this past quarter. So that means coming into the crisis, the overall environment is weaker. The companies that have weaker financial health ratings have are going to have a much harder time withstanding a shock, and the shock now that they're getting is greater than anything that they've seen before. So what we expect to see is a much greater divergence between the weaker companies and the stronger companies and how they're able to get through this period, which of course has a ton of unknowns. But industry by industry, this is something that we're going to see. There will not be an industry that's unaffected by COVID.
All right, James Gellert, CEO of Rapid Ratings, thanks for joining us.
Sure.
And Emily McCormick, you're free to go.
Thank you guys so much.
Bye, stay safe. Thanks,
Yes,
Emily.
You guys too.
Coming up, we'll have the closing bell on Wall Street, plus the Fed making moves to calm jittery credit markets. Did it work? We'll have the latest right after this quick break.
Welcome back to the final round on Yahoo Finance. I am Shauna Smith along with Dan Roberts, and we have Brian Chung. We are just around 50 seconds away from the closing bell on Wall Street. And again, Brian, I mean, this is a huge update for the markets, very different than what we were talking about yesterday at this time.
Yeah, but we still have to acknowledge that these wild swings in the market are to be expected, right? Every day it seems like we're getting 5 to 6, as was the case yesterday.
Right.
Sometimes more than that percent.
Volatility.
Swings. Right, and that's the volatility. That's the name of the game. Net, we're still quite below where we were 3 months ago. And I think that it's not necessarily comforting for anyone to see, okay, we're up 1,000 points today. Exactly. Within the context of what we've seen the past 2 weeks, it's still not a great story.
Well, we do have the closing bell there on Wall Street on the NASDAQ and the NYSE. And as we mentioned, markets today seeing a little bit of a boost, as Brian was just saying, 1,000 points. There it is. And this is where markets closed for the day. Let's show those numbers. We did see green on the screen after the Fed took action. Okay, the Dow closed up 5%, just barely 1,000 points. The S&P closed up almost 6%, the NASDAQ up more than 6%. And Brian, just to return to that point, I was saying earlier on the show too, I mean, it's hard to get too jazzed up about a little bit of green there, considering just how far we've fallen in a matter of days.
Yeah, and I think the Fed action is something that maybe contributed a little bit to this, but I think largely it's really the fiscal policy and just the fact that the administration has kind of, over the course of today, ratcheted up the amount of money that it's been asking for and entertaining the idea of a full-on dollar drop to average Americans is, I think, optimistic from a fiscal policy stance. What we do know is that from the Federal Reserve standpoint, they don't really have a lot left. They have plenty of tools left, but they used their levers pretty dramatically on Sunday. They announced that commercial paper funding facility today, which should hopefully provide some relief to businesses. And the big deal there is that it's not just the banks, right? It can offer commercial paper facilities to airlines, to cruise ships, to restaurants. So that's going to be helpful in the short term. But again, there's no bottom to this coronavirus. So that's the problem here from a termism standpoint.
Well, Brian, I know that there's still lots that they could do just industry specific in terms of today's move. But when we look ahead, you're saying that maybe the Fed is running out of options. They don't have a lot left that they could do. If they were to announce something else within the next couple of days, what would they likely announce at this point?
Well, something that a lot of people are watching for is what they call a term asset-backed securities lending facility. It's called TALF, and it's very similar to the commercial paper lending facility that was announced today, except it would be the Federal Reserve supplying liquidity to the asset-backed security world, which for those, if that sounds like foreign language and alien language, that's basically the Federal Reserve allowing a lot of these business debts to be packaged and then purchased by the Fed, which would hopefully provide more liquidity. Now, the problem is that post-crisis, there were some rules that were put in place that limited what the Fed could do in a facility like that. So it actually has a little bit of its hands tied from that perspective. But another few things that it could do, look, it could change quantitative easing. We have to remember that when it announced $700 billion of asset purchases on Sunday, that was not a ceiling. The Federal Reserve could decide it can change that. If it wants to boost that to $1 trillion, go ahead. So the Federal Reserve is basically leaving its playbook open. It has a few other things that it can do. But for right now, I think the Federal Reserve wants to say, hey, the administration, the White House, and Congress should do what it can try to do now to address and provide some stimulus to the economy.
Well, and that's exactly what we've been hearing from so many analysts on the street, so many portfolio managers too. There's so much that the Fed can do just in terms of monetary policy, but what needs to happen now is some sort of fiscal response. And we got some details out of the administration this afternoon, but I think many people on the street still want to hear more. There's still more that they could do. There's more money that they could potentially, just in terms of helping small businesses. We just had the mayor of San Jose on the show talking about the fact that small businesses have already seen a 50 to 60% drop in their business over the last couple of days, and it's expected to get significantly worse. So there's a lot of people, not only on Wall Street, but on Main Street, that are looking for a lot of answers.
And small restaurants especially. I mean, if you are a newish or small restaurant and you have a really, really bad 6 months, I mean, that can put you out of business.
Well, this is exactly it. So, I mean, this is a very personal story, but my uncle owns a number of restaurants in San Francisco, and he was telling me, I mean, he's already lucky to have more than one restaurant. He's done pretty well for himself. He said, I don't have enough cash for 3 weeks. Yeah. And that's the problem, is that the coronavirus, most people will tell you, is going to last way longer than that. So where do you find cash? And for small businesses, that's a challenge. But if you are a slightly larger company where you're issuing commercial paper, hopefully the Federal Reserve's announcement today is going to do something for you, because commercial paper is a way that companies can find short-term financing up to 270 days, oftentimes 90 days. So people try to take that out for 3 months. But that's not a lot of time within the context of the coronavirus as well. So if they cannot renew that commercial paper after 3 months, where are they going to go? So the Fed opened that facility to try to renew that paper if companies need it.
And speaking of small businesses, I mean, we're talking about the business owners, but that's not to mention the employees too, because companies that have closed stores are being pressured to pay the employees while they're not working.
Or lay them off.
If you own a small business, I mean, you can't pay that many people while they're not working. We want to check back in with Inez Frey, our friend live on the floor of the New York Stock Exchange, to talk about where markets closed. Inez?
And Dan, 2 points that traders were making here today. One being that the S&P 500 is above the lows of the December 2018 levels. And yesterday we had tested those lows, did not go through them. So this is something positive which traders are pointing to. The other point that they're making is that they would like to see 2 up days in a row. We haven't had 2 up days in quite a bit. So we have had an update today. Let's see what comes in store tomorrow. Let's take a look at some of the Dow leaders today. You're looking at Dow Inc. Up about 20% today, gaining what it lost yesterday and then some. You also have travelers companies, Intel up 12%, and Walmart, which was upgraded at Oppenheimer to outperform as consumers have just been stocking up. And then if we just take a look at the Dow laggards, those include Boeing. Boeing cutting quite a bit of its losses from earlier. Boeing down only 4%. Earlier, it was down about 20% in the lows of the session. Right now, it's been today trading at around 2016 levels. We know that Boeing is in talks with the government, trying to get aid for itself, for its suppliers, also for the airlines. And President Trump today had some encouraging words saying that the government would be helping Boeing. Also taking a look at Disney. Disney down more than 1% after Disney said that it would be delaying the debut of its Marvel movie, Black Widow. It's supposed to be launched on May 1st, the unknown date of when that will be launched now. And then looking at McDonald's essentially ending the day flat. It had been down more than 6% off the lows of the session. It ended the day after Treasury Secretary Steven Mnuchin said that the government would make sure that states keep drive-thrus open for restaurants so consumers can still go pick up, take to go, drive through, and get their food that way. Dan, Shauna?
Yeah, and as Disney not just delaying Black Widow, but also the movie David Copperfield.
Others
so
as well.
Disappointing to me.
Exactly, several delays.
All right, that's Inez Frey live on the floor of the NYSE. Thanks.
Well, also on the line, we have co-host of the Final Round, Miles Udland. And Miles, we were talking about today's big move in the markets. The Dow up just around 1,000 points. Consumer staples and utilities leading the way. What did you think of today's action?
I mean, I think honestly, in this environment, you have to think, wow, sort of stable, right? For the last 5 hours of trading, we saw that spike during the press conference right around, what was that, 11:30, 12 o'clock or so, as Mnuchin was talking and sort of said, well, I want to get these checks out quickly. The market came back a little bit, but ultimately, I mean, the ranges we're seeing in the market right now, right, they're obviously huge, and that's probably not going to change. The VIX is at 74 right now, so that suggests there's more volatility ahead, but all things considered, if you didn't see, and we didn't see, a frantic move up or down into the close, maybe signs of the market calming down a little bit, but I don't want to get too excited. I don't think anyone wants to get too excited about that, but when you had 3 straight 9% moves for the market to move 5% or 6%, you say, okay, I guess that was more normal.
And Miles, you spoke with the chief economist at Pantheon Macroeconomics. That person forecasting second quarter GDP will drop a staggering 10%. I mean, all the recent reports we've been getting in the last 2 weeks have upsetting numbers. Earlier today, we got the fund managers report, which showed a big drop. What do you make of that big 10% prediction?
Well, I think that, and I guess to go back to the point about how the market acted today and are we looking at maybe an inflection point in this whole thing, I think the numbers that we're seeing economists project in terms of what GDP might look like, they are large and they're going to continue to be larger. And, Ian Shepherdson at Pantheon, he's a little ahead of a lot of his colleagues on Wall Street. We've seen, Morgan Stanley's at 4% drop for second quarter. Goldman is at 5% for the second quarter. Ian's at 10, and most of that's because of what he thinks is going to happen with consumption. These are all huge numbers, right? Eventually we're going to find out what the number is, and it's not going to be good. But as we continue to see, case numbers spike, we're seeing them spike here in New York as expected. We're seeing economic data come in just, the projections are just terrible. Maybe we're looking at the most acute part of that crisis, right? If we take the 2 parts of this, the financial economic part and the public health part, I think it's likely that the most shocking data is ahead of us, but probably not ahead of us for more than the next week or 2 weeks. And maybe that's where we're starting to look at, again, not quite an inflection, but a sense of we're willing to address this. We know how we're going to address this. We know what the absolute worst cases are going to be, and we can start to think about something like the future.
Miles, I want to break in here. We just had earnings from FedEx. So it looks like their earnings per share were $1.41. Estimate from the street was for $1.27. Revenue also topping expectations of $17.5 billion. The estimate, what the street was looking for, was just around $16.8 billion. But Brian, let me just talk to you about this, because what's interesting here was just in terms of any guidance, if we were going to get any of that from FedEx. And actually looks like they have suspended their guidance. They're suspending their outlook because of the disruption from the coronavirus outbreak. And I was going through this report here, their earnings release, and they were talking about the fact that obviously coronavirus is already having an impact on the company. But then they also mentioned some other interesting things. They talked about the increased FedEx ground costs from expanded service offerings. And they also mentioned the loss of business from a large customer.
One very large customer.
One very large customer.
I wonder which one that was.
Being Amazon. So an interesting release here from the company.
Yeah, it's very noisy, but it's, look, no surprise that they suspended their guidance, right? No company is going to want to try to guide through a massive storm of the likes of the coronavirus. Now, what was interesting, though, was that they said they're not going to be providing guidance, but they have a strategy to get through this, which is, quote, attacking costs throughout the company. That includes things like capacity, retiring old aircraft that they have, integrating the TNT Express, which they had acquired, and also lowering their residential delivery costs by actually having certain ground deliveries and synthesize around other business parts that they have. So with FedEx, the story here is really going to be cutting costs, because this is the story for every company that's trying to weather the coronavirus issue, is that you just cannot grow revenue. There is no scenario where you have more profits coming in. So the only way that you survive through this uncertainly long amount of time is going to be cutting the costs that you have, whether or not that means also on the capital side, right? Share repurchases, dividends, things like that. Those are all definitely on the cutting block here.
And as we mentioned, FedEx withdrew its 2020 guidance due to COVID-19 uncertainty. Now, obviously, among that list of reasons operating income declined is coronavirus, and clearly that's the biggest reason. But FedEx had some real problems with its business and with the industry, some headwinds before coronavirus came along. We mentioned in that list there increased FedEx ground costs, and then we all laughed about it, but the loss of business from a large customer, Amazon, that hit FedEx. And so, there are some companies that are seeing the hit from coronavirus and it feels kind of sudden for them. And then there are companies that, boy, it's like, a hole in the head compared to problems that it already had, because FedEx was kind of, along with UPS, these are companies that have really been disrupted in the last few years.
Yeah, certainly. And obviously this is a issue that is going to be something that a lot of these companies, challenges that these companies are going to be facing now for at least a couple of months, it seems like. Miles, I know that you're also taking a look at this report. What did you think of these numbers?
Well, to Dan's point about where FedEx has been, this was a $275 stock in January of 2018, and right now it's trading at $95 a share. And so I think, the reaction here after hours with the stock up a little bit on the company withdrawing its guidance. Again, maybe I'm just sitting here in my apartment wondering every day if I have coronavirus, like I think a lot of other people in New York, trying to talk myself into things aren't quite as bad as they seem. But you look at this reaction, you look at this release, you look at the company saying we're going to pull our guidance, and you start to look at a time in September when maybe FedEx comes out and says, okay, now we have a handle on what 2021 is going to look like. And you can go through any kind of stock screen in any kind of industry, shipping or otherwise, and you can see stocks like FedEx that are down 50, 60, 70% from their highs. And I think in the next couple of weeks, we're going to see a lot of investors start to talk themselves into a case for a number of these companies. I think coming out and kind of kitchen sinking it and saying that everything's bad, we're pulling guidance, we're going to try to cut costs, this is going to be very bad. That's the stuff that investors want to hear from companies, because that's obviously the reality. You look outside your window, that's the reality of what's happening. So as long as companies, I think, say that to investors, there might be some appetite for getting on board with that message.
Miles, it's Brian. It's nice to be on this side of the table for once. I want to ask you a little bit about the earnings season going forward. Any industries specifically that you're watching that you think? I know Sam Rowe, our managing editor, has been really dialed into what the road ahead looks like. But what types of pockets do you think are going to give us the most intel with regards to truly how impactful the coronavirus headwind is really going to be?
It has to be restaurants and bars, right? But I do kind of wonder. So on an industry level, it has to be tourism, right? Airlines, cruise, restaurants, all those kinds of names. But I actually wonder, Brian, from a market perspective, from a where is sentiment at perspective, I want to see what the leaders tell us. Where are the fangs in this whole thing? Because I think it's really hard. You see it in your inbox too, right? People don't want to give up how good everything still is for a company like Microsoft, for a company like Apple. Amazon coming out saying we're going to hire 100,000 workers. We're going to give them pay bumps. We're seeing incredible volume in packages. I still think that this market since 2015, really, that was the year we were flat, but the FANG names were first coined. The FANG names were responsible for more than all of the market's earnings gain that year. They've been the leaders, and they're going to have to, I think, see us through this on the other end. And so obviously there's going to be some shocking numbers coming. I mean, what Hilton's on the tape earlier, 15% room capacity at max for the entire quarter. I mean, that's going to be a shocking number. But ultimately, this market, I think, has to come down to what happens with the big cap tech companies that have led us to this point. And so, yeah, there's going to be a lot of numbers out there, and we're going to call out a lot of them. But for me, I think it comes down to the names that brought us here. They're going to have to see us to the other side.
All right, Miles Edlund, thanks so much for walking us through all of that, and we will see you tomorrow.
Coming up here on the final round, we'll have more on today's little bounce back in stocks with strategist Laureen Gilbert, why she likes two sectors in particular we will discuss. But first, take a look at where the big industrial names finished the day on this Tuesday. Welcome back to the final round. Well, economists at Goldman Sachs and Morgan Stanley said today that a recession is now more than likely, adding fuel to global economic concerns. Joining us now is Laureen Gilbert, Wealthwise Financial President. Laureen, thanks for joining us. What's your take on recession? Because, boy, a year ago we had a lot of our guests predicting a recession coming. Then stocks started to do very well, and you said, oh, recession off the table. Now, of course, it sure looks like recession is here, and coronavirus triggered it.
We began the year cautiously optimistic, and if you had asked me at the beginning of the year, likelihood of a recession this year, I would have said below 20%. And of course, all of that has changed by an external shock, and actually two shocks. One, the coronavirus, and then the oil price wars as well. That's kind of the 1-2 punch where we are right now. And right now, the way I would answer that question is, nearing 100%. I think it's very likely that we're heading into a recession, and I think that the markets have actually priced in a recession already. We've seen over the last 3 weeks declines into a bear market.
Hey, Brian Chung here. So if we are already in a recession, what's the play here? Do you go run to gold? I mean, that dynamic hasn't actually been in play either. What do you do if you're holding money right now?
Well, let me clarify. We're not in a recession, but the markets have priced that we are going to go into a recession. And so the classic definition of a recession is 2 quarters of negative GDP. And so as you're looking at revisions to GDP estimates, we're looking at either flat or negative. The big question mark is the 3rd quarter. And then most people are saying the 4th quarter would be up in a positive territory again. And what I think we're dependent upon fiscal stimulus. So we've got great news today, and I think the markets were responding to that regarding potential fiscal stimulus that comes into play, dollars in consumers' pockets, a delay on tax deadline filings and the money that's due for taxes, and as well as potentially payroll tax cuts. All of those things are great for consumers to be able to continue to spend money. What people need to watch out for are potential layoffs that could make this a worse situation. And that, of course, is what the government is trying to avoid by providing stimulus. If you're an investor, what I would say is these can be great times to put cash to work slowly and cautiously over time. So if you've got cash on the sideline and you're looking to invest, I would say do that over a period of time. I don't think that we've hit the bottom, and I don't think that we've seen the end of this. So we'll see some probably choppy waters for a while. So definitely looking for opportunities.
Lorene, I wanted to dig down into something you just said. We briefly mentioned the layoffs. There's lots of talk just in terms of what the impact the coronavirus will have on the labor market. When we talk about potential job losses, do you think the labor market will get significantly weaker because of this?
I do think that pockets of the labor market are going to get weaker. So when we look at your hourly wage earners and you look at the travel industry, entertainment, those things that are being significantly impacted, the airline industry, that's why some targeted approach to some of those industries is going to be critical to help those workers. So the good news about many of the hourly workers and affecting our economy is it actually impacts our economy less than the rest of the workforce. So while we could see layoffs, it depends on where those layoffs come from as to how much our economy will be impacted.
All right, Laureen Gilbert of WealthWise Financial, thanks for joining us on Yahoo Finance today.
Thank you very much.
Well, coming back, more on today's rally, plus say it ain't so, Tom Brady. I know Dan Roberts might be a little bit sad about this. The star quarterback officially walking away from the Pats. Dan Roberts wiping the tears from his eyes as we speak. We're going to have more about this after the break. Let's take another look at where stocks finished the day. We have the Dow surging up over 1,000 points. It's the 7th trading day in a row that we have seen at least a 1,000-point move for the Dow, either to the up or to the downside. S&P also holding on to gains, closing up around 6%, as well as the NASDAQ. Now turning to another big story that we are closely following, not market related, but it's important. Tom Brady waving goodbye to the Patriots, writing that, quote, "Although my football journey will take place elsewhere, I appreciate everything that we have achieved and am grateful for our incredible team accomplishments." Brady wrote that on a post on Instagram. Well, big news here, Dan, and I know you are a huge Patriots fan. What do you think of it?
I'm still a Patriots fan, and I look forward to being underdogs. It'll be interesting to see who our quarterback is. I wish Brady all the best. No ill will against Brady. A little bit of ill will maybe for me against whoever it is at the organization that interfered here. The word is, it's unlikely that Bill Belichick and Brady could get to terms. There have been reports for years that those two don't really like each other. They just have a business relationship. So it's hard for me not to interpret this news as Bill gets his way. They had a lot of success together, but famously, Bill wanted to go with Jimmy G and wanted Brady out. Brady petitioned Kraft, and Brady was the reason the Pats got rid of Garoppolo and kept Brady. So some irony now, Brady leaving. I'm not that happy about it, but it'll be interesting to see him play somewhere else. Great career, 6 rings. More than $230 million in salary. Yeah. A lot of touchdowns, a lot of great plays, a lot of great memories.
Yeah, you had to help with a few cheats here and there. I'm a Jets fan.
Oh, Lordy.
I'm a Jets fan. It's like the Wicked Witch of the East died. Oh, my gosh.
It's interesting. The Bills have made some huge moves
they did,
in the last 2 days.
Diggs,
I think the Bills are gonna run the division, really. We'll see. I'm on board with Jarrett Stidham, as we'll call him now, if he's our starter.
Okay.
See, his name's Jarrett Stidham, Shauna, but we're going to call him Studham.
I like it. All right. Well, just as long as you're not abandoning the Patriots, that's all that matters.
No. And I look forward to the bandwagon fans over the years dropping off and following the team less and pointing out that they only were riding with us for the good times.
Sam Darnold, top of the AFC East next year. You heard it first. You heard it here first.
That's a bold call. That is a bold call.
Look, maybe we have a terrible season coming up, and then we get to draft Trevor Lawrence. Okay. I'd be perfectly fine with that. All right, we're going to go to another break. And coming up on the final round, we'll have more on markets today. Plus, LinkedIn's chief economist will talk about the coronavirus and the labor market. How bad could it get for freelancers? Plus, what about all those workers who will be working from home? So many ripple effects of coronavirus. We will discuss after the break. Welcome back to the final round at Yahoo Finance. I'm Dan Roberts in New York on this Tuesday. With me for the final half hour, it's the host of The Ticker, Seana Smith, and we have Yahoo Finance's Brian Chung. A historic moment here in the studio the day after that terrible day for stocks. Today, a little better for stocks. Let's see where they finished. The Dow finished the day up more than 1,000 points. So a little bit of excitement there. I don't want to get too excited, but it's a bounce back. It finished the day up 5%. The S&P finished the day up 6%, and the Nasdaq finished the day up more than 6%. Chung, pretty good day for stocks.
Pretty good, yeah. I think the question still going forward is going to be how many more of these types of days are we going to get, right? You're going to need a lot of these days to undo all the other bad days that we've had. But look, I think at the end of the day, you still have policymakers on the monetary policy and on the fiscal policy side trying to address things. I actually just have a statement from the Kansas City Fed president who just reiterated that she stands ready to allow banks to access the discount window. These are emergency short-term loans for the banks, and said they will address any regulatory or supervisory concerns that may surface. Our ability, quote, to respond to the needs of our region and the nation is an important feature of the Federal Reserve's design. So, I mean, this is as close as you'll get to the Federal Reserve telling the public that we're going to do what we can to make sure that we get over this coronavirus hump, if we hopefully end up seeing it as that, right? A little bit of a dent in GDP growth, but then coming back at some point in time. But the uncertainty, I think, is still gripping markets, and I think that's why we saw such a steep sell-off yesterday.
Doing what is necessary.
Well, one thing we've been talking about, and Laureen was saying it the last block, was just in terms of the impact that this is having on employees and more specifically the labor market. So we know that coronavirus, the pandemic, is being felt by employees, by workers worldwide. Millions of people are working from home. Here to discuss this and what exactly this means for the future, we have Guy Berger, LinkedIn chief economist. And Guy, when we take a look at so many people around the world are now being forced to work from home, we talk about the impact that this could have on productivity, what it means for the labor market overall. What do you think?
Well, the first thing is that a lot of people can't actually work from home. Their jobs need them to be in a specific site, interacting with people face to face. And so those people are actually going to without some sort of government policy, are really going to struggle over the coming weeks, maybe months, as we impose these necessary public health measures. And I think we're really going to need policy to step in and cover for those people and businesses. Even for those people that are working from home, I think in a lot of cases, they're still going to face diminished business, reduced productivity. And so I think that hit that Brian was talking about to short-term economic activity into the labor market is going to be real. And the only question is how deep and how protracted it's going to be and how quick the bounce back is going to be.
Guy, Dan Roberts here. Another note about the workers working from home is businesses might be worried about productivity. I mean, maybe that seems low on the priority list right now, but a lot of people, as you say, can't work from home. And then there are people that, well, they can go and work from home, but they're not going to have the same output because they're dealing with other things. I mean, think of all the states where schools are closed. So you've got people working from home and their kids are there and they're not used to that. I just noticed today a column went up at the New Republic arguing to not expect the same productivity with working from home. It said against productivity when working from home. What are you guys hearing about that? Or at LinkedIn, are you kind of tracking the sentiment right now from the people who already are working from home?
Well, I'll tell you that we have seen engagement on platform change. We are looking for people on the platform are looking for hacks on how to work more efficiently from home. So we are seeing that. I think in the end, we probably need to spend less time worrying about short-term hits to productivity and just making sure that people have the bridge, whether they're working from home or not, to be healthy. Or get treated if they're not healthy, and then once this cloud lifts and the economy is ready to snap back, that they're able to re-engage with the workforce, that businesses are still there and haven't run into solvency problems, because I think that's when the economy is really going to count. For now, we really just need to make sure there's a bridge to get to that point.
Hey guys, it's Brian Chung here. Good to see you again. So my question is kind of just about the restaurant workers or whatever who might be temporarily unemployed, but the concern is that once we get to the other side of this, that business may no longer be in business to then re-employ them again. So I'm wondering, structurally, how are you thinking about the outflow of workers, maybe temporarily, but that could end up transitioning into being sidelined on the unemployment side of things when we get out of this?
I think it's a great question. We're going to need policies that provide relief to both individuals and to businesses to make sure that we cap the number of insolvencies that happen during this period. The other thing to throw out there is interesting to think about, this kind of economy we're in, decreases demand for certain kinds of labor, like, people serving people in restaurants or, being bartenders, but also increases demand for lots of other work. Think about the delivery that's going to need to happen of food and other services while this is going on, while a lot of people can't leave their houses. So I think really the question is how quickly, can we reallocate labor in one direction and back? It's not just about layoffs. I mean, I don't want to sugarcoat this, but there are going to be opportunities here that don't exist in a normal economy that hopefully we can let people take advantage of.
Now, that's an interesting point that you bring up about maybe the structural ways that the labor market can actually change as a result of this huge macroeconomic shock. But I'm wondering, without kind of putting it in the economist terms of the Z variable, right? But how about productivity? Do you think that we can get out of this this event in a way that actually might increase productivity because you have those types of workers that might be forced to go into these new age, maybe more sustainable in the long term types of businesses?
Well, I think that we should start thinking about it in terms of how just the our society and economy adjusting to a shock. And some services need to happen. We may be, for example, undersupplied people providing healthcare services. So we need to hire more to be able to do stuff that doesn't require a ton of training, but just simply do things like, administering basic healthcare. I think long run it's harder to answer because in the end, these are mitigating measures adjusting to a challenging situation. It's not like we can't close the gap entirely. It is an interesting question whether some of these changes that we see during this period do persist longer, either because people find that, there's certain things that they did during this time that actually worked really well. And I think we don't know what those are yet.
All right, Guy Berger, LinkedIn principal economist. Thanks so much for joining us today.
Thank you, guys.
Coming up here on the final round, the coronavirus really hitting the sports world. And just moments ago, news that 4 Brooklyn Nets players have tested positive. Right now, so many sports have no fan attendance or no games for broadcast. What all that means for this multi-billion-dollar industry and how fast it can come back. But first, take a look at where some of those big media names, some of the names that will be hit by the lack of sports, finished out the day. Welcome back to the final round. Coronavirus has really brought the entire sports world to a grinding halt. The NBA was the first big domino, suspending its season last week. Then the NHL, Major League Soccer, and Major League Baseball all followed in various forms. The Masters got postponed, and NCAA March Madness got outright canceled. Even the NFL has now canceled some of its live events around the NFL draft in Las Vegas. Andrew Klein is a former NFL player and the founder of Park Lane, which advises on sports franchise deals, and he joins us now. Andrew, thanks for coming on, and let's just start with your reaction to all this, how the sports world is reacting, because there ain't sports to watch right now at all.
Yeah, well, good to be here, and thank you for having me on. It's a really interesting time in sports. We're on the phone 20 hours a day with clients, and some of these teams have some very well capitalized owners, but some of them are run on very thin margins and could be in some trouble. Not all of them, but some of them could be in trouble because of losing seasons and losing games. So that's the business side of it. Me speaking as a sports fan, this whole thing became very, very real for me when the NBA shut down and then the NHL. And I think that when everything actually starts, when we see those players go on the court again, I mean, I can almost feel it right now, how good that will feel to actually have people take the court again, because that'll mean to us, I think, sports are, that life is now back to normal.
Yeah, we're waiting to see how long it will take for sports to get back to normal. The NFL, that season starts kind of the farthest away. So at first there was a thinking that, well, the NFL doesn't have to worry. But now, even based on new estimates, you wonder if the NFL season will be affected and delayed. What do you think the current status is for the NFL? What if the virus, lasts into the fall?
That'd be a big deal, because I think you've seen, Major League Baseball seasons, even some NBA seasons where they've had a shortened season because of a strike or lockout. And because there's so many games, they're able to recover from it. But when you have a finite amount of games and you need to squeeze out a whole year's worth of revenue with very few home games, it's much more difficult to recover from that.
Hey, Andrew, I want to ask you a few things here. One, what does this mean just in terms of the programming? Obviously, a lot of these sports networks, you don't have to look any further than ESPN. Before they had this Tom Brady story, they were struggling with things to talk about. So what does this mean for the TV networks, and then also for so many of these employees from these arenas that now are out of a job? I know right now a lot of these athletes are saying that they will pay their salaries for the next couple of weeks or next couple of months, but what happens if this prolongs these seasons until next year?
It is going to be a huge impact. We've already spoken to some clients that already have to lay off employees, and it's, from that perspective, it's not looking good. I think this is where you really do look to government to go, hey, you guys have to do your job, and we need some help. We need some relief, because it's the impact is so widespread. And to your point, mainly to those workers that show up every day and kind of live paycheck to paycheck. The fact that there's not all that content on, I mean, geez, these are massive infrastructures that are set up to broadcast and monetize that content. And there's going to be a huge financial impact as a result of that content not being on.
Hey, Brian Chung here. So, what are people going to be consuming in that vacuum then? I've seen online viral videos of people watching marbles falling down a hill to try to see which one's going to win. ESPN is still going, right? What are they talking about? What do people watch in the interim then?
I don't know. There's a league out there called Major League Rugby. It's a league that's in their third year. They're actually doing virtual games, which is pretty interesting to see how that's going to play out. But the jury's out. I think everyone is, I can only speak for myself. At our home, we're reading more, and we all play instruments, and we're playing instruments, and we're taking up that time with other things. But it's a real big hit not being able to throw on the TV and, kind of relaxing to watch your favorite game. So, I wish I had the answer to what content people are going to watch, but the jury's still out on that.
Andrew, let's wrap this way. We've been talking kind of zoomed out about the whole sports world. Let's zoom in and talk about the news today. Really the only news there is in sports moves. Tom Brady not returning to the Patriots. We don't know yet where he'll be, but having played in the NFL and obviously now so involved with various business people in the league, what's your reaction to the Brady news, Andrew?
Well, little funny fact, I was drafted the same year as Tom Brady, and I'm just absolutely I cannot believe that the guy's still playing and that he's still, even after such an unbelievable, career, he still wants to go on. But, if you look at Joe Montana, he did the same thing. He had this incredible, career in San Francisco and just wasn't quite done. So he headed over to Kansas City and had a couple years there. And while I would love to see Brady finish off in New England, the reality is that, the business terms aren't there to do so, and he's not done playing football yet. And it's in every, cell in his body to be a quarterback and lead a team. And so if the Patriots won't have him, there's some other team that's going to be incredibly lucky to get the guy. I just think the jury's out on, what he does outside of that system. But he could go to another team and lose every game for an entire season and still go down as one of the greatest football players ever to have played the game.
Oh, you don't think the greatest, Andrew?
I think he's one of the greatest.
Andrew, Brady was famously drafted in the 6th round, pick 199. Were you drafted before Brady?
I was drafted slightly after Brady.
Got it. All right, good talk about the business of sports. We'll have you back on in the future. Andrew Klein, Park Lane, Managing Director. Thanks, Andrew.
Thanks.
All right, well, coming up here on the final round, what we are watching tomorrow and what will be a huge day for the markets. Again, the Dow closing up over 1,000 points, the 7th day in a row that we've seen at least an 1,000-point swing to the upside or downside in the Dow. Keep it right here. We'll be right back.
Welcome back to the final round. Let's see some stocks that were on our radar today. Amazon, after the e-commerce giant announced plans to hire an additional 100,000 warehouse and delivery employees as online orders are surging due to coronavirus hiring. That is not the news you're seeing from many other companies right now, many doing the opposite. Regeneron, after the biotech company said it hopes to begin human clinical trials for a COVID-19 drug early this summer. That is encouraging. We are waiting for COVID-19 drugs and treatment solutions. And also Boeing, after the jet maker revealed Monday that it is in talks with the Trump administration for potential aid as the coronavirus outbreak depresses travel demand. Boeing, a lot to talk about with Boeing, you guys, because, boy, the entire airline industry is obviously getting ripped, and some people think that there might even come a time when we need to see bailouts for the airlines.
Yeah, well,
of course, Boeing, the supplier to so many of them.
Yeah, and the line that just crossed the news wires is coming from Reuters saying that Boeing is looking for tens of billions of dollars in U.S. government loan guarantees. And this is a huge issue for one of the largest contributors to U.S. GDP, not even one of the largest companies in the United States, but one of the largest contributors to GDP. That plus it's one of really only two players in the world that produce that produce commercial aircraft. So that's a huge deal. And this just kind of underscores the serious financial nature of what we're facing from the coronavirus, right? Which is the almost default of companies. And I'm not saying Boeing's there yet, but the concern that they have with just getting funding after they already drew down their $13 billion credit line is showing massive concern as a result of this.
Well, yeah, and it's just been a 1-2 punch here for Boeing. I mean, we've been talking about the fact that obviously they've still been struggling to get their 737 MAX 8 back into the air. There's no specific timeline on that, so that's something that had been weighing down Boeing stock. And then we got the latest with the coronavirus. But guys, what's interesting is when you take a look at that stock price. I mean, Boeing today, at the low today, fell all the way to $101 a share. And this is a stock that over the last 52 weeks, this 52-week high is just around over $300, $398, sorry, and 66 cents. So a huge move to the downside. And if it moves below $100 a share, I mean, I think that's a stock price that many on the street, if not everyone who closely watches this stock, was not a value that we thought that we were going to get to in such a short amount of time.
Now, on the other hand, there were those who thought it would go a lot lower well before there was coronavirus. I mean, as we mentioned with FedEx, you know, Boeing, like FedEx, a company that was having some issues way before coronavirus came along, but that stock was surprisingly resilient amid the 737 MAX crisis until now.
Absolutely. And I think what's helping it keep afloat right now specifically is that the administration, no secret, is considering bailout packages for certain types of companies. You think obviously of Boeing, you think obviously of the cruise line industries, and there was actually an explicit statement from President Trump earlier today saying we will be helping Boeing. We don't know exactly what that's going to look like, but this is no surprise when you see on the wires saying that Boeing is asking for tens of billions of dollars. That conversation is already beginning. But as I mentioned, not to steer everything back to the Federal Reserve like I usually do, but this is the reason why the coronavirus is now a serious economic risk. When you have large companies that contribute so much to U.S. economic growth in the crosshairs here that are facing these financial difficulties. And we have to keep in mind, it's not just Boeing, it's those small businesses, it's those mom and pop shops on the street now that will have to be closed for the next few weeks and don't have enough cash on hand to survive all of that. So how do you provide relief to those companies when you still have to be closed with no revenue coming in? Right. It's just, you're basically hobbling along with credit. And that's why the Federal Reserve has tried to step in to provide that credit through all the different types of operations that they've announced.
All right, guys, well, let's take one more look at the markets here before we let you go. We have the Dow closing up over 1,000 points, S&P up 143, up just 6% flat, actually. NASDAQ above a 6% here, the move to the upside. Dan, in terms of what you're watching tomorrow, it will be interesting to see if we could get 2 consecutive days of significant gains.
Stocks, that's what I'll be watching. Let's see if we can be up again. Look, 1,000 points on the Dow, normally we'd be pretty pumped, but man, we had fallen so far. So tomorrow, what will the sentiment be? There's been so much volatility. Are people going to be buying, or are people just still spooked? And I think a lot of it will depend on the coronavirus headlines. Tomorrow, what are the numbers going to be? What's the latest going to be? What's President Trump going to tweet tomorrow? There's just so many unknowns. So let's see how investors and just regular people feel tomorrow amid all of the doom and gloom.
And you said stocks, I'm going to say bonds. So the story really has been bond markets really acting quite weird throughout most of the sell-off until the Federal Reserve really acted on Sunday. There was a massive amount of illiquidity in treasury markets where you had dynamics that had never been seen in play normally. If you see sell-offs in equity markets, what you would expect is a contingent fall in equity in bond yields as well. And we did not see that for most of last week. We have seen that dynamic come back into play as the 10-year did indeed fall, as the equity market sold off yesterday, and it's coming back up as the stock market came back up today, right? So you have the 10-year up about 36 basis points, if I'm reading this correctly. I have to squint a little bit, but the point of this is that the 10-year is really back in play here.
All right, guys, well, no time left for me, but I'm going to be watching to see where Tom Brady goes. That will be the big news of the day. All right, I'm Shauna Smith in New York with Dan Roberts and Brian Chung. Thanks so much for watching the show. We'll be back tomorrow morning. Have a great night.